mentioned in its prospectus that it's expecting to begin trading today on the NASDAQ listings over the past couple of weeks.
Big.
Absolutely. So, and posted a 45% decline on the top line for its fiscal first quarter. Taking a look at those sales in China specifically, though, massive thing on that geography in its recovery.
But the recovery looks to be on their way.
Yeah, hi, Brian. I think everyone knows lockdowns pummeled retail stores, but it does seem like the worst is over. We saw figures out today showing total sales about 6% once non-essential retail. Oddly enough, Britain already has.
What we can expect is Winnie, please unmute right.
That is our base forecast to make the case that negative, very low yield environment, curve steepening, particularly out on the long end. But we would like to see that trend continue.
Winnie, how does that the Fed chair won't just sound
on the Fed coming in with unprecedented for signs of
he has not kicked off quite yet. Better than expected jobs report on Friday.
Initial Main Street lending expansion does not do necessarily those segments.
And that bubble can burst at any
shorter in duration, like we saw in the 2008 crisis, but it's still going to be pretty deep, especially given that, I look at triple C spreads and they are now showing that they have had the least widening on the year in the high yield market compared to double Bs and single Bs. I think as a high yield investor, you would probably want to be putting your capital to work a bit more up in quality, given that the uncertainty associated with the outlook for the economy is still pretty severe. And the Fed has not come in to say that they are going to buy triple C bonds directly. Now, the rising tide lifts all ships of central bank intervention and unprecedented policy easing is something that you have to keep in mind. But I think that as we see retail money flowing into specific parts of the financial markets, you have to think very critically about, who those investors are, whether they're just chasing returns and chasing yields, or whether they're thinking critically about actual credit analysis.
Winnie Caesar, Wells Fargo's head of credit strategy. Great to see you this morning and great insights. Thank you.
Thank you.
And stay tuned to Yahoo Finance. Coming up on the ticker at 2 p.m. Eastern. Tomorrow, we're going to get the Fed's new policy statement, followed by a press conference with Fed Chair Jerome Powell at 2:30 Eastern. That is happening tomorrow, again, on the ticker on Yahoo Finance. Coming up next, we're going to hear from Dr. Fauci on the latest about the coronavirus. Stay with us. Despite progress being made, we are still seeing an uptick in coronavirus cases. There are now 7.13 million confirmed cases of COVID-19 globally. That has led to nearly 407,000 deaths. Here in the U.S., we now have 1.96 million cases of the virus confirmed, causing 111,000 deaths. Anjali Kemlani is joining us this morning. And Anjali, I know the World Health Organization sort of backtracking what it had first said about folks who were asymptomatic. They're now saying that those people are not driving the spread of the virus. And I know just a short while ago, you sat down with the nation's top infectious disease expert, Dr. Anthony Fauci, and asked him about that. There seems to be some conflicting information out there. What did he tell you?
And that's right, Alexis. So I guess it would be described more as just new information and a broader understanding of differentiating between asymptomatic and pre-symptomatic and symptomatic people. So there's just a lot of nuance that needs to be extracted. And that's what Dr. Anthony Fauci did manage to explain to us. So listen to what he had to say.
I think a lot of confusion has emanated from this issue of an asymptomatic person and asymptomatic transmission. When you look at the number of people, if you look at all the cases of coronavirus infection, about 25 to even up to 45% of the people are asymptomatic. The real question is, what is the percentage of infections that go from an asymptomatic person to an uninfected person? And that's something that we know it occurs, but we're really not sure exactly what the extent of it is, because it's very difficult to measure that. You can determine how many asymptomatic people are merely by doing screenings and finding out. But when you're doing epidemiology, so what the WHO said yesterday, that although there are asymptomatic infections and although asymptomatic people can transmit, they are not the drivers of the outbreak. The drivers of the outbreak are people who are symptomatic and transmit to others. That doesn't mean that asymptomatic transmission doesn't play a role, but it isn't the major driver of the outbreak. And yet there's this confusion when people talk about who's asymptomatic infection and who's driving it. But that's really what the WHO meant.
Okay. And talking about confusion, one of the things that I'm sorry I have to ask you about is hydroxychloroquine. The retraction of that study in the Lancet last week, which caused the World Health Organization to pause their trials, was based on questionable information. So I'm curious, has that changed your opinion of it at all? I know you've called for more trials. And is there a difference between, the treatment version, treatment option, or the way the president is using it as a prophylactic?
Right. The answer will come with the clinical trials. I think there's a lot of back and forth about what is a good trial, like the one that was retracted or not. I think the important thing for us all to do is that I've said for so long and so many times is that the definitive proof whether something is safe and effective, whether it works or not, is a randomized controlled trial. Those trials are being conducted, and we will know the answer, and we will go with the science rather than going back and forth in things that are sort of suggestive but not necessarily definitive. As scientists, we want to go with the definitive trial.
Just talking about making sure that we stick to the data is what Dr. Fauci was focused on, Alexis.
Did he say anything at all about a vaccine, Anjali?
Yeah, so he pretty much stuck to being cautiously optimistic about getting one this year. But I did ask him to explain what that means for the general public. And he did explain that it is going to be very restricted because of the pent-up demand on who gets it first. So that's something that he did talk about, as well as whether or not, we have to worry about vaccine nationalism. And he doesn't see that as an issue.
All right. Great interview. Thanks so much. And you can check the entire interview with Dr. Fauci on our website and also on the Yahoo Finance app. Stay with us. The opening bell right around the corner on the First Trade. Stock futures under a little pressure here a day after the S&P 500 erased its year-to-date losses and the NASDAQ closed at a record high for the first time in about 4 months. So, Jared, I guess no big surprise that we're seeing a bit of a pullback here today.
That's right. We've come a long way. As you said, at the open, the Dow has advanced 48% from the March lows. And we're also seeing the NASDAQ turn green for the year, reach all-time highs. And then the Dow is also advancing nicely as well. If we look at the world, we can see kind of a mixed session in Asia, but a lot of red in Europe, as well as the United States. Just taking a look at the Dow futures, we can see they're off about 280 points right now, off of their lows of the session, still down about 5% year to date. But just looking at some of the trends that we've been seeing over the last few weeks where we had value and cyclicals leading, that's reversing today. And so the big cap stocks are actually outperforming, although they're in the red right now. And just taking a look at our sector performance, we can see that energy, which was a high flyer yesterday, up 4.5%. It's down 3% in the pre-market. Real estate's down 3.5%. Industrials are down 2%. Also seeing that in the Dow, which we have JP Morgan is down 3% today after advancing 2% yesterday. And then also taking a look at Boeing, which was up an astounding 12% yesterday, off about 4% today. We're also seeing this reflected in the yield curve. We have the 2s, 10s coming back a little bit off of its highs, and the 10-year Treasury note is off about 6 basis points.
All right. Thanks a lot, Jared. And we'll be back with the opening bell live from the New York Stock Exchange right after this. The New York Stock Exchange will observe an 8-minute and 46-second moment of silence beginning at noon today to coincide with the beginning of the annual trade. A new trading day has begun on Wall Street, and here are your headlines making the first trade front page. The funeral for George Floyd is scheduled for later this morning. Services will take place at the Fountain of Praise Church in Houston in about 2.5 hours. Activist Al Sharpton will be delivering the eulogy to the 500-person service before Floyd is buried next to his mother. Meantime, 5 states are holding primaries today, including Georgia, Nevada, and North Dakota. They're going to be relying heavily on vote by mail due to the pandemic. This can be seen as a crucial test run going into the presidential election this fall. And new details today on just how COVID-19 is spreading. Despite prior reports, the World Health Organization says that asymptomatic people are not spreading the virus as much as it had previously thought. The group reiterated that asymptomatic spread can still occur, although it is, quote, still very rare. All right, let's take a look now at the market action. We saw that futures were lower heading into this session, and the Dow is now off more than 300 points to start the day. Let's say good morning to David Nelson. He is chief strategist at Bell Point. And David, always good to see you. We're also joined by Jared Blickery and Brian Sazi. So David, just what do you make of this incredible ride, I guess I'm going to call it, the market's been on? I mean, yes, we're lower today, but this is after having clawed its way back from those March lows despite all of the challenges that the economy and the world is facing right now. Why are we able to rally?
It's pretty historic, and we can certainly debate, whether or not the rally has come too far and whether or not valuations have exceeded expectations at this point. But what isn't up for debate is the fact that we're here and we're above the 200-day moving average. We're actually starting to live there, and the slope of some of these averages is actually pointing north. The last couple of weeks, maybe the most astounding move that I've seen is this, rush from one side of the lifeboat to the other side of the lifeboat, dumping your COVID stocks, dumping those large cap secular growers to pile into financials, industrials, and some of the more cyclical names. Today, it's giving it back some at this point, but stocks are saying right now that this comeback, whatever it is real, and that we've likely seen the bottom.
David, I'll put this question to you. Do you think what we're seeing in the markets is the Trump re-election rally? If I count 6 months forward, which you all know the market likes to count six months forward, that brings us to December. And to your point, the economy is in fact coming back to some extent. Is the thesis here, economy comes back and somehow the president gets reelected and the tax rates stay lower?
The tax rate is a big part of it, but I don't think it's the bigger part of the rally here. This is more about the fact that we've kind of gotten control over what we were looking at. Look, we know now, Brian, that April was the economic bottom. Clearly, it had to be the bottom because we were at a virtual standstill. We came to a halt. This wasn't a recession that came about because of excesses in the economy or some mistake by government. A meteor hit the earth, and now we're coming back to life. And one by one, as communities go back to work, economic activity starts to pick up and we start to get this rally. I'm sure Trump would like to see a better economy. It paints a better picture for him and it increases his election chances. But this is more about people going back to work and medicine getting a control of this virus.
Hey, David, we saw some new data from RobinTrack, which takes a look at Robinhood, the app, and they're finding that retail investors are running into this market, that it's really the retail investor, not the institutional investor, that has been driving the rally. Yet on the other side of the coin, we see that investors are remaining pretty cautious. They're actually keeping a significant chunk of their assets in cash. I just found something from Deutsche Bank saying money market assets remain at financial crisis highs at $5 trillion. So what do you make of those two bits of data that seems to paint a controversial look at how at sentiment from the retail investor right now?
It's a nice way of putting it. It's very controversial. It's very confusing. I think there's been a lot that's been confusing here. Some of the brightest minds on the planet were probably caught off guard by this. You saw, some brilliant investors like a Warren Buffett sell his airline stocks at the absolute bottom. Some other large hedge fund managers underinvested. Professionals like myself underinvested at the bottom, and slowly but surely the market has dragged us back in. The retail investor has been, piling money into the market to a certain degree, but it's the institutional money that drives things in the long run. Make no mistake, a lot of institutions put a lot of money and a lot of capital back to work in the last couple of weeks.
David, I got a text from a friend last night who's not in financial services asking me for 5 stock picks. I didn't do it because that's not what I do. I'm not that guy. But I took a step back. I'm thinking, wow, you could see a lot of retail investors start to come back in this market and not do the right research, not do the right thing. Do you think this is starting to become a sucker's rally?
Maybe in some things, for sure. Look, we're going to have a retrenchment at some point. But even if we had a 10% correction from here, it's not going to take us back to the March 23rd lows. I think that's been taken away at this point. We're not going to go below that at this point. I think for professional investors like myself, we have to look to 2021 because we have no earnings to really look at in 2020. And this rush from one side of the boat to the other is understandable. We hid out in those large cap secular growth names for good reason. They had the strong balance sheets. In some cases, companies like Netflix and Amazon and others actually benefited from this shutdown. But as the country goes back to work, you're going to have to start to go down the valuation curve and start to look at some of those things like industrials, even financials. Financials today, even with the run that they've had, there's still a significant discount to the market as a whole.
I'm going to get over to Jared Blickery now for a look at the markets. Jared, I see we're lower across the board. What's driving us down today? Because yesterday we saw some of those stocks that were beaten down because of the pandemic. The travel, airline, hotel, cruise liners were actually rallying. So what's the story today?
Yeah, we're seeing those very same travel-related stocks down considerably, some of them. But given the magnitude of the rise, and especially since we have an FOMC announcement tomorrow, not a big surprise. So let's sort by performance here, and we can see the standouts. Hertz is down 28%. I believe it was paused for volatility already, and United is down. American's down as well, about 7.5%. But just looking at the broader market, here's a NASDAQ 100. We can see those big mega cap names like Apple, Alphabet, Facebook, Amazon. Those are all outperforming today, a stark reversal from what's happened over the last 3 weeks. So a little bit of a defensive posture here. Those high-flying industrial names and also financial names like JP Morgan and Boeing, American Express that have done well over, say, the past 18 days now since the leg of this last rally began, those are underwater right now. And this is taking a look at the Dow over the last 18 days. We can see Boeing is still up 84%, American Express up 40%, Travelers similarly. So it goes on from there. Just taking a look at the sector performance today, we'll see healthcare is in the green, tech is outperforming but slightly underwater here. Then communication services. To the downside, we have energy is the worst performer. Crude oil is off about 2 or 3%. No particular news that I'm seeing since yesterday, but we did see crude punch above $40 for the first time in months. And so I think we're just seeing a little bit of a pause here before we head into tomorrow's meeting.
Yeah, probably a healthy thing too. All right, thanks, Jared. Hey, David, what do you see as the biggest threat to this market now? Is it a second wave of the virus? Is it, tensions between the U.S. and China starting to bubble there in the background? What do you see as the thing that could trip us up?
It's really all of the above. And the number one is at the top of my list is the election itself. Look, I don't care which side of the political aisle you live on. I think we can all agree that this election is going to be the most divisive in a generation. As we approach November, you're going to see huge swings in sector performance. You're going to see rushes in and out of healthcare, depending on the polls. You're going to see rushes in and out of energy. You're going to see even big cap tech will be controversial. China, big issue for us, because now it's not a question of if, it's now just a question of how fast. We're in the early stages of decoupling our economies. And frankly, both candidates right now are trying to paint themselves as being more tough on China. And I think that resonates with the American public as a whole. And finally, is the virus. You just brought it up. We could have a resurgence. I was just looking at some data this morning. 12 states right now are reporting an increase in the infection rate. That'll give the market some pause here, and we'll rush back and forth from one side of the lifeboat to the other. And I think in the end, investors are going to find somewhere sitting in the middle is going to be the best place to be.
All right, David Nelson of Bell Point Asset Management. Always good to see you. Love the guitar in the back. Hope you're going to get to play it at some point.
Okay, thank you so much.
Thanks a lot. And stay with us. Coming up next, how are we taking our vacations this year during the pandemic, if at all? RVs are hot right now. We're going to talk about it when we get back. RVs?
You know, it really started about 4 to 5 weeks ago as more states started to open, and we started to see a real trend for our smaller units, our smaller travel trailers that price point around 15,000 less to 30,000. And then every week it got a little bit stronger with more of the openings and people showing up to our dealers' lots. And the trend got a little higher every week to where this Mercedes-Benz chassis Delano Class C from Thor Motor Coach is really, mid 150. So it's one of our mid-price lines. We have motorhomes that go up to $800,000 from our Integra line. Airstream trailers, they're anywhere from $70,000 to $100,000. But Airstream in May had their best month ever in the history since we've owned the company since 1980. So it's really all over the board.
Bob, that looks like a serious machine behind you. And how's the Wi-Fi in that? Because you made it a point to note on your earnings call that it might be used for working from home this summer. A lot of people might go into the motorhome industry because they can travel around, get their work done, since they're not taking vacations via airplane.
Yeah, most of the units we have different suppliers that supply the antennas, but the antennas now have 4G Wi-Fi in them. And so people can work virtually anywhere, whether it's Zoom calls, the world has changed, but there's a great workspace in this at a dinette. And many of even smaller than this, they have just a small table that we'll put in just for the laptop.
Bob, are you seeing a lot of new customers coming into this space, people who would never have thought of owning an RV, coming to you now and saying, we're interested in this?
Yes, I've got stories from all over the nation, but the typical, you'd have a couple they'd have a home up north, a home maybe in Florida, and they didn't want to fly home. So they were coming into our dealerships and buying a unit just like this. And one of the other benefits to having an RV is you can travel with your pet. And so many people didn't like to fly with their pet. And now, you can literally go from Florida all the way to Minnesota. You have your refrigerator full of your food. You have your own bathroom, your own sink, shower. You can sleep in it. All you really have to stop for is gas. And so we're seeing this trend, and it's more and more new buyers than when they come in without a trade-in. And they're also a younger demographic as well. So it's been some great things that we've seen since this has all started.
Bob, how would you grade? What grade would you put on demand over the past 4 weeks?
The last 4 weeks has been an A+. Just the retail demand has picked up tremendously over the last 4 weeks. So it's hitting a point where dealers, we started this year, many dealers were up double digits, January, February. And then when the pandemic hit in March, everybody shut down for 4 to 6 weeks, and it came back quickly. And so demand has built over the last 4 weeks to just a frenzy to where we're just trying to get dealers their inventory.
I don't know if your dealerships are open for in-person viewing or, riding of these things. People want to check out their RV before they buy it. It's a big purchase. Are you selling them online? Are people actually able to gain access to the physical RV?
Yeah, so they started off, many were online when they were, at the state shut-ins. But now as states have opened up, it's very controlled, depending on the state. But there are some where they'll set an appointment. They'll wait in their car until their appointment is up, and they'll social distance with the dealership. And it's just a very safe way to go in and, look at the RV one-on-one. And so right now they've really figured out how to do it in a controlled fashion.
Talk to me about resale value for these RVs, because I've heard, they always say, once you drive a car off the lot, it already depreciates. What happens with an RV? This is a big purchase. What's the secondary market look like, and how much of their value do they lose on the secondary market?
It is similar to a car. When you drive an RV off the lot, there is it's a depreciating asset. It's maybe even a little bit more than a car, but it depends on the market itself. It changes every year, every month, and we look at auction sites. We look at the used market, and right now, when this started, the used market started before even some of the entry-level new. So right now, trade-in values are actually higher because dealers need the used inventory. And so it really always depends on the market conditions. So right now, for those customers that have a used unit, their value is going to be higher when they go to trade it in.
Bob, real quickly before we let you go, you're a global company, pretty important acquisition from you within the past year. What are you seeing in some of the harder hit COVID-19 areas overseas in Europe? Has demand started to come back a little bit?
Yes, probably Italy was the toughest. We do have a factory in Italy, and that one had an extended shutdown, but it is up and running now, and very much in a controlled fashion. Germany is the strongest market of Europe. The German demand, even while we were shut down, customers were calling in trying to find out when they could get their caravan, because it's very much part of the lifestyle over there, and they really wanted to get out and travel. Now it's different because they'll have to stay within their country for a while, but people are promoting, discover more of your own country rather than going across borders. So UK is probably harder hit than most, and we're looking to start up production there. But 8 of our 9 factories are up and producing, and demand has been actually very good. So we're happy with both sides of the water.
All right, Bob Martin, CEO of Thor Industries. Thanks for being with us. Enjoy your drive in that Mercedes Delano.
Thank you very much.
All right, stay with us. More of the first trade right after this. Stocks taking a little breather here after yesterday's big rally. We've got the Dow down now more than 330 points. Looks like Joe Biden is hitting President Trump where it hurts. The Democratic presidential nominee says Trump, quote, squandered the longest economic expansion in history that he says the president inherited from the Obama administration. Yahoo Finance's Rick Newman joining us now with this one. So, Rick, yesterday, President Trump was busy tweeting about the economy, taking credit for what seems to be the start of a bounce back. What did Biden have to say exactly?
Oh, he issued a statement. This was not a big speech or anything like that. He just put out a statement basically saying, well, we now know officially the expansion that began during Barack Obama's first year in office officially ended in February. So, I mean, that's technically true. The National Bureau of Economic Research did say the expansion, which was almost 11 years long, longest on record going back to the 1800s, it ended. So that means we're now in a recession, or we were in a very, very short recession. So Biden is technically correct when he says when he says, look, the expansion ended under Trump. It's a matter of voter interpretation whether Trump actually squandered the economy he inherited. And I think this just becomes a Rorschach test. Whatever your pre-existing view is, if you think Obama deserves credit for the economy, you'll credit Biden. And if you think Trump deserves credit, you'll credit Trump. I'm not sure it's going to make a lot of difference on Election Day.
Rick, but wouldn't, just to play devil's advocate here, wouldn't the president win the economic debate? Before the pandemic hit, growth was looking pretty good. We had some of the lowest unemployment levels around. I can't necessarily say that was the case during the when Biden and President Obama were in the White House.
Yeah, you're right, Brian. And even now, when pollsters ask voters, who do you think would do a better job on the economy? Voters give Trump the edge by a few percentage points there, even though they like Biden better than Trump overall. So a big issue for the next 5 months as we head into Election Day is who's going to do a better job convincing voters that they can get this economy off the floor. Trump does have an advantage there because people do associate him with tax cuts and deregulation. And they do know that Biden does want to raise the corporate tax rate, for example. But, I think Trump's pretty vulnerable because, look, I mean, it is we still have something like 40 million people out of work. So that alone means that if you're asking yourself, am I better off under Trump? A lot of people are going to be saying no. So there's an opportunity there for Biden to convince people he could do a better job on the economy than Trump. But it's not going to be automatic. He's going to have to earn that.
And what about the polls, the latest polls, Rick? Are they showing that Biden still has a pretty wide lead over Trump?
Yes, Trump is actually slipping in the polls. I mean, he had a terrible week last week with, cracking down on the protesters outside of the White House in Washington, D.C., the photo op with the Bible at the church, all of that. One poll, CNN poll, actually showed him falling under 40% approval down to 38%. And in aggregates of polls, he has slipped all the way down to about 41%. So that is getting below the relatively stable range he's been at. So, everybody keeps pointing out there's still 5 months left until the election, and a lot can happen. And we do see some, it's possible there could be a turnaround in those polls. But things are not working in Trump's favor right now.
All right, Rick Newman, thanks very much. One thing that could be working, when Trump's favor is the stock market, right, Jared? Because, I mean, an incredible run-up since the lows we saw in March. I mean, we're lower today, but the S&P, I think, is it barely hanging on now to being in the green for the year? And the NASDAQ had its first record close in 4 months.
Yeah, it looks like the S&P 500 is now down 1% for the year, but I don't think we've seen the last of this rally, just taking a pause right now. But you mentioned something really interesting because Keith Bliss, who we had on the show yesterday, was talking about August 5th being a key date. If stocks are up over the 90 days leading into that, it has been historically a good predictor of whether the incumbent will retain the seat. So we'll have to keep an eye on that. But just kind of looking at the market today, let's take a 5-day look. And we can see here on the Dow, just dipping into Friday's territory. This would be Friday over here. And here's the low of the day, not really retreating that much. S&P 500, similar story. NASDAQ outperforming today for the first time, it seems, in weeks. And that's in large part because of the 10-year T-note yield, or at least concurrent with it. We're seeing it down 7 basis points today. And it has advanced quite a bit over the last few months. Also, the U.S. dollar index had been up earlier, but it's now retreating again. So it looks like it's going to be down for 8 of the last 9 days. And that's very supportive of the risk rally that we're seeing right now. Here's a year-to-date look at the U.S. dollar index. Now let's take a look at some heat maps, and we can see the NASDAQ, those big mega cap stocks in the green for the most part. We do have tech and communication services outperforming, so that would include those FANG stocks. Microsoft is down 0.9%. Notably, software really not doing that well, even though we do have tech advancing today. Also want to see if the chip stocks can lead here, something that we haven't really, it's been kind of touch and go for the chip stocks over the last few weeks. Here's a look at the Dow heat map, and we can see the industrial, financial, and energy names that have been the high flyers over the last few weeks, kind of in the red right now. Boeing's down 6%, JP Morgan down 2.5%, Chevron down about 2%. And just taking a quick look at our sector leaders, only healthcare is in the green right now, Alexis.
All right, Jared, thanks very much. And we want to show you some live pictures now of outside the Fountain of Praise Church in Houston, where 500 people are expected to pay their last respects today to George Floyd, beginning at noon. And at noon, the New York Stock Exchange is going to have 8 minutes and 46 seconds of silence in honor of Mr. Floyd. That's how long the officer had placed his knee on Floyd's neck when he said he couldn't breathe. Stay with us. We have much more of the first trade straight ahead.
All right, welcome back to the first trade. I am, of course, still joined by my co-anchor, Alexis Christoforous. Right now, we're seeing mourners starting to arrive at the Fountain of Praise Church in Houston for the funeral of George Floyd. It will be live streamed around the world starting at noon, and the New York Stock Exchange will hold a moment of silence for 8 minutes and 46 seconds in his honor. We will bring that to you live at noon, also here on Yahoo Finance. But let's get right back to the markets here and bring in Inez Ferre. Inez, Tiffany out with earnings this morning, and the one stat that has jumped off the page, I think, to a lot of folks, sales in China, red hot.
Brian, that's the highlight of the company's report, saying that in May, retail sales in mainland China 90%. This is despite global net sales being down approximately 40% for the month as compared to May of 2019. So right now you're looking at Tiffany that's up more than 2%. Also taking a look at Signet Jewelers, that stock is down more than 15%. This is after the company reported a loss per share of $1.59. That's better than what the street had been expecting. The same store sales were down 38.9% because of the temporary store closures. The company is temporarily suspending its dividend program. I want to mention Chesapeake Energy because that stock was halted for trading. This is because of news pending. Now, Bloomberg had put out a report that Chesapeake Energy may be preparing to file for bankruptcy. And then just taking a look at IBM, that stock is down more than 3%. IBM says it will no longer offer facial recognition products. CEO Arvind Krishna, in a letter to Congress, says that the company is opposed to using facial recognition for mass surveillance and racial profiling. And he also outlined some policy proposals for racial equality in the U.S., Brian.
All right, Inez Ferre, thank you. Let's stay on the markets here and bring in Quincy Crosby. She is Prudential Financial Chief Market Strategist and a friend of the first trade. Quincy, always good to see you this morning. We're seeing the market under a little bit of pressure this morning, but clearly this main story here is this market rally. And as you take a step back, do you think we're seeing a Trump re-election rally under the guise that the economy does in fact snap back, and come election season, the polls that we're seeing right now with Joe Biden in the lead are not the case?
Well, this is interesting because moving into this week, as the market moved higher, you started to see put buying closing in on the election more than you would normally see. Now, we've started to see a lot of call buying, but going forward, it was based on the notion that you could have a Democratic clean sweep. So if we start to see a pullback in those put purchases or the options to hedge on the S&P 500, it would suggest that because the market has been very nervous about a clean sweep come the election day.
What about the Federal Reserve tomorrow, Quincy? Is there going to be any material effect, do you think, on the market, or would Fed Chair Powell really have to surprise this market with a hawkish tone in order to trip it up?
He would have to do that, and he does not want to do that. The equity market is a major part of the financial conditions as the Fed sees it. They don't want to do that. They don't want to surprise the market. However, I think they do want to bring that yield down because that's been part of the recoveries, to have those yields down at zero bound. And the other thing is the housing market. That has been one of the best performers since March 23rd. Mortgage purchases are up, and they have been up for some time as Americans go to take advantage of these low rates. So I don't think they've got, and that presents a tightrope for the Fed. I think they're going to be able to walk that tightrope because look at what they've done since March 23rd. They are responsible for bringing this market off of that March 23rd low.
And Quincy, the follow-up there is, will the Fed be responsible for sending this rally right down the drain? Because you can make the argument it's their stimulus that has potentially inflated the market to the point where it's not properly capturing in the recovery in the back half of the year.
Well, exactly. It is a tightrope, but their view, I think, has been, look, we'll take care of that. But right now we're all in. Now we'll do everything it takes to keep this economy from declining even more and pushing it towards something deeper than a shallow recession. So I think they're going to be very, very careful. And the next question is, what does the Senate do in terms of a package? There too, the president knows more than anyone, this is an election year. Take care of small business owners. Take care of the consumer. He wants those votes. He doesn't want to lose that.
Hey, Quincy, there's a note out this morning from Nomura that I was looking at that says, without a vaccine, consumers and businesses are going to remain cautious. They don't believe we're going to get to pre-pandemic levels in economic activity until possibly 2022. Would you agree with that?
Well, it's very interesting. There's a report, I think it was first posted by the New York Times, where they went and talked to and had the survey by epidemiologists, asking them when they would be prepared to go out. And they gave them various categories. The epidemiologists were very careful, very conservative about when they feel comfortable about really engaging in economic activities and social activities. Every survey that we have seen shows that the majority of Americans, regardless of party, are very concerned about truly engaging in economic activity and social activity until they feel safe. So again, we need to see those numbers come down. And I think that would correlate with consumer discretionary even getting more of a bid than it already has as America has started to open.
Quincy, should retail investors, should they feel safe getting into the market? And if so, how do they get into a market that is clearly getting a little bit frothy here?
Well, we've seen call buying from retail investors. I mean, that's part of the concern regarding sentiment, that perhaps it's just too sanguine, too feeling the sky's the limit on the market. You don't want to see that, but nonetheless, a healthy pullback is just that. It's a healthy pullback. The market is overbought by any metric right now, and the question is, do we see just a normal consolidation? Is it sideways? Is it time? Or do we see something more meaningful like a 5 to 10% pullback? A lot is going to depend on how the economy is opening and the state of the virus. This is what makes this all very, very different. We're seeing cases rise in pockets of the country. Does that lead to hospitalizations? Does it lead to deaths? This is the next focus for the market.
If that's the next focus for the market, where should people be concentrating their money? I mean, we saw this rotation now out of tech, maybe not so much out of tech, but at least into other areas, right? The breadth of this market has become, I think, a lot more healthy over just the past few days.
Yes.
So where do you see money rotating to, if at all, as we sort of brace for what could be a second wave?
Well, it's interesting to see as big tech, mega tech sells off. You're going to see investors go right back there. Companies with strong balance sheets that are going to do well, regardless of a potential shutdown or lockdown. But also, I think you're going to see the housing market, because then what you would see was the 10-year Treasury yield come back down, making mortgages much more attractive. And we saw even during this lockdown that the housing market started to pick up with those purchase applications, enjoying the low rates. So I think we would go there. And also, you can't ignore the fact that the market has been broadening. And so perhaps if we don't see, the market caving to the potential for the virus spreading and hospitalizations and deaths increasing, I would continue with consumer discretionary. And healthcare has been sort of consolidating. I'd go back in there. You want to see these consolidations. It should bring more investors back into those parts of the market. So tech, healthcare, consumer discretionary. And I'd have to say, if it does look as if we are headed towards some major concern about the virus, I would suggest that we go back into those consumer staples, the Spam, that's Hormel, obviously Hershey, Clorox, Campbell Soups. They will get a bid. There's no doubt about it. They work beautifully. They gave up part of their move to the consumer discretionary, but I would actually look back there because I think the sell-off has made them attractive if we continue to stay at home.
All right, let's leave it there. Quincy Crosby, Prudential Financial Chief Market Strategist. Always good to see you. We'll talk to you soon.
Thank you.
All right, do stick around. Much more ahead of the markets on the first trade. All right, welcome back to the first trade. It should know we have an IPO coming out today in this pretty much red hot market. Vroom shares of the online car agency up, indicating to open $35 a share. This stock priced at 22. Alexis, talk about froth.
Yeah, lots of momentum, lots of new companies coming to market this week and next. All right, switching gears here now. Employees at Adidas and Estee Lauder are looking for real change from the higher ups, from the C-suite. They are asking executives to directly confront racism and promote diversity within their companies. Yahoo Finance's Kristen Myers is joining us for this one. So, Kristen, first off, what have Adidas and Estee Lauder done thus far to address these issues?
Hey, Alexis, good to see you this morning. So obviously, as we were talking about just a little bit ago in the break, these are two completely different companies. So first, I want to talk about Adidas. So the company has tweeted out messages about racism, and a lot of its employees are pushing them to say, listen, that's not, when you look at their C-suite, when you look at their board of directors, they have no person of color at all in some of the higher leadership. So Adidas employees presented what they're calling a state of emergency to their executives. And they're actually calling for an increase of representation of Black and Latino employees at every level of the organization. And they want that bumped up to 31%. Now, when it comes to Estee Lauder, they've actually made a commitment of $1 million to the Black community. Employees there say that's not enough. They want an increase there up to $5 million. They're also calling for the removal of Ronald Lauder from the board. Obviously, the company Estee Lauder was founded by his mother. And the reason for that is because of his donations and his fundraising for the president. And they say that the president's policies, the president's administration essentially runs counter to the messaging of social inclusion and diversity that Estee Lauder supposedly espouses. So those are some of the two changes that they want there at those two big companies. The overarching theme here, however, is that these employees are saying, look, particularly when it comes to Adidas and other, sportswear and apparel companies, look, you guys are profiting off of, Black culture and Black community. You need to be doing more to give back.
Kristen, we had Katie Kochman from Goldman Sachs yesterday, and she made some great comments on, if the companies do not drive enough diversity, they're just going to simply sell their stock. And good for her for saying that. But she said they don't have the stats. These companies are not putting out stats on their diversity. Do you think these companies need to pick it up here and start making these disclosures?
No, absolutely. There's a reason that these companies don't put out statistics. Nike, Adidas, Under Armour, these are not the only companies that are having a problem. We've talked about this a lot when it comes to the tech industry, for example. Frankly, you are just not seeing across the board a lot of Black and brown faces at the top when it comes to the C-suite, when it comes to their board of directors, but even all the way down to just their basic employees. Frequently, employees are saying, listen, we are not seeing enough faces of color inside the organization. We're not seeing enough faces of color advance through the organization. Some companies like Google have recently started to, release those statistics, and they're pretty damning, Brian. I mean, a lot of these companies, frankly, just don't have enough diverse faces within. And I think that now that everyone has been protesting and everyone is starting to say, listen, we care about your corporate social responsibility. We're actually caring about these issues of social justice. Some of these companies are going to have a huge reckoning going forward. They're going to have to find that, listen, folks are, as you suggested, going to sell their stock. People are going to leave and move over. Frankly, a lot of CEOs are coming out and saying, listen, diversity is not charity. Diversity is actually good business practice. Hopefully going forward, we'll see some of these companies really start to follow suit with some of those measures.
All right, Kristen Myers, always good to see you. We'll talk to you soon.
Of course.
All right, just stick around. We'll be right back with a company to watch here at Yahoo Finance, watching Macy's after a big debt raise on their part as they try to survive the COVID-19 pandemic. Do stick around. All right, welcome back to the first trade this morning. Let's take a look at Macy's here and bring in Inez Ferre. Inez, a big day for Macy's. Their communications chief telling me via email today they start curbside pickup at their pretty large and very important Herald Square location in New York City.
That's right, Brian. And CEO Jeff Jeanette saying that so far the curbside pickup, they're expecting this to trend of curbside pickup to be good for the company to continue. Look at Macy's right now. It's up about 0.5%. But just take a look at the performance over the last 5 days. You can see over the last 5 days, those stocks really rallied up 37%. Over the last 18 days, stock up 91%. But here, year to date, you can take a look at the performance, down 43%. Now, Macy's has raised $4.5 billion in funding for its operations to continue through fiscal 2021. So basically, analysts are saying that this means that the company isn't really at risk of bankruptcy right now, as it has been able to secure this funding. And it also came out with preliminary numbers forecasting its performance for the first quarter, forecasting sales will drop $3 to $3.02 billion. That's down from $5.5 billion a year ago. And CEO Jeff Jeanette saying our reopened stores are performing better than anticipated. Our strong digital business sales trends continue throughout May. Also seeing some strong sell-through of seasonal merchandise and anticipating that the company will exit the second quarter in a clean inventory position, saying the holiday season will be crucial. So certainly a lot of attention will be paid also today when it holds a virtual conference with Cowen on the new retail ecosystem and really what this new retail ecosystem looks on the other side of the pandemic, which is certainly different from prior to the pandemic. Brian?
Yeah, that much is for sure. Inez Ferre, thanks so much.
Thank you.
The national conversation following the murder of George Floyd has revealed a stark reality. Black Americans are missing from most corporate C-suites. Right now, there are only 4 Black CEOs at Fortune 500 companies. And a survey conducted last June by the Center for Talent Innovation found Black Americans make up just 3.2% of senior leadership roles at large companies in the U.S. So why aren't American companies doing better at this at all? Let's bring in Janice Usare, and she's the founder of BWG Business Solutions. Janice has worked with companies like Papa John's, PayPal, and Nordstrom on diversity issues. Janice, good to see you this morning. So why do you, as you work with these companies, you get in there and you understand what their operations are and their culture in these companies, why aren't they doing better?
Hi, Brian. Thank you so much. So I think that there are a lot of different factors, one of which being an unrealistic expectation of how long change actually takes. Companies bring me in typically to do workshops and trainings for employees, and there is this expectation that after the training or workshop is complete, that employees will be completely transformed. Most of the problem is that this is the first time I'm being brought into the organization. So if you're only doing a one time a year, one-off training or a workshop, it's not going to produce long-term effects or long-term results. So I think that there needs to be a lot more realisticness with what the training and workshops can actually do, and there needs to be more consistency on these companies' part.
You know, Janice, you actually came up with some real actionable things that companies can do to make their workforce, especially their C-suite, more diverse. And one of the things you are proposing is getting rid of that popular referral program, right? Oh, yeah, look, my friend is really qualified. They'd be great for this job. And then the company typically gives them a perk for bringing that person in. You say we should get rid of that policy. Why is that?
Yeah, and thank you, Alexis. So the reason is because referral hiring typically leads to a homogenous group within the workplace. So if I am asked to refer other engineers that I know, if I'm a white male, there's a high likelihood that I know other white males that I can refer. So if the goal is to get a diverse group of people, referral hiring does the opposite and often causes an echo chamber of the same types of employees being hired and referred into the organization. So I think that and another problem, Alexis, is that a lot of organizations don't actually use their diverse referral hiring program that they have. So if you're having your diverse employees refer other diverse employees, but you're not hiring from that pool, it can leave employees kind of feeling like your words are not authentic.
Janice, how much measurable change do you think corporate America can make within the next year? The fact is, a lot of the board members are very much entrenched. It takes time to get them booted off for whatever reason. It takes time for management teams to change. When does that change start to happen?
What we're seeing right now, Brian, is really exciting for me because I've been getting requests. I've been inundated with requests for racial equity workshops. So I think that talking about the issue is the first problem. When I'm brought in to do workshops, racial equity is typically what organizations don't want me to focus on. Usually it's emotional intelligence or something like microaggressions, but I see a lot of promise right now. And I think that understanding that it takes more than one workshop, and I'm not a huge fan of unconscious bias trainings. So it takes learning that you have to be doing multiple things. And I think that because this is the focus of the national conversation, that change will actually start to happen. And I think it was promising that earlier this year, Goldman Sachs said that they're not going to take a company public unless they have a diverse member on their board. So I think that once Goldman Sachs said that a lot of companies will start to follow suit.
Yeah, we actually had Katie Koch from Goldman Sachs on our show this week talking about just that and saying that they don't have a problem divesting themselves of companies that they don't believe are doing the job when it comes to diversity. But I want to get your take on what we're seeing happen right now. Lots of companies very publicly saying they are giving millions of dollars to social justice programs as we see civil unrest in our country once again. Is that the right message? Should they be using those resources perhaps to have change happen from within their own companies?
Yeah, and that's a great question, Alexis. I think that for a lot of employees, it seems like their companies are being a little bit inauthentic because while in one breath they're preaching that Black Lives Matter, in another breath their organization is not diverse and there's no diverse representation in leadership positions. So I think that a large part of it is that I'm really happy that this national conversation is happening. But what is really going to take changes is putting that money into things like mentorship and sponsorship programs, because there's research that indicates that for diverse employees, mentorship and sponsorship in particular helps with their career progression. So in addition to workshops and trainings and things like that, also investing in your employee resource group. A lot of times when I'm brought in to speak to a company, it's through an employee resource group. However, they tell me that they don't have a lot of funding and that they have a very small budget. So if you have an employee resource group, making sure that you're also giving them adequate funding so that they can bring people into the organization to have keynote talks and to do events and things like that. So I think that half of that money should be invested in these nonprofits for racial justice, and the other half should be, it's important to make sure your house is in order before going out and trying to fix other people's houses.
Janice, we were just talking about lots of companies refusing to put out their diversity metrics. What's your advice to those companies that are still not doing so? Isn't it better to finally rip the Band-Aid off here, get it talked about on social media? It may hurt, and it should hurt, but isn't it time now to drive change, get those numbers released, and do a better job?
Yeah, definitely, Brian. So that was my main qualm with a lot of these tech companies. Every year since 2015, the Googles and all of these large tech companies have put out a diversity report. But what you don't see is they show you the turnover numbers and they show you the how many people are currently in their organization in diverse groups, but they don't show you whether those people actually stayed the following year. So people want to see that. And like you said, Brian, it's important to just rip the Band-Aid off because the public likes transparency. If you make a public statement and say, you know what, we haven't been getting diversity and inclusion right in the last few years, but we're committed to making changes here in an effort to be transparent. Here are our numbers and our percentages. The public would appreciate that. And while they would receive some criticism, it shows that they're authentic and that they're trying to make a change. I think that the secrecy is what bothers people, especially the employees who know what the company culture is actually like.
Really well said there. Janice Gossam-Usare, founder of BWG Business Solutions. Good to speak with you this morning. Very important work you're doing.
Thank you so much, Brian, and thank you, Alexis.
All right, do stick around. We'll be right back with much more on the markets on the first trade. Trade. Let's get right to Inez Ferre for a look at several stocks. Inez, Hertz has been on our radar screen for the past week. Wild moves in this stock.
Wild move, some profit taking as a reversal over the last couple of sessions. But take a look at Hertz right now. It's down 19%. It had been halted for trading earlier due to volatility. Yesterday, it was up more than 100%. And really, the movement, as you said, over the last week has just been incredible. It had reached a record low at the end of May of 56 cents a share. And you can see the movement since then. So just taking a look also at Chesapeake Energy, that stock has also been halted for trading. This is news pending, and Bloomberg has a report out that perhaps the company is preparing to file for bankruptcy. Year to date, the stock is down 57%. And then looking at Sorrento Therapeutics, that stock is up more than 6%. Yesterday was up as well on hopes of the company working on a drug to inhibit the development of coronavirus called COVID Trap. It's a protein to bind and block the virus. So Sorrento today seeing a pop. Brian?
All right, thanks so much, Inez. Across the country, America is moving forward with reopening plans. Meanwhile, states like Florida, Arizona, and Texas are seeing a rise in cases of COVID-19. Here to discuss if America is prepared for a second wave is Bob White. He is Medtronic's Minimally Invasive Therapies Group President. Bob, good to see you this morning. I know I've been following Medtronic for a while, and I know recently the company has ramped up ventilator production. How many ventilators are you producing in June, and how much are you looking to produce into the end of the year?
Brian, great to have you. Great to see you. Thanks for connecting with me this morning. Brian, this is an unprecedented time, and Medtronic is mobilizing not just across ventilators, but other devices that really help in this COVID. So if you think about it, Brian, we've increased ventilator production fivefold. We will have gone from 200 a week to over 1,000 a week by the end of
What did you learn from from the first wave? I mean, we know that there was a cry for PPE, there was a cry for ventilators, and then it wound up that some cities, actually New York City, which was seen as the epicenter here in the U.S., having more ventilators than they actually needed. So what did you learn from the first wave that is helping you prepare for a possible second wave at Medtronic?
Yeah, Alexa, thanks for the question. It's good to see you. You know, when we think about what we've learned, we think about it in terms of three big learnings. One is the ramping, as I just spoke with Brian. Our ramping of ventilator production is absolutely important. Second, though, is we've taken unprecedented steps to share our intellectual property. For example, we on March 30th shared our intellectual designs for our PB560 ventilator, and we did this around the world. And so if you think about this, Alexis, we've had over 200,000 access to our website to download this important ventilator documentation, because we don't believe that any one company can solve this epidemic or this pandemic alone. And so we've taken this unprecedented step, and that's opened up really unique partnerships with people like SpaceX and Intel, as well as Foxconn and the people to be prepared. And then Alexis, you mentioned New York City, and I think the Javits Center is a great example, right? Whoever would have thought that that convention center would have turned into a field hospital? But when we got a call from Governor Cuomo's office to install patient monitoring remote equipment, we installed 400 patient monitors over the Easter weekend. And the nice part about that, Alexis, was those 400 patient monitors can be managed by only 10 clinicians. And I know both you and Brian have healthcare workers in your family. And so the ability to protect those healthcare workers from infection and use less PPE is really important. So look, we're proud to do our part.
Bob, how prepared, just from a pure ventilator standpoint, is the government? Should we do get a second wave? What does the stockpile of ventilators look like in this country? Because you're no stranger to this. These ventilators have been shipped out to states for months on end here.
Yeah, you know, Brian, when we played our part to do the allocation, we thought it in three simple ways. You know, we thought, let's be ethical, let's be clear, and let's be practical. And ethical means let's take the ventilators to where they're needed most around the country. So, you know, we feel good in terms of not just our role, but other ventilator roles to ensure that cities and towns have the ventilators they need. Secondly, you know, the allocation method needs to be understandable. And we've shared that with the task forces, both at a state and a federal level, to ensure that ventilators are, you know, put where they're needed. And then thirdly, of course, it needs to be practical so you can manufacture where needed. So Brian, you know, as we look at the waves of how the virus is going to come back potentially in a second wave, I believe the country's well prepared, right? And now people need to continue to do what I trust you, me, and Alexis are doing, which are good social distancing, you know, do all the things that we should do, and I think we can control it.
Yeah, Bob, talk about social distancing. You're not even in our studios today. But I know Medtronic just does not make ventilators, and you have been, the company executives have been presenting at various conferences of late. You operate the second largest business at Medtronic. What does your pipeline of product innovation look like for the rest of this year? Because yes, you are making ventilators, but you also have to get other new technologies out.
That's right, Brian, and thanks. And for the audience, the minimally invasive therapy group is about a $9 billion operating group inside Medtronic, so roughly about a third of Medtronic, and our 30,000 employees represent about a third of Medtronic's worldwide 90,000 employees. And you're right, Brian. You know, we've got the most exciting pipeline in the company's history right now, and it's because we believe we're providing technologies that make a difference to clinicians. Both ventilators we talked about, but also patient monitoring equipment. Again, I think this remote monitoring of patients will become more and more important as people move on. And then, of course, we have a very large surgical business, and the role of open, minimally invasive surgery, very, very important. And so we're excited about the pipeline, and we think because it matters to patients and clinicians.
All right, we'll leave it there. Bob White, Medtronic's Minimally Invasive Therapies Group President. Good to see you. Hopefully next time we'll see you in the studio.
You bet. Thanks, Brian. Thanks, Alexis.
All right, do stick around. Much more here on the markets, and we'll also speak with the CEO of Elf Beauty, Tarang Amin. Stay tuned. All right, welcome back to the first trade on this Tuesday morning. I think it's Tuesday. I don't know. After a while, these days start to mix together. I want to take another look at a company that we're watching closely here, Yahoo Finance, and just Nikola. Inez, this stock is on fire. We talked to the founder last week, Trevor Milton, as it debuted on the NASDAQ, up 100% today. What's it looking like today?
Well, right now it's down just 1%, but as you just mentioned, take a look at the 2-day chart. You can see up 100% over the 2-day chart. This is the electric and fuel cell powered truck company, which debuted on the NASDAQ last week. And CEO Trevor Milton yesterday tweeted about reservations for the most badass zero emission truck starting on June 29th. So this may be part of the reason why you're seeing the stock surge, why you saw that stock surge yesterday. He also tweeted, "I wanted to say this my whole adult life. Nikola is now worth more than Ford and FCA, Fiat Chrysler, nipping on the heels of GM." So tweeting a lot about the company, a lot of enthusiasm about this company. And Brian, I would have to ask you also, do you think that this is investors chasing another Tesla-like stock?
Ooh, Tesla. I mean, Nez, talking about putting the hardcore questions to me. Certainly could be. What this company does, it's pretty mind-blowing. Interesting technology, strong design, and the fact of the matter is there is only one Tesla out there to play. And here's potentially second.
By the way, Tesla's at an all-time high today. I don't know if if that's a little bit of the Nikola enthusiasm seeping over into Tesla, but that stock continues to move higher.
All right, well said. It is an electric car rally, but from electric cars to cosmetics, the cosmetic industry certainly saw a slowdown in the wake of COVID-19. But with states opening back up, folks may just be out there buying makeup again to support their selfie-taking habits. Elf Beauty CEO Tarang Amin is here to discuss. Tarang, always good to see you here. Look, I'm going on the streets. I'm wearing my mask. I see people wearing their masks. How is that going to impact the makeup industry's comeback over the next couple months?
Well, Brian and Alexis, thank you for having me again. I would say, in the beginning of the COVID-19 pandemic, we certainly saw a contraction in the category. The overall category is down at something like 38%. Even Elf was down for those first 4 weeks, about 30%. But since then, we've seen a major uptick. And I think this has to do with, in the beginning, consumers prioritizing essentials, but eventually people want to get on with their lives. And we've seen really great results. I think today, some analysts published Nielsen data through the end of May, and our consumption was up 17%. Now, part of that we think is due to the stimulus checks, but I think it's a good sign in terms of how we're positioned relative to most of the category, given our strong value equation and digital strength.
Tarang, where is most of that demand falling in terms of product line? I know you just recently launched a CBD-infused skincare line. Are people investing more in straight-up makeup, or is it skincare during this pandemic, during this sort of work-from-home era, if you will?
Well, we've seen strength in both areas, at least for Elf. I'd say as a category, skincare has been performing stronger, and we're no exception. I think in our fiscal year 20, our skincare business was up 27% just on the track channels alone, and we've seen it accelerate since then. Products like our Holy Hydration Cream are just fantastic, prestige quality products at an incredible values. But we've also seen strength in our complexion products, our poreless putty primers, our camo concealers. And so we're seeing strength across the line, but skincare is certainly an area of focus. And I think, you mentioned our full spectrum CBD line that we just introduced a few weeks ago. That's doing much better than I expected. And I think it really talks to consumers' needs for wellness and those products that really help take care of their skin.
Tarang, we've been having a discussion here all week, and even beyond a week, about diversity in companies. And you're one of the few companies that put out diversity metrics, and you're not shy to hide them. In light of what we're seeing across the country, what has been your message internally to your teams?
Sure. So, I think it's an incredibly important topic. And as a company whose mission is to make the best beauty accessible to every eye, lip, and face, inclusivity has always been such an important part of our DNA. So we're proud that 45% of our employees are diverse, over 75% are women, 60% are millennial. And so our message internally, we've taken a number of actions. First and foremost, we stand with Black Lives Matter. We have, condemned anti-Black racism and really stood up a number of actions, even in the last couple of weeks. We donated to Color of Change, a fellow Oakland, California organization that's really dedicated to this cause. We last Tuesday, we shut down our e-commerce site and all of our social communication for Blackout Tuesday in solidarity with other beauty companies, really standing for what we believe in. And then from an employee standpoint, I think we're doing many of the same things we did with the COVID-19 pandemic, which is communicating more. Last Friday, our weekly town hall, we dedicated to this topic. And I got to tell you, I'm so proud of our employees and the ideas they have, including wanting to donate themselves to various causes. As a company, we're going to match that. We're going to continue this fight and this journey because it's so core to who we are.
Trang, I know that you can get your products at a bunch of different places, including in big box retailers like Target. As economies start to reopen, what has the supply chain been like for you? What has demand been like to stock those shelves as opposed to, people buying online from you?
Well, again, I'm proud of our team. I think we were one of the first beauty companies as COVID-19 restrictions were lifted in China to be fully operational. So I think within 5 weeks, we're at 100% capacity. So we're seeing really great supply results, really great operations results, which build on our heritage of the best combination of cost, quality, and speed in our industry. And what we've seen from a demand standpoint, it's been highly volatile. So I said in the beginning of COVID-19, we saw a contraction in the category, but more recently, we've seen real strength across many of the segments that we have. So we're working very closely with our key retail partners, such as Target, Walmart, and of course, our online business, which is up triple digits since the COVID-19 crisis happened, and to make sure that we're getting our products to our consumers.
All right, we'll leave it there. e.l.f. Beauty CEO Trang Amin, always good to see you, and we'll talk to you soon.
Thank you. Great to see you.
All right, do stick around. Much more ahead on the markets on the first trade. All right, welcome back to the first trade. Hollywood may be making its comeback on the West Coast. California movie theaters are waiting on approval from Governor Newsom. If approved, with guidelines in place, they may open as soon as Friday, June 12th. Here with the details is Yahoo Finance's Sabeel Marcel. Sabeel, some good news. Movie theaters.
That's right. Some entertainment for all of us who've been stuck at home. So it looks like AMC and other movie theaters are going to be able to open soon, even as soon as this Friday when it comes to the state of California. But we're going to find out more details about it nationwide on AMC's earnings call after the closing bell today. But this is good news for investors who've seen their investments go down as we've been dealing with the shutdown. And in terms of the different companies, how they've been handling the shutdown and the reopening of their movie theaters. So you have, for example, AMC competitor ArcLight Cinemas, for instance. They won't be opening all their cinemas all at once. They'll be doing it one at a time. We'll see how they phase it. And also Cinemark will also be doing a similar thing. And in terms of the guidelines for the movie theater, so what the experience is going to be like when you're in there, they're limiting the number of attendees to about 25%. This is for California. They're going to be using a reservation system so that everybody doesn't arrive all at the same time. There aren't these long lines trying to avoid the crowds. And in terms of moviegoers, you will be required to wear a face mask, but not when you're eating or drinking.
Yeah, I would hope not. All right. I don't know if I'm ready to do that quite yet, but certainly an encouraging sign that these theaters may start opening. Sabeel Marcellus, thank you. We'll talk about market exuberance. Just take a look at Nikola. The aspiring battery, electric, and hydrogen fuel cell truck maker debuted on the NASDAQ last week. That stock is up better than 100%, giving Nikola a $26 billion market cap, even though they have zero revenue at the moment. Joining us once again is the founder of Nikola, Trevor. Trevor, great to see you. Thanks so much for being with us again. We spoke to you last week just before you were about to hit the market. What's your reaction? Could you ever have imagined the market embracing Nikola the way that it has?
Thanks for having me on. Lots happened in the last few days, right? I always thought that the stock, the company was going to do really well. I believe that there's a lot of value in Nikola that people don't understand. What's kind of cool is around the world, I just put out a tweet. I said that people are really tired of they want to be able to communicate with a company. They want to be able to talk to the company. They want to give input to a company. They want to tell them what's good and bad about their product. They want to be able to tweet the CEO. They want things fixed and they want things fixed fast. And instead, what do they find? They call and they get put on hold with some customer support representative and buried inside of a 25,000 employee company. And with Nikola, it's not that way. We're so connected with the world, with all of our investors around the world and the people that believe in us, that these guys they're essentially saying, look, we're so tired of the diesels. We're so tired of emissions. The Volkswagen emission scandal was a total debacle. And they're rewarding companies like Nikola and Tesla for actually completely transforming the industry and giving people a zero emission option, truly a only zero emission option. And that's why I think you've seen so much great support behind Nikola.
Trevor, long time no talk /see. Who's buying our stock? It was up over 103% yesterday. Are you getting these longer term investors that ultimately believe in your story? I believe you're gonna present at Deutsche Bank. What are you expecting to share there?
Yeah, so I did a lot of research yesterday because I got hundreds of phone calls. I had people were asking me, what's going on? Who's buying your stock? Why is this so? It's amazing. What's going on? So I did some study, and there's multiple things going on. First of all, we had over 300,000 new private investors investing in our company just yesterday. That's incredible. It's like unheard of. With all these people coming in, and it traded, I think it was like 30 or 40 million times yesterday or something like that. It was the Yahoo Finance gave me some numbers on that. That was just the web page. That's a lot of share count. And so what happened was you have an enormous amount of private investors. You have Europeans investing in Nikola now. That started yesterday. So with the Europeans investing, hundreds of thousands of new investors from essentially Robinhood and other trading platforms, combining all that with the fact that there's not a lot of stock available because I hold a lot of it, and our big funders hold a lot of it. So like Fidelity, PSAM, BlackRock, all these guys, they're like our blue chip investors. So there's not a lot of people wanting to sell shares, and there's good and bad, right? The good is, it's supply and demand. This is why people buy shares back in a company, is they want less supply and more demand, and that's what's going on right now with Nikola. And ultimately, it's all about the story. I mean, look, we're launching our Badger just in a few months, and I'll make sure you guys are there at that unveiling. That Badger is going to rock the world. And when we put that out there and let people know how soon it was, reservations open June 29th on that truck. It's gonna be every pickup truck that I know of in the market, and we're gonna do it in front of the audience. And I think that's really what you see with Nikola right now, is we're actually delivering products, and it's been pretty incredible.
Trevor, it really has been. We're happy to hear too that you get a lot of your information from our website, Yahoo Finance. Look, you're forecasting zero revenue for 2020. You're not expected to be a $1 billion company until 2023, yet the market's valuing you right now at $26 billion. As wonderful as all this euphoria is, are you concerned a little bit that the market is getting ahead of itself? Because you don't want to be one of those stocks that has this spectacular debut and then sort of crashes and falls. Are you concerned at all about that?
I mean, the most important thing you can do is give good, long, steady growth in a company. It's what everyone hopes for. No one likes volatility going up or down, right? Like, you want good growth, but you can't control what people do. I mean, I'm not going to go out there and tell people our company is not at the right value, because honestly, I think our company has much more value to go. But at the same time, you can't control. I mean, if people are excited about Nikola, they're excited about it. I don't like volatility. Nobody does. But the most important thing I can do is hit every benchmark I tell people we're going to do. Be very open and communicate with all the followers on Twitter. You can follow me at Nikola Trevor on Twitter. I'm very, very active. I'm probably one of the most accessible and direct CEOs. Well, I'm now the executive chairman of Nikola Corporation anywhere in the world. And I think that's a big reason why people love Nikola. They want to know that they can talk to you, that they can relate to you, that you're not some dude sitting in the office, making tons of money while the rest of the people suffer. And it's just not how we are here at Nikola. I'm very open. I'm connected. Even people bashing me, it's okay. Like, I get it all the time, and I kind of make fun with it with them. And that's the difference between Nikola and everybody else.
Trevor, I'm confused why you don't follow Alexis and I yet, hopefully after the show. But you mentioned that the Badger is coming out. I do sense the excitement out there in the marketplace. What do the orders look like that? Are you taking orders? I'm just a little unfamiliar with the buying process for you.
Yeah, so this is why there's so much excitement right now. June 29th, we opened the order book for the first time for the Nikola Badger truck. This pickup truck can go 600 to 700 miles between charges. There's no other vehicle like it in the world. And so what we've done is we've not taken any orders until now, and we open them up on June 29th. So the whole world is waiting for June 29th right now, because at Nikola World this year, we announced Nikola World also. So I'll make sure you guys get front row tickets there, and I'll make sure to follow you guys as well. But here's what's awesome. We're going to have between 10 and 30
economy and in the markets faltered because there was a renewed deceleration, not another recession, but just like a slowdown, not this full-on acceleration. And that really put things on pause and made that recovery quite weak in the beginning. And here, I actually don't know which one of those tracks we're following. We're watching.
Let me ask you, would it matter and how would it play if we actually were starting to slow down before the pandemic became the headline? Is that something we have to measure?
Well, there by some measures we were, okay. We certainly were slowing down, and what we were hoping for is that was drawing to a close, but the pandemic hit, and when it just overwhelmed everything. I mean, even I think if the economy had been doing a little bit better before the shutdown began, it still would have been a recession. I don't think you could have avoided this recession, but unlike causing a recession where you turn the economy off, hey, everybody stay home, close all the doors, we're not growing here. It's very different to turn on an economy, right? Just to say, okay, lights on, everybody go back, it's all good. And you could see both when you look around and in your own personal activities, some hesitation in that. And I think that will be reflected, and that's what we have to watch in these forward-looking indicators. The market is very hopeful that it's an 09-10 scenario. I don't have the hard evidence to back that up just yet, but at least so far, we do have, I think, a real recovery beginning this summer.
Lakshman, it's Brian Chung here. You bring up a good point about, you can't just turn the economy back on, but then there's also the difficulty in that it's not necessarily binary that it's good to turn the economy back on right now because there's a virus out there, right? So when we talk about even the interpretation of, for example, lagging data, that's a problem with the employment report, right? In many cases, you could argue that obviously while it's terrible to have people out of these jobs, we need to think about whether or not it's a good thing to be seeing an influx of people going back to those jobs if they might be at higher risk of then getting a second infection or maybe risking another outburst of the virus. So I guess when we're looking at, for example, on the other side of things, leading indicators, how does that create noise in interpreting these types of things? And how should people be watching the recovery indicators as we
ETFs is they keep buying. The markets are functioning just fine. The high yield market is functioning just fine. The investment grade market is functioning just fine. The challenge with the ETFs is LQD, which is the one that they've been buying the most, has nearly 11 years in average maturity. The primary corporate facility limits it to up to 5 years. It has banks. 25% of that exposure is banks. It's financial services. Whereas in the primary corporate facility, banks are not allowed to be a part of it. And the high yield, and we can debate about the fallen angels part of it, I still think increasingly providing support for high yield does increase moral hazard. I don't believe it's the right thing to do. And I'll leave you with this note, this final thought on this is it's like giving a little kid, a treat if they eat a good dinner. After dinner, then the kid will always ask, where my 4-year-old does, can I have a treat? I ate a good dinner. The fact that now the corporates have entered into the Fed's buying power, it's going to be nearly impossible to erase that from the market's mind. The only way you can walk this back is now you have to slow down your ETF purchases aggressively and eventually stop it. So the market believes this is one-time deal. Otherwise, I think you just made the moral hazard permanent.
Wale, it's Brian Chung here, and you bring up a good point. I think actually the Fed is even waffling with that idea too, because when the Fed originally designed this secondary market corporate credit facility, it didn't include fallen angels. They revised it to then add that. And as we saw from the granular detail from the Fed's most recent report, about 20%, I think it was actually 17% of its purchases were in high yield in those fallen angels that had fallen into that period of time after the Fed announced that facility. HYG, I think, is a big holding in there, over $100 million. I mean, why do you think the Federal Reserve is making such a substantial part of its purchases in high yield? And how does that kind of relate to, I guess, the stack here of corporate debt and what the Federal Reserve is trying to do in trying to, I guess, backstop that?
I think from the fallen angel perspective, the way I sort of thought about it is, some of the names where you can make a case, they had national importance, right? It was airlines, it was auto. You can make a case.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pella. Turned out to be a down Wednesday. Stocks were whipsawed. The dollar fell. Treasuries rallied as investors assessed the Fed's views on the economy. It was a volatile session with the S&P closing lower as Fed Chair Jay Powell suggested the pandemic could inflict longer-lasting damage on the economy, even as the Fed signaled it will keep rates near zero, possibly for years to come. S&P 500 index down again today, falling another 17 points, down 0.5%. NASDAQ climbing to another record, up 66 points, up 0.7%. The Dow down 282, down by 1%. 10-year yield 0.72%. Gold, little change now, up 30 cents, $17.39 the ounce. And West Texas Intermediate crude up 0.3%, 39.06 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thanks so much. Let's continue our conversation with Jamie Metzl, Senior Fellow at Atlantic Council, former National Security Council official, and also, easy for me to say, also author of the book, Hacking Darwin. We love catching up with you, Jamie. And I have to say, you were top of our list in part because we are at this time of tremendous disruption. We had talked to you early on in the pandemic. I think then we caught up with you a few weeks, or as we were just talking about, memory gets a little blurry, a few weeks in. But I think especially now, especially given what we've gone through over the last couple weeks as a country, you are a progressive. You're also a very, I think, optimistic thinker. But I do wonder what you make of where we are, especially as we get to this moment, I think, where as we catch our breath, as we think about, mourning George Floyd and thinking about, okay, let's not miss this moment. Let's think about what we can actually do that's going to make systemic, real, long-lasting change. I know you've got to be thinking about this, so help us understand what you are thinking.
Yeah, so I'm thinking about it. I know you guys are thinking about it, your listeners. We're all thinking about it, and we should, because this is such a crisis moment on so many levels. And what the pandemic did is it's shown us at our best as people who can really come together and rally and support each other. And it's really shown us at our worst as a society that was comfortable with such inequality, with some people living with more wealth and opportunity than they could ever use, and some people really having nothing. And this virus has really hit us at our weakest point. And so I fully understand, as much as I can, what it must feel like to just feel like society doesn't care about me. It's okay that I don't have bad health care, bad education, that I'm not protected in interactions with police, and certainly this national experience, almost like a national mourning experience that's come as a result of what began with the murder of George Floyd and now has blossomed to something bigger, is something real and something big. And it's not just this is not just about police brutality. I mean,
Right.
We certainly need to get better safeguards. This is about how do we want to organize ourselves as a society, and so we have to be thinking about those deeper questions. But at the same time, it's happening in the middle of a pandemic. And I am terrified that even in the name of addressing a really terrible problem as structural and institutional and historical terrible racism, we're going to find out in the next few weeks whether we're going to see spiking incidents of COVID and of death, particularly in these most vulnerable communities. And then I was hearing in the break, your news report, that there are going to be these big Republican conventions, which will be
Right.
the exact same thing. A bunch of people, these will be indoors, yelling and shouting. And if the people who are saying that the whole pandemic is a hoax were right, we will find out, because none of these people will get COVID. But if we really are facing something that is real, I'm really afraid that we could see those spikes. And they're big structural issues. We have to fix them, but we have to try to be as safe and inclusive and together in our process of doing so.
Well, as Jason and I have talked about, I feel like, Jamie, we're living in these 2-week increments as things happen to see, kind of what's the outcome as the world reopens, and certainly as the country reopens. In a piece that you and a colleague wrote for Newsweek, you specifically talk about the World Health Organization, and I feel like we know the U.S. has backed off of it. The U.S. has backed off funding from it. You talk, potentially about what the WHO needs to be, and you talk about that, like kind of almost a spy agency in terms of surveillance capabilities, specifically for catching things like a pandemic. They need to have those capabilities.
Yeah, absolutely. So I am an advisor. I'm a member of the World Health Organization International Advisory Committee on Human Genome Editing. the world needs a World Health Organization. And the one that we have is doing the best it can in many ways. It's just very limited, not just by resources, but by its mandate. And so we need to have a World Health Organization that has a global surveillance capability, which we don't allow the current one to have. It needs to have an emergency response capability. It needs to be able to build capacity around the world. So how do we do that? And in this article in Newsweek, what Glenn Gerstel and I write about is that we need to model it. And we need to say, well, what is the kind of global pandemic surveillance capability that the world needs? And then we say maybe we can build on the model that the United States and Britain and Australia and Canada and others have called Five Eyes, which is collaboration among intelligence organizations. But the only way that's going to work is if the United States and China, and as painful as this is, and we talked about all of the differences in the last segment, the United States and China, for the good of ourselves and the good of our world, at very least need to come together to support a joint effort in conjunction with the World Health Organization to create a global pandemic surveillance capability.
Right.
And if we had that, then there'd be a tripwire. And that, if we had that in place, a tripwire system and a response system, none of this pandemic we would just be talking about something else, because it would not have happened.
And we know this is not an easy thing to do, considering the heightened tensions between the U.S. and China. I know, Jamie, we will continue these conversations as we have in the past. Jamie Metzl, thank you so much. Senior Fellow at the Atlantic Council, former National Security Council official. Jamie, once again, joining us on the phone in New York City.
Yeah,
Thoughtful
synthesizing
things, right?
a lot. Really good.
And specific
Love
things that
catching
we
up with
need to do.
it. Yep, totally. No, I like that. I like the mimicking the intelligence agencies.
Yeah.
I think that's a really interesting idea. All right, you're listening to Bloomberg Business Week. Coming up, Jason Flom. We're going to talk about inequality some more. It's important. This is Bloomberg.
Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 106.1. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
So we're going to raise the vibrational levels right now because we've got a great guest. We've been thinking about everything going on in the last couple of weeks and saying we've got to get Jason Flom in because I want to see what he has to say. Founder and CEO at Lava Records, founding board member of the Innocence Project. It's not an introduction, but he will be with us, Jason, in just a moment.
Yeah, really interested to catch up with him. One of the voices that you are going to want to hear, and I guarantee he's going to say something that's going to change the way you think and also is going to stick with you. No pressure, but I'm very, very confident of that. All right, let's get back to Charlie Pellet first for some headlines. Hey, Charlie.
Well, hello there, Jason Kelly. Do want to begin with a major headline out of Texas. Texas has the biggest jump in virus cases since the pandemic emerged. Also, Amazon says it is implementing a one-year moratorium on police use of recognition. That's Amazon's facial recognition technology. The one-year moratorium might give Congress enough time to implement appropriate rules. Amazon says it is ready to help if requested. Federal Reserve pledged to maintain at least the current pace of asset purchases, and projected interest rates will remain near zero through 2022 as Fed Chair Jay Powell committed the central bank to using all its tools to help the economy recover from the coronavirus. Here was Powell reading from his statement at the news conference.
The extent of the downturn and the pace of recovery remain extraordinarily uncertain and will depend in large part on our success in containing the virus. We all want to get back to normal, but a full recovery is unlikely to occur until people are confident that it is safe to re-engage in a broad range of activities.
And this headline from the Bloomberg Professional Service, Just Eat Takeaway is going to buy Grubhub in an all-stock deal. Again, repeating the headline, Just Eat buying Grubhub in an all-stock deal. Grubhub is based in Chicago, Just Eat based in Amsterdam in the Netherlands. It was a down day for the S&P 500 index today, with the S&P 500 index dropping 17 points, down 0.5%. The Dow down 282, down by 1%. NASDAQ up 66, a gain there of 0.7%. 10-year up 30 seconds with a yield of 0.72%. Gold up 30 cents, $17.39 the ounce. Crude, West Texas Intermediate crude up 0.3%, $39.06 a barrel. Wells Fargo declined today after the bank's chief financial officer predicted higher loan loss provisions in the current quarter. Tough day for a lot of the interest rate names. Wells Fargo was down 9%. JP Morgan Chase down 4%. Citigroup lower by 6.1%. Big news out of NASCAR. It is banning the Confederate flag from its races and properties. NASCAR says the Confederate flag, quote, runs contrary to our commitment to bringing a welcoming and inclusive environment for all fans, our competitors, and our industry. Bubba Wallace, NASCAR's lone black driver, did call this week for the banishment of the Confederate flag. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, as we said earlier, with what's been going on over the past couple of weeks, we definitely wanted to bring back Jason Flom. Well known, of course, in the recording industry. He's CEO and founder of Lava Records and Lava Music Publishing. He's also a founding board member of the Innocence Project, host of the powerful podcast Wrongful Conviction, in which he talks with those individuals who've been convicted of crimes that they seem very credibly to not have committed. He's been really working for several decades to get those wrongfully convicted out of prison. He joins us once again on the phone from the Hamptons. Jason, we are glad to have you back with us. So the last couple of weeks, I think about you have been, tirelessly working to help those that don't have a voice. And I feel like once again, the last couple of weeks, again, we're trying to give those who haven't had a voice, perhaps, some say in our society. And I feel like just so much has to change. What do we do? What do we do differently to change what's been going on with George Floyd and others like him?
Well, I'm glad you brought that up. And the question is, this is about so much more than the killings that we see, the police killings that we've been seeing recently on videotape that have been reported so widely. The Breonna Taylor, of course, we all know about that, Ahmaud Arbery, et cetera. What we're seeing, I believe, is a reaction to the systemic persecution of people of color in our criminal legal system at every phase, right? And most of it is behind the scenes, but it's very, very real. We have almost 11 million people cycling in and out of jail and prison every year in America. 11 million. It's insane. And so the jail churn of just these black bodies being taken and, and just brutalized at every step of the game is something that had to burst. And, now there's this visible, lynching, the slow motion lynching, and finally it's crystallized everyone to come together in a way that's never happened before.
So how do we collectively keep the momentum to a point, Jason, where there's real structural change? Because as you say, it's well beyond police brutality. Are we thinking as broadly and at the same time as specifically about some of those things that need to change more structurally?
Yeah, I hope so. And it's interesting because there's no one particular thing that everyone is demanding right now, right? The fact is that people want, and it's so interesting that this is, I think, first of all, it's the biggest movement, I think, probably ever. You have all 50 states and at least 18 other countries with these massive protests, and which are almost exclusively peaceful, by the way. Let's just get that out of the way. So I think we're starting to see changes, right? You just mentioned on the news break, the Confederate flag being taken from NASCAR events, right? These things are symbolic, but they're meaningful, in my opinion. Interesting that happened on the same day that the president said that he's not going to allow the Confederate names to be taken off of military bases. So it's interesting that NASCAR and the White House are on different ends of the, that argument, and NASCAR is obviously right. So, I'm going to be hosting tomorrow at 5:00 a Zoom event that I'm going to be trying to answer these questions with 4 people who are much wiser than I am. So I'll have Patrice Galores, the co-founder of Black Lives Matter, Alikar Katsanis, the founder of Civil Rights Corps, Bianca Tylek, who runs an organization called Worth Rises, and we'll also have Cassandra Frederic, who's the executive director of the Drug Policy Alliance. Mm-hmm. So we're going to do this Zoom event, and the link is on my podcast page. So if you go to Wrongful Conviction Podcast on Facebook or on Instagram, it'll take you to a Zoom link, and anyone's welcome to join. And we're going to attempt to answer exactly that question. What can each person do? What can anyone? I have so many people hitting me up saying, I want to volunteer, I want to donate, but I don't know where to donate. I want to use this energy, this anger that I feel to create a change. So we're going to attempt to address that question together.
And we're going to put that on Twitter for you as well, Jason, because we want people to know about it. We've got to do a little bit more news, and then we're going to come back and continue our conversation. We are talking with Jason Flom, as we mentioned, his podcast, Wrongful Conviction, and of course, he's CEO and founder of Lava Records as well. So we'll come back with him in just a moment. In the meantime, back to World and National News headlines, and back to Mark Mills.
Thanks, Carol. The brother of George Floyd, the African-American man whose death in police custody set off nationwide protests, called on Congress to ensure his brother's killing leads to positive change. Philonise Floyd, appearing before the House Judiciary Committee as lawmakers consider legislation to change policing practices, said, "I'm here to ask you to make it stop. Stop the pain." California Democrat Ted Lieu said deep reforms are needed from the top down.
It takes a village to allow for the persistent systematic murder of Black Americans by our government, and this has got to stop.
Representative Jim Jordan, the Judiciary Committee's top Republican, challenged Democrats to more forcefully reject activist demands to defund the police. President Trump's rallies, his signature campaign events that have been sidelined during the pandemic, will resume in Oklahoma later this month.
That we're going to be starting our rallies. The first one we believe will be we're just starting to call up, will be in Oklahoma, in Tulsa, Oklahoma. A beautiful new venue, brand new, and they're looking forward to it. They've done a great job with COVID, as you know, in the state of Oklahoma. We're going to be coming into Florida, do a big one in Florida, a big one in Texas.
A fresh onslaught of the coronavirus is bringing challenges for residents and the economy in pockets across the U.S. A month into its reopening, Florida reported 8,553 new coronavirus cases this week, the most of any 7-day period. And in Texas, hospitalizations on Tuesday jumped 6.3% to 2,056, the highest since the pandemic emerged. Global news 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Mark Mills. This is Bloomberg.
Mark, thank you. You are listening to Bloomberg Business Week. We're going to continue our conversation with Jason Flom in just a minute. But before we do that, one of the stories that is trending on the Bloomberg is an interesting counter in some ways to what we just heard Mark Mills describe in terms of reopening and some of the spiking cases and hospitalizations related to COVID-19 that we're seeing. The EU saying that travel to Europe will be allowed again starting on July 1st. There was a curb on non-essential travel. It was due to expire on June 15th. They pushed it back just a little bit, but the reopening and coming at a time when, people do tend to go on vacation to Europe, and certainly Europe goes on vacation itself for a lot of July and August. So you do wonder about this and synthesizing all of this together, what this may mean for cases, because let's remember, even though we're feeling better about this here in the tri-state area, in other parts of the United States and in other parts of the world, we don't have a vaccine. This is still spreading.
Right. And this is about opening internal borders, right, among the European Union regions versus external ones.
Yes.
And you're right.
Yeah, good. Thank you for clarifying that.
No, and it's, listen, this is a really tricky balance in terms of folks looking at their economies that are in many ways struggling and figuring out ways to bring them back slowly but safely. And so, this would be a big step in terms of people being able to move around Europe. You and I have talked about traveling and our hesitation right now, just even in terms of, traveling certainly within this country. And I think it will be a kind of a case by case basis. And as we start to see people travel, whether those numbers start to go up again, will really determine whether or not people feel comfortable and safe enough to get back on planes, Jason. I think it just comes down to that.
Yeah, it absolutely does. And, we'll see sort of how all this trends. As we say, you got to watch the numbers. And as you said a few minutes ago, and we've been saying to each other, you're sort of watching everything in 2-week increments.
Totally.
To see how it trends. And by the way, we don't know what the fall is going to bring and flu season and all those things.
Lots of
a lot to be worried about. And a lot.
All right, we're going to come back with Jason Flom in just a moment. You're listening to Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. A number of after-the-bell headlines. Europe's Just Eat Takeaway.com is acquiring Chicago-based Grubhub for $7.3 billion in a deal that creates one of the world's largest meal delivery companies as the coronavirus pandemic drives a surge in orders. Amazon says it will implement a one-year moratorium on police department use of its facial recognition software, a major course change for a company that's been one of the most strident defenders of the controversial technology. Stocks whipsawed, the dollar fell, treasuries rallied as investors assess the Fed's views on the U.S. economy. You heard Fed Chair Jay Powell live here on Bloomberg Radio. S&P down 17, ending the Wednesday session at 3190, down 0.5%. The Dow dropped 282 points, down by 1%. NASDAQ, a record there, another record, up 66 points, now at 10,020. That was a gain of 0.7%. 10-year up 30 seconds with a yield of 0.72%. Gold up 30 cents the ounce at $17.39. West Texas Intermediate crude up 1.7%. $39.60 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, let's continue our conversation with Jason Flom, founder, chief executive officer of Lava Records, and founding board member of the Innocence Project, joining us on the phone from New York. So, Jason, and I think this is very relevant to the event that you're talking about, the Zoom event you're having tomorrow that you were describing with us before, and we'll talk about it again before we wrap up. But, you know, I've really been wrestling with this, and I dare say Carol has as well. We have teenagers. We're trying to have these conversations with our kids about this. And I know a lot of parents are trying to have conversations with their teenagers, 20-year-olds and up. You know, this is a generation that's very socially engaged. They want to do something. They don't necessarily have the life experience that maybe we have and don't understand some of the complexities of this. And yet we want them to be engaged and we want them to be informed. How do you recommend having those types of conversations?
Well, there's so many great resources that you can go to, right? There's a wonderful new book out called Usual Cruelty by Alec Karakatsanis that really rips the lid off of how we have, created and perpetuated a system that is designed to crush human beings, to cage them and crush them for economic gain. Of course, 65% of the people in our criminal institutions, right? And we have almost 10,000 jails and prisons in this country, which is insane, right? And 65% of them are black. It's like, it's crazy, right? We have more people in prison, more black people in prison right now than we ever had enslaved at any particular time in the history of slavery. So, but again, I mean, there's so many great things. Watch 13th, the movie, right? Watch the Innocence Files on Netflix. Mm-hmm. There are so many great things to follow on my Instagram, which is It's Jason Flom, ITS Jason Flom. I'm always highlighting things that I think are important for people to focus on. But yeah, the minute you get into this, it becomes like a rabbit hole, right? And I'm hoping your kids and other kids of their generation will take this and make it their cause, because this is the worst failed social policy disaster of our lifetimes. So we've got to fix it.
And I guess it's interesting too, and I appreciate what you said there, because I do think, especially in light of so many people saying so many different things, being able to focus the conversation on incarceration specifically, I do think is helpful, because I think, as you said before we did some news, this idea of like everybody's sort of casting about, and this is a very just stark reality, and you just described it really well, and to sort of point people toward that specific part of the system, which is, I think, empirically broken. I think no one would be like, no, it's going great. It's very pointed. So I appreciate that.
I think something that will Oh, sorry. Go ahead.
No, please, Jason, go ahead.
I was going to say, I think something that will really surprise a lot of your listeners is that the number one reason for arrest in America and jailing is driving on a suspended license. As you can guess, the overwhelming majority of those people that are arrested for this and jailed, and of course They over-index in every aspect of the system. They're the most arrested. They're the most prosecuted. They get the highest sentences. They get the longest sentences. They have, the longest probation periods are people of color. So the fact is that these are not dangerous people. And then there's fines and fees, and they get charged with these fines and fees. They get put back into the system because they can't pay these fines and fees. So it just becomes a nonstop churn that disrupts families and communities and creates this hostile, terrible, feeling among people who are being, again, put down and persecuted. And that's why I hope people will follow. Civil Rights Corps is a great thing to follow on Instagram, and the same thing, the book, The Usual Cruelty, is by that same guy who's really upending that system we're working on.
So, Jason, what else needs to change? Because this is not, something, again, that just happened overnight, right? It's, we had one guest on who from Harvard, and she just talked about, we've been fighting racism for 400 years and then some, so what is it? Is it education? Is it neighborhoods? Is it, I've been having conversations, we were talking about, who we socialize with and, what's wrong? What's broken down in our system? What needs to be the first 1-2 steps to change, the racism that is obviously still rampant in America?
Well, I think that when people talk about defunding the police, what they're really saying is, and there's not a better word for it, so that's what they use, but they're saying take some of this money, right? We have major cities who have over 50% of their budgets that are devoted to police and corrections, right? Take some of that money away and put it into community, enrichment, right? Put it into programs that actually help people. And let's bear in mind that only less than 4% of 911 calls are for anything violent, right? So, and we can't expect police officers to be trained to deal with a mental health crisis or someone in a drug situation who's having a reaction or someone who is stuck on the side of the road. No matter what it is, they show up in this highly militarized way and bad things happen. Now, the racism, the systemic racism is a whole nother issue, and that's something we have to deal with. There's a soft racism, right? And I think we all have to do a couple of things. We have to look at our companies. So many people that are listening are people who run or are bigwigs in important businesses. Look at your hiring practices. Look at your portfolio as well. I encourage your listeners to look at your portfolio, call your investment person, or maybe you're your own, and look and see if you have any investments in companies that benefit from the caging of human beings. And if you do, divest, because we have to get the economics are at the root of all racism, right? That's why they brought slaves to America, to build the country. It's all economics. That's the whole thing that drives the prison industrial complex, economics. So we have to remove that profit motive, and we have to start diverting and taking some of this money from this over-policing and putting it into programs that actually benefit the communities. It's so crazy, right? As we're increasing these budgets endlessly, we're taking money from education, from healthcare, from all the things that I think everyone probably thinks is a good idea, right, to have better education. So, yeah, I'll get off my soapbox now.
All right, so give us 30 seconds again on the event tomorrow, because it's a really important one.
So tomorrow I'll be hosting an event on Facebook. It's a Zoom event on Facebook. You can go to the Wrongful Conviction Podcast page on Facebook or to Wrongful Conviction Podcast on Instagram, and you'll find a Zoom link in the bio there, but go to the page on Facebook. It's probably more direct. And it'll be an event where I'll be moderating Patrisse Cullors, co-founder of Black Lives Matter, and 3 other major figures in the civil rights leaders and activists who are real change makers in the movement for racial justice and criminal justice reform.
And I put it out on Twitter at Carol Masser and Jason Kelly. So folks, do be sure to check it out. Jason Flom, thank you so much. We really do look forward to time with you and your thoughts on what's going on in our world. Jason Flom, he is founder and CEO at Lava Records, founding board member of the Innocence Project, which you should also check out, I'm just going to say. So on that note, Jason, it's been an interesting day and a nice way to wrap it up with Jason. This is Bloomberg.
This is Rich Chiga. He's a Chinese rapper by way of Indonesia, and he's very popular on the internet. This is Joji. He's a Japanese-Australian singer, and he's also very popular on the internet. Plus, Joji invented the Harlem Shake meme. Let me say that again. This guy, Joji, in the blood bathtub, invented the Harlem Shake meme. But we'll come back to that. So Rich and Joji are both signed to 88 Rising, an entertainment company hoping to build a lasting global brand that will outlive singular moments of virality. They primarily create content combining Asian culture and hip-hop, a formula that apparently pleases the internet gods greatly. They've only been around for 18 months, but they're already putting up major label numbers.
I think that we have an unprecedented collective of talent, a group of predominantly Asian artists, really making waves globally, which from an independent point of view as well.
88's founder, Sean Miyashiro, cut his teeth launching Vice's electronic music channel, Thump. But quickly, Sean became interested in life beyond dance music.
I knew that after launching a whole content platform that I have kind of the ability and the know-how to do it again, but for what was the question.
So Sean moved to the Bronx to start over and figure it out. He couldn't afford an office space, so he worked out of his car at the top of a grimy parking garage.
Everything kind of started here. If you look around, this is my environment. This is my serenity, really. 88 Rising was built here. Built on the grounds of LA Fitness, residence in a parking garage. I was living in the Bronx. I'm just like, damn, where the hell do I go? So I just come up here and I just kind of figure things out every single day. Being like, okay, what the hell is this thing? Coming here was kind of like my own kind of private office, basically. To be honest, I would even go to the bathroom here. I would take pisses here, you know what I mean? It was, it's just too far to go back down there. When I need Wi-Fi, I'd spend a good part of the day at Dunkin' Donuts. Hi, how are you? Can I get a chicken snack wrap?
Before 88 Rising officially launched, Sean caught a surprise break in the form of a Twitter friendship with a funny 16-year-old kid from Indonesia named Brian, who taught himself English by watching Rubik's Cube tutorial videos on YouTube. Seriously, that's true.
I thought his Twitter was genius, from the future, just crazy, and just the shit that he was saying, the memes he was making. But I didn't know that he rapped or anything like that. I really didn't, and he came up with that stick 2 weeks later.
12 in the morning, pop shells for a living and baby gon' smell blood trail every minute road.
Dat Stick was Brian's first ever attempt at making a rap song, and it immediately went viral.
Everything was great about it, but the one thing that I noticed is the song was hard as hell. Just everything about it, man. Just it was menacing, bro.
Soon after the video dropped, Brian signed with 88 Rising.
I'll FaceTime with Rich. Sorry for calling you Rich Chiga on my phone, Rich. Brian, he gets super pissed off that he's saved in my phone as Rich Chiga. He's like, dude, am I not a human to you? What's good, bro?
What's good, brother?
How you doing?
Doing great. Let's do the sound check.
How was it?
It was tight.
Hold it stick blocks, but you been a bitch, suck a thick cock.
So, Brian could definitely rap, but some viewers understandably took offense at a Chinese kid satirizing rap cliches and calling himself Rich Chiga. But if a group of well-known rappers saw the video and genuinely liked it, that could at least help validate Brian as a legit hip-hop artist. Plus, it could be really funny.
It was just kind of an idea that I just had on the spot. Everything that rappers say is better and funnier and smarter and wittier. And it's just more entertaining. We just edited it as tight as possible, put it up, and it really worked.
12 in the morning, pop shows for a living.
Yo, this nigga got a pouch on and a Reebok pouch.
This is the hardest nigga of all time.
You said when you come for a trigger like me. That was dope.
Like, it's just lit, and I think people would take it as a joke at first, but it's like if he ran with that and kept doing more videos like that, it's just lit.
You know, I'd never been to America before, and like all of a sudden, it's like I see like all the rappers that I listen to just like reacting to my stuff, and I was like, what? How did this happen?
The reaction video also went viral, and even led to a remix of Dat Stick featuring Wu-Tang's Ghostface.
I'll get on that track. You know what I'm saying? Yeah.
Really, on the remix?
Yeah. Oh, you know him?
And yeah, the remix went viral too. Brian has since acknowledged the misstep in his name and claims he may change it. But for the time being, he's still Rich Chiga to his fans. An ever-growing global audience, hungry for more releases from emerging talent around the world.
I didn't know that it was gonna be this impactful and this important to people, and I'm very thankful and blessed that it has. And every day now that I wake up, it's like it's just like a new mission every day.
A major part of that mission involves Joji. Remember the bloody bath guy? He's a former YouTube personality in the middle of a career transition.
The sound of this song, Will He, it's like a trap song that you can like slow dance to. Awkward prom shit, you know what I mean? I used to do crazy episodic internet videos. It was going well, and one day it was me and a few friends just in a room. We were casually chilling, and then someone plays the song, and it's brand new at the time. I happened to have a lot of costumes laying around, so I told the other guys, I was like, get in these costumes and let's just dance to it. Like, who cares? We were like, okay, let's just go crazy at the drop. So that video goes up. I go to sleep, and the next morning, everyone's doing it. Like, next morning. That taught me a lot about the internet, how people want to just be a part of something. And from that point on, something changed, and I was a little better at understanding demographics and people and what they want to see and what they want to hear. I was friends with a couple other artists who were affiliated with 88, and then I also started to realize that 88 is the bridge between Western and Asian entertainment, and I really wanted to be a part of that.
Joji just released the In Tongues EP, his first project as a serious artist.
Joji's In Tongues record came out a couple weeks ago. It's #2 on Billboard on the R&B charts, which is crazy for independent release, and he's like a brand new artist.
And the success is even more impressive, knowing he went from creating something like this,
it's just Taco Bell, what could possibly go wrong?
to creating something like this, the newest music video for his song Demons.
The demons told me everything, they whisper in the night. This is not a threat, I promise.
Tonight, Rich Chiga has a show in New York City. Tickets sold out in an hour.
I came here, I'm first online. I was here at 1. I was the third person online.
So why'd you get here so early?
Because I want to see Rich Chiga. I want to touch him.
What do you guys think of Joji?
He's
That's my dad, son. You guys cop the new EP or like?
Yeah. I woke up at 6 in the morning just to cop that shit. And then I listened to it, and that shit started making me cry.
This is actually kind of exciting. Every time, this never gets old. Like, you live online and social media, but like, there's nothing like just being with the people.
More often than not, viral success happens by accident. And then after an appearance on Ellen or Jimmy Kimmel, the creator's star power fizzles out. But Idiot Rising has figured out how to turn potential gimmicks into brands with an actual following that keeps coming back for the next thing.
Oh, shit!
So keep an eye out for 88's next move. But more than likely, it won't be covered on network television or terrestrial radio. Although, as they've already proven, nowadays that really doesn't matter.
Do you want me to turn you so you're looking outwards? Yes, please. How about there? First time we came out with B, Jade said, "It feels like I've been released from prison." Do you want these, Mrs.? Definitely. Definitely. Right. Yeah. And she could say hello to everybody, people she hadn't seen for months.
It's
Hi, it's
Jade.
Jade.
Oh. So you can talk to Jade through this.
Hi, Katie. She's there. Hi.
Every time anyone's seen her, they want to know why she's there. And it's kind of the opposite of when you're in a wheelchair and people see you and they kind of go, oh, should I look? I don't know what the right protocol is. When there's a tiny robot with its bright little eyes going around just looking happy everywhere, it really opens you up for conversation.
You've got some friends here, look.
Hiya! When I saw her for the first time, I remember thinking, this is going to change things. This is one of those points where if this was a book, this would be the cliffhanger. condition called Ehlers-Danlos syndrome, which means that I have a lot of dislocations, there's a lot of pain, and a lot of seizures and whatnot. So I can end up on my own in my room for long periods of time.
Yeah, my love.
A lot of the time, with a condition like my own, of course there's the pain, and the pain is bad, and the dislocations are bad, and the seizures and being in paralysis and never knowing whether you're going to be able to wake up properly tomorrow, that's bad. But what's worse still is being able to count the number of people you see a day on one hand.
Are you ready?
Sure am, I'm just hoping the connection's going to stay.
Yeah, me too. Alright, here we go.
When you're used to just the same little metre by metre and a half window every day, and you've been there for months, being able to just see the sky from somewhere else, or the tops of trees, or a sign, is incredible. Or being able to have that kind of chat in the car that most people would probably take for granted.
I'm going to go past Grandma and Grandad so you can give them a wave. Now, if Jade is particularly seizure-y, she can still take part. And that's brilliant, really, because before she would just be left in a bed or in a house with just her carers. It's quite a small world, that.
Right, so there's one of her. Here, this costume I'm busy making at the moment. When I'm not on bed rest and I'm not just wearing pyjamas all the time, I enjoy being able to dress as different characters and go to Comic Cons and that kind of thing, because it just lets me show a different side of myself, and it's a bit of fun. If you can't go out that often, you've got to enjoy it when you do. Was that? Good. It's one of those weird things where I want to not have to use B because I want to be well enough to be able to go to those places myself. Like, it really makes a big difference to me to be able to go into school. But the thing is, with my condition fluctuating all of the time, I can't go into school reliably. Written out bigger on the board, thank you. Today's the first day that I've been in school via B, and so far it's interesting. There's still a few little things that we need to work out, but for the most part I think it's going fairly well. And it's brilliant because I can really tell the difference between today and yesterday. How yesterday I forced myself to go into school when I wasn't very well, and I was really tired afterwards and ended up having loads of seizures. Whereas today I've been able to do all of the work, I've been able to keep a clear head and not be ill, which means I'm able to be more focused on my schoolwork.
So there is my first step of working, is to simplify root 8. The algebra test is next week.
Now I'm trying to make friendships which I'll be able to maintain with B. Before that, I've ended up letting people down quite often. B gives me hope, yeah. She's just always there. And if I can't do something, she can. And if I need sort of assistance to be able to make commitments, then she's there, and she means that I feel like a more valuable person because I'm more reliable.
expose everything you won't admit.
And action! This entire video is based on a true story. When I do like motivational speeches or even tell myself like, love yourself and you should love yourself.
This is Lily Singh, but to fans all over the world, she's the YouTube star Superwoman.
What up everyone, it's your girl, Superwoman. I know we can change the world for the better, one positive day at a time. My parents now know what I do. They didn't know what I did for a long time in the beginning of my career. I was just making videos in my room, they had no idea. Mom, Dad, have you seen my keys? I can't find them anywhere. Because you're always on phone. Until someone called them, like a family member from another part of Canada was like, Canada, is your daughter making videos? And the mom was like, I don't know, Lily, are you making videos?
Just making videos grew into an entire career. Today, Lily's YouTube channel has some 12 million subscribers, over 2 billion views, and guest stars like Michelle Obama, Dwayne "The Rock" Johnson, and Seth Rogen.
I think a lot of young girls are raised to believe that you're gonna go to school and then graduate and then get married and then get a job and then have kids.
And Lily was on that path, all the way through a psychology degree at York University in Toronto. But when she started thinking about a career,
I started to immensely panic and think something was wrong with me because I tried to figure out my life and it wasn't working in that straight line.
it was 2010 and YouTube was only 5 years old.
I thought nothing of YouTube. I was probably the last person in my circle of friends to discover YouTube. And I remember when I did, I thought, this is so strange. There's people making videos in their rooms and other people are watching them.
So she figured, why not give it a shot?
I one day posted a video because I was sad and I wanted to be creative and happy.
She didn't know how to edit video or write scripts, so she winged it.
It was so bad and so cringe, and my expectation was literally nothing. I was like, I'm gonna put this video up, a couple of my friends are gonna watch it, probably make fun of me, and that's gonna be the end of this. The second and third video came from, wait, 70 people watched my first one, can I get 80 to watch the next one?
She kept creating, she kept posting, and the viewers kept coming. Lily had found an audience.
A lot of the comments were, oh my god, there's a brown girl on YouTube.
More specifically, Indian. Lily's parents immigrated to Canada from India, and Lily was born and raised in Scarborough, near Toronto.
My home life was awesome. My parents, even though I portrayed them to be quite strict in my videos. Oi Lily, where's the rest of your skirt, huh? I teach you like this, to walk around like this, showing everything to everyone? They actually aren't like that at all. They're pretty modern and pretty cool.
Your dress is short, don't know what for.
And we're pretty lenient with me. I mean, I got away with a lot of things. I was a brat. I was a brat.
She had a different idea of what she wanted out of life than other kids. In a grade school graduation slideshow, her classmates said they wanted to be lawyers and doctors.
And then I came up and I was like, rapper.
Making out with your friends, man, but then you say that you hate hoes.
I could just feel my parents being like, why?
Because that's just not something women really did in the Singh family.
I know there was a ton of people that weren't happy about my birth being a female, so I think, and that's some real-ish, but it's a real thing. The best thing I could have done to prove to so many people that didn't want my mom to have a daughter was to become Superwoman. What up everyone, it's your girl, Superwoman.
It was the name of Lily's favorite hip-hop song by Lil Mo featuring Fabulous.
I love the song so much because it was one of the only songs at the time that was an empowering female song, where Lil Mo's going on about like, I will save guys with my superpowers, and I will save girls with my superpowers, and I am the Superwoman. I thought, this name that I've had for so long that empowered me when I was younger, I'm gonna make this my screen name. Maybe this should be a new series.
Superwoman didn't just burst onto the scene overnight with a viral video. It was a steady climb fueled by hard work.
The moment that I thought this is going somewhere and this could be a career was the first time I performed internationally. It was in India. And it was the first time where I was truly across the world and people knew my videos.
Singh has transformed herself from a bratty kid to an internet personality to a media mogul. She starred in a feature film, A Trip to Unicorn Island, in 2016. And her book, How to Be a Boss, hit the New York Times bestseller list in 2017 while she was on a 30-city international tour. Lily started out with the goal of getting millions of subscribers and financial security.
Hurry the hell up!
But after surpassing those goals, success has new meaning.
I've really come to terms with the fact that my definition of success is what's the best legacy I can leave behind. And it's not the number of views and the number of subscribers. It is the number of people that can say, this girl changed my life or changed something in my life positively.
Ma Baoli, better known as Gang La, is one of the 4 Grand Marshals leading New York's Pride Parade this year. But in the country he comes from, being gay is still a social taboo. The CEO of a Beijing-based internet company is on a mission to improve the lives of millions of gay men in China.
对于每一个 LGBT 人群来说，即使这个国家不允许你跟同性爱人结婚，但是你仍然要勇敢地去选择你自己的生活，你仍然应该拥有幸福生活的权利。
Ma's company Blue City runs an app and a website specifically for gay men. Blued is one of the biggest gay social networking apps in the world, with an estimated 30 million registered users. Unlike most other apps, Blued is more than just dating or hookups.
大家可以在我们这个软件里面找他自己的情感，然后可以阅读相关的内容，然后可以进行一些娱乐，比如玩游戏啊，比如看直播啊等等。
Back in 2000, when Ma studied at a police school in northern China, he realized he didn't feel like everyone else.
因为他们都找女朋友，然后谈恋爱，但是我对长得好看的同性的男生，我反而觉得对我更有吸引力。所以那个时候我就到互联网上去找这样的一些资料，然后希望能够告诉我自己我到底是谁。互联网上所有的信息都是负面的，都是错的，就是说同性恋要电击疗法，要被治疗，然后要吃药等等。
After visiting some foreign websites with different attitudes to homosexuality, Ma created his own site for a Chinese audience, encouraging people that
他们也是正常的，他们不用自卑，然后也不用自杀。
Even though attitudes towards homosexuals are slowly changing in China, it's still a social stigma. The virtual world of Blued, where members can be open about their sexuality, is for most a striking contrast to their real lives. This is live streaming, a function added to Blued in late 2015, right as the internet craze was starting to take off in China. Many self-made stars like Jin make decent amounts of money by receiving audiences' virtual currencies and gifts.
我们不是彼此的初恋，初恋这种事儿多不靠谱啊。
For Kyle and Klaus, a couple who have come out, live streaming on Blued means something different.
其实我经常会收到很多粉丝的一些互动的留言，就是类似就是说你们让我们看到了同志情侣之间的一些希望啊，我看到这样的留言我是很欣慰。
The government's rules for acceptable content online may shift quickly in China, with LGBT material in a grey area. Many companies feel the chill of the recent internet crackdown, but Blue City still runs as usual. Ma has won the Chinese government's trust by helping with HIV prevention among gay men. A third of the company's staff are dedicated to screening pornographic and politically sensitive content.
我不太多的愿意去对抗，我更多的愿意去对话，去改变他们的想法。我觉得这个可能在中国来说是更有效的。
In the past 5 years, Blue City has grown from a team of 7 people to a promising business with about 250 staff. Ma said the company earned over $15 million last year, mainly through advertising and selling virtual currencies to live streaming audiences. Now the company is expanding overseas.
我希望吧，通过我们的努力，Blue能够成为全球第一家在美国纳斯达克或者是纽交所上市的这样的同志互联网公司。
expose everything you won't admit.
And action! This entire video is based on a true story. When I do like motivational speeches or even tell myself like, love yourself and you should love yourself.
This is Lily Singh, but to fans all over the world, she's the YouTube star Superwoman.
What if everyone's a girl, Superwoman? I know we can change the world for the better, one positive day at a time. My parents now know what I do. They didn't know what I did for a long time in the beginning of my career. I was just making videos in my room. They had no idea. Mom, Dad, have you seen my keys? I can't find them anywhere. Because you're always on phone. Until someone called them, like a family member from another part of Canada was like, Canada, is your daughter making videos? And my mom was like, I don't know, Lily, are you making videos?
Just making videos grew into an entire career. Today, Lily's YouTube channel has some 12 million subscribers, over 2 billion views, and guest stars like Michelle Obama, Dwayne "The Rock" Johnson, and Seth Rogen.
I think a lot of young girls are raised to believe that you're gonna go to school and then graduate and then get married and then get a job and then have kids.
And Lily was on that path, all the way through a psychology degree at York University in Toronto. But when she started thinking about a career,
I started to immensely panic and think something was wrong with me because I tried to figure out my life and it wasn't working in that straight line.
it was 2010 and YouTube was only 5 years old.
I thought nothing of YouTube. I was probably the last person in my circle of friends to discover YouTube. And I remember when I did, I thought, this is so strange. There's people making videos in their rooms and other people are watching them.
So she figured, why not give it a shot?
I one day posted a video because I was sad and I wanted to be creative and happy.
She didn't know how to edit video or write scripts, so she winged it.
It was so bad and so cringe. And my expectation was literally nothing. I was like, I'm gonna put this video up, a couple of my friends are gonna watch it, probably make fun of me, and that's gonna be the end of this. The second and third video came from, wait, 70 people watched my first one, can I get 80 to watch the next one?
She kept creating, she kept posting, and the viewers kept coming. Lily had found an audience.
A lot of the comments were, oh my god, there's a brown girl on YouTube.
More specifically, Indian. Lily's parents immigrated to Canada from India, and Lily was born and raised in Scarborough, near Toronto.
My home life was awesome. My parents, even though I portrayed them to be quite strict in my videos.
Oi Lily, where's the rest of your skirt, huh? I teach you like this, to walk around like this, showing everything to everyone?
They actually aren't like that at all. They're pretty modern and pretty cool.
Your dress is short, don't know what for.
And were pretty lenient with me. I mean, I got away with a lot of things. I was a brat. I was a brat.
She had a different idea of what she wanted out of life than other kids. In a grade school graduation slideshow, her classmates said they wanted to be lawyers and doctors.
And then I came up and I was like, rapper.
Making out with your friends, man, but then you say that you hate hoes.
I could just feel my parents being like, why?
Because that's just not something women really did in the Singh family.
I know there was a ton of people that weren't happy about my birth being a female, so I think, and that's some real-ish, but it's a real thing. The best thing I could have done to prove to so many people that didn't want my mom to have a daughter was to become Superwoman.
What up everyone, it's your girl, Superwoman.
It was the name of Lily's favorite hip-hop song by Lil Mo featuring Fabulous.
I love the song so much because it was one of the only songs at the time that was an empowering female song, where Lil Mo's going on about like, I will save guys with my superpowers, and I will save girls with my superpowers, and I am the Superwoman. I thought, this name that I've had for so long that empowered me when I was younger, I'm gonna make this my screen name. Maybe this should be a new series.
Superwoman didn't just burst onto the scene overnight with a viral video. It was a steady climb fueled by hard work.
The moment that I thought this is going somewhere and this could be a career was the first time I performed internationally. It was in India. And it was the first time where I was truly across the world and people knew my videos.
Singh has transformed herself from a bratty kid to an internet personality to a media mogul. She starred in a feature film, A Trip to Unicorn Island, in 2016. And her book, How to Be a Boss, hit the New York Times bestseller list in 2017 while she was on a 30-city international tour. Lily started out with the goal of getting millions of subscribers and financial security.
Hurry the hell up!
But after surpassing those goals, success has new meaning.
I've really come to terms with the fact that my definition of success is what's the best legacy I can leave behind. And it's not the number of views and the number of subscribers. It is the number of people that can say, this girl changed my life or changed something in my life positively.
The cubicle represents a tyranny. It confines your imagination, your thoughts, into a small physical area. Imagine pretty much every software engineer or finance person being able to, disconnect from their desk and look at holographic monitors on a beach and doing their work from there. That's not going to be science fiction. It's the modern office place.
Silicon Valley is all about building the future. A startup called Meta thinks it's getting there first, thanks to a big bet that it's made on augmented reality.
How are you?
Good, thank you. Welcome to Meta.
Thank you.
Call it a 360-degree office where you can spatialize your thoughts as part of your workflow for education, architecture, design, engineering, etc.
People often mix up augmented reality with virtual reality. VR totally blocks your ability to see or hear the real world. AR overlays holograms onto what you already see. Meta has tried to make its version of the workspace feel familiar.
You grab the hologram instead of using a controller or a mouse, and your brain already knows how to do it. In other words, we've designed an operating system that humanity has always known how to use. So you can see this eyeball, which is, by the way, photorealistic. You can see my hand is occluding the eyeball, and now the eyeball is occluding my hand, right? You see those two circles? They get small, and then they turn into this glowing white ball, and then I can move my hand around supernaturally. I can do this with two hands and rotate the thing. I can stretch it. I can throw it back right into the shelving system, and that's all you have to learn to become a modern worker.
And to prove this, the employees at Meta have started to get rid of their computer monitors, trading them in for Meta's augmented reality headsets. Mayron thinks that in less than a decade, we'll all be just wearing strips of glass that can project holograms.
In the early 80s, everybody had computers on their desktop, but no one was using them because they had a lot of work to do. So they were still using typewriters. And at some point, the CEO took all the typewriters away and everybody was forced to use their computers. So it's very exciting to see a new generation of technology, a new paradigm.
I consider us like pioneers in the holographic wild. I'm pulling up my browser with my hands and sending out emails to colleagues and just kind of really acclimating to the new environment.
Now you're putting on my computer, essentially. Our digital lives live on our phones. We have all of our pictures and notes and all these kinds of things. So why don't you write yourself a little sticky note? I like it. And go ahead and just take your fist right over the top of the sticky note and close your fist. And now...
Oh, what? Meta's own transition to augmented reality has run into plenty of unexpected problems. And it's still going to be a while before you'll start to see these devices in your office. But I think it's a future worth waiting for.
If we could see these holograms between us, we will have been able to share our work with one another more naturally, more efficiently, and more productively than ever before. Humanity will have evolved slightly.
CTE is often found in the brains of deceased athletes, military veterans, and others with a history of repetitive brain trauma. Hundreds have donated their brains to the VA Boston University Concussion Legacy Foundation Brain Bank.
This is a former NFL player who died in his early 70s, and this is a veteran who also died in his early 70s.
Dr. Ann McKee dissects these brains.
The hippocampus and the mammillary bodies are very important for memory. I can see that they're slightly affected.
McKee recently dissected the brain of former New England Patriots player Aaron Hernandez, who was convicted of murder and later committed suicide.
You'll see right away that the brain is showing signs of shrinkage. You can see the crevices in the brain that you can't see in the normal.
McKee says Hernandez's severe case of CTE impacted his decision-making, depression, and ability to control rage and aggression. Right now, she thinks we're underestimating how many people have CTE.
We were able to distinguish between CTE and controls and CTE and Alzheimer's disease. The next question is, can we do this in the blood and can we do this in living people? And we aren't there yet with those answers.
But the need for a diagnosis in the living is motivating companies such as Quanterix in Lexington, Massachusetts, to work faster on technology that could diagnose concussions and CTE in as few as 30 minutes. Kevin Rosovsky is the CEO.
It's like a high-powered microscope. And so by doing that, we can see little biomarkers that you couldn't see before in the blood.
Quanterix received a grant from the NFL and just went public. Since then, its stock is up more than 40%. The company sells a machine called Simoa for $175,000 to other biotechs, hospitals, and researchers.
And for the first time in history, we're able to see brain health in blood, and that's a major breakthrough, and that's leading to less invasive testing, and we've already been able to see evidence of concussions, and there's the beginning evidence of being able to see the accumulated effect of concussions.
Quanterix is also trying to detect Alzheimer's disease, multiple sclerosis, and ALS. Rosovsky says he thinks diagnosing concussions will be easier than diagnosing CTE.
Diagnosing CT in the living probably is a couple years away. We're real excited to see the progress, but reducing some of that work into actual tests in a laboratory takes time. There's regulatory approvals. There's a lot of red tape that you have to go through.
Also in this race to diagnose CTE in the blood are Athlon Medical and Exosome Sciences. And New York's Mount Sinai Hospital is scanning for the disease in the living. But it's just one step in a series of questions for those with serious head trauma. There's still no cure for CTE.
Even if we had a great idea for a treatment, there's no way to test whether it's effective or not. So that's the enormous advance that we'll get if we can develop a biomarker for this disease.
In Boston, Ann Mostu, Bloomberg News.
don't write about cars for a living without meeting some pretty interesting characters. So I'm circling back and getting cozy with some of my favorite automotive aficionados. We'll talk shop, luxury, and passion in a new series I call Crossing Lanes.
Well, good to see you again. It's been a couple of years, right?
I think a couple of years, yeah. Thanks for having me back.
Yeah, there's a few new things. I brought something I think which could not be more Americana. This is a 1958 Imperial. Just the epitome of American optimism that post-war, we won World War II, now we started a space program, all cars had fins and the Jetsons was coming on TV.
How many feet is this car?
I don't know. People lose count after a certain number.
20 feet.
Yeah. They're sort of like dinosaurs from another era. This would sort of be the demographic car that I think the average TV viewer would remember. I mean, look how much room there is in this car. Just hilarious. I love how huge the gauges are, like giant high plates. This was considered safety. This
Padded with leather.
Yeah, no great hurry to be safe. And the way you start is you turn the key and then you hit the neutral button. Everything is push button.
Yeah, people think that's a new car thing, but actually,
No.
old car.
If you can type, you can drive. Press the button and you pull away. How many cars can you cross your legs in the front?
I mean, none, except for this. And I'm tall, too.
Comfortable car, isn't it? You don't get all wind blown.
You can have a conversation, even though we're so far apart.
You wonder how many 16-year-olds took their driver's tests in these big stupid
I
things.
mean, what about the parallel parking section?
Don't
that
even
would
think
be an
about
issue.
parallel parking.
So, what cars did you grow up idolizing when you were a young kid?
You know, when you grew up in a little town in New England, anything with less than 4 doors might as well have been a Ferrari. Nobody had cool cars. I was 9, 10 years old. I was riding my bicycle up a hill and I saw an old man polishing a 1951 Jaguar XK120, and I was fixated. He said, "Come on over, you want to sit in it?" It was unbelievable. I'd never seen anything like that. You have to remember, back in 59, 60, most car magazines were black and white. You didn't really get the sense of speed or excitement or anything from it.
Who taught you how to drive?
So many houses had abandoned cars in fields. And there was a 2CV in a field near my friend's house. And when we were kids, we'd go over there and work on it. And we got it running. And we were just driving around the fields all day. And our moms, you know, would sit at the kitchen window and watch us. Okay, I did all right.
Once you finally started making some real money, what did you finally buy as a special car purchase?
Well, the first car I bought when I came to California was my 55 Buick Roadmaster, which I still have. I got off the plane, I had no place to live, and in California, you need a car before you need a place to live. So I bought the 55 Buick for $350, and I lived in that, I slept in it, I met my wife in it, I got married in the car, drove the car to my first Tonight Show, and I still have it. That was a special car.
How would you define a luxury car?
Nobody does luxury like the French. The French put a premium on comfort while driving. The cars don't appear to be ostentatious or flashy, but they're exceptionally nice to drive and very, very comfortable. We Americans tend to confuse luxury with crashed, garish. I mean, look at Trump's apartment. Is sitting on a gold chair really comfortable? No, it's not luxury at all. It's like Oscar Wilde, you know, the price of everything, the value of nothing.
Have you ever paid more than you thought you should for something that you bought?
No, all I've done is buy too early. Now, I see a lot of people, they buy something because they immediately think they're going to make a lot of money on it. Then when they find out it's not worth as much as they thought, now they hate the car. The most important thing is buy what you like.
Yeah.
And then worry about the price later. I don't mean that from like, oh, I'm so rich.
No.
Better off you pay a little bit more and buy something you truly enjoy.
Yeah.
You know?
If you were 21, 22, 23 now, would you still get into the business?
I always like telling stories and doing comedy. I mean, I always like talking to people. So, yeah, I think that I would. You know, my dad sold insurance. And he became manager. And once a month, to motivate the men, he would put on some kind of goofy show, or he'd play like the Sinatra song, High Hopes, and he'd juggle. And so I thought, well, maybe I'll sell insurance because you get to do a show once a month.
That is very interesting.
Yeah.
I love that.
Well, Jay, it's been so great talking with you.
Yeah, it's always fun when you come by. We have fun. We have a good time.
Yeah.
And let's continue motoring.
Motoring. That's the proper term.
Mumbai can overwhelm you. For Indians, it's both New York and LA, Hollywood and Wall Street. It offers the sensory overload of the world's second largest country and intricate traditions crafted over millennia. It's a lot to take in if you only have a few days on this colorful but chaotic peninsula. I'm Nikki Eckstein, travel editor for Bloomberg Pursuits, and I'll show you how to make the most of Mumbai. India is outpacing a slew of Western destinations to become the world's 6th largest business travel market. And the Oberoi, a sleek oasis in the middle of all the action, is perfect for business travelers.
Good afternoon, welcome to Oberoi Mumbai. Nice to meet you.
Thank you. The staff is extremely thoughtful and detail-oriented. Hi.
Ma'am, welcome to the Oberoi. It's very refreshing in a weather like this. Why don't you have a sip?
Nowhere else have I been greeted with personally embroidered napkins and customized suites. Plus, the rooms are spacious, with comfortable beds and large work desks. Across the peninsula, you'll find the Gateway of India, Mumbai's most iconic monument. Though the city name was officially changed in 1995, most locals still call it Bombay. And just behind the Gateway is the Taj Mahal Palace, the city's most impressive hotel. If the Oberoi is all brains, the Taj is all beauty. As you wander the halls, you can feel the weight of Indian history, from the colonial styling to the modern-day masterpieces lining the hall. All the traffic and bustling markets in Mumbai can be dizzying, so yoga near the stunning pool offers a welcome respite.
Experience the luxury of this morning, so you can experience the complete vitality throughout the day.
When it comes to business dinners, head straight to the table, around the corner from the Taj. It's classy without being pretentious, and quiet enough for deal-making. That may be why the locals are obsessed with this spot. The menu is more trendy than traditional, with knockouts like sweet and sour Brussels sprouts and yellowfin tuna tataki. Plan to eat dinner late. 9 p.m. is standard. If you have a day off, escape the clamor of the city by hopping a ferry to Elephanta Island. Eventually the city fades, and a sort of inner calm sets in. You'll be surrounded by sweet Indian children who toss snacks to flocks of seagulls that trail the boat. You can also hire a speedboat for about $500 to cut the journey from an hour to 25 minutes, but you'll miss the local color. On the island, you'll find a path with about 1,000 stairs and a handful of feisty monkeys. It leads to a series of amazing 5th century caves, lined with relief sculptures dedicated to the Hindu god of Shiva. If you can't make it across the water, you can stay right in the middle of Mumbai where there's plenty to see. Stop by a street-side coconut vendor. They're everywhere. And if you're still jet-lagged, the electrolytes will help. One of my favorite hole-in-the-walls in all of Mumbai is Shri Thakur Bhojanalaya. There's just one choice here: bright and flavorful Gujarati thalis, which are like all-you-can-eat sampler platters. The restaurant was passed down from father to son, and the son is very enthusiastic about his locally sourced cuisine. Since India has gone cashless, ask to add a 10% tip before settling the bill. You can also charge tips for bellhops and housekeeping back at the hotel. After lunch, hit the streets and find the perfect piece of India to take back home. D. Popley & Sons is a family affair where the owner keeps the real jewels hidden in the back room. The owner's son designs many of the pieces himself and sources the rest from Jaipur. Antiques are huge in India, but you can't take anything that's more than 100 years old out of the country. You can, however, pick up carved elephants and crystal drawer pulls salvaged from Maharaja palaces at Essages, just next door. Nearby at Phillips, I also found beautiful folk art figurines and an amazing vintage photo collection. For clothing, there's a great spot called Bungalow 8, hidden under the bleachers of Mumbai's biggest cricket stadium. It's tricky to find, but you'll be rewarded with the prettiest kaftans and block-printed scarves, all arranged by color. But back to business. If you have one last deal to close, head to Bombay Canteen. The menu is an ode to India's regional recipes and native ingredients, like red snapper ceviche in a kokum broth or Kashmiri lamb. And don't miss a drink at Air, the rooftop bar at the Four Seasons. Guest bartenders shake up some of the city's best sundowners. Go to make one last impression with colleagues. Or let Bombay make one last impression on you.
With SUVs growing in popularity, it only made sense to get some on this show. So in this review, we're going to compare 3 of the best rated luxury SUVs on the market. This isn't going to be easy. We've got our hands on an Audi Q5, a Porsche Cayenne GTS, and a BMW X5. I've decided to spend a day in the Hamptons with each of them to get an in-depth look. Now this is the Q5, it's Audi's mid-size SUV, and it starts at about $41,000, which is way more affordable than the other 2 cars that we're looking at. This is kind of like the iPhone of luxury SUVs. It's designed so well, but it's also affordable within the segment. This is a 4-cylinder, all-wheel drive, 7-speed automatic with paddle shifters, 252 horsepower, and there's no lag. Immediate power, immediate response. The minute you step on the gas, you're there. Q5 has by far the most futuristic interior of the 3 cars. It's minimal, it's clean. The sunroof spans the entire width of the ceiling. It's really cool. There's plenty of room for 5 adults, lots of headroom, but this is the smallest car of the ones that we're testing. The trunk is 29 cubic feet, which is in the middle of our range. A family on a trip might have trouble fitting everything in. There are other cars that are more powerful, that look more distinct, but it's also really affordable, and Audi has really kind of hit a sweet spot. So how did it add up? The immediate response really made me feel in control. The horsepower was a little weaker at 252, and the 22 mile per gallon means that this is in the middle of the road. Looks-wise, it was a bit conservative. It's the smallest of our 3, but with a sleek interior. And the pricing is the best at $41,000. Now this is the BMW X5 Hybrid. That means it gets 56 miles per gallon combined between the electric motor and the conventional engine. This car starts at $62,000, so it's right in the middle of our group. The electric motor and the engine switch off depending on what drive mode, how fast you're going, all of that. What you won't find out from the stats on the website is how big this car feels when you sit in it and how small it drives. It's a nice balance. So the interior, it's not as fun with the combined electric motor. It was sporty without being over-aggressive. The roomiest, but with a toned-down interior. And at $62,000, it's mid-range for our selection. Now the third car in our group is the Porsche Cayenne GTS. This is a higher-tuned version of Porsche's Cayenne, and it starts fittingly at $97,000. That's by far the most expensive of any car of our group, and it's also the most powerful. Porsche was among the first of the luxury car makers to introduce an SUV. It really sets the standard for a lot of things. The engine here is a 3.6-liter V6 twin turbocharged engine, 440 horsepower, almost double the horsepower of the Audi, 443 foot-pounds of torque, and you definitely feel it when you push the gas pedal. The thing that you notice are the buttons and levers and knobs and vents. So if you're someone who likes this cockpit stuff to play with, you're gonna love this car. This trunk was actually the smallest at 24 cubic feet, but after you put the seats down, you'll get by. It drives fast, it feels really luxurious inside, it's really striking to look at, it just costs a lot of money. Okay, this car was the most powerful. 440 horsepower, 434 foot-pounds of torque. Unfortunately, only 19 miles per gallon combined. This is a true sports car in SUV form. It had decent space and the interior was loaded with gadgets. But the downside, I'd say, is price. $97,000 means this car will dig deep into your wallet. The luxury SUV segment is a competitive field. There are a lot of really confident players, and these 3 are all excellent vehicles. However, after 3 days of driving, I felt the BMW checked the most boxes in terms of performance, agility, style, and value. Was it the fastest or the most powerful? No. But it was the most versatile while moderately priced for a luxury SUV. With the largest interior, the most visibility, and the fact that it's a hybrid with a 56 miles per gallon rating, that just pushes it over the edge. This car has a great value and anyone would be happy to have it.
The perfect sports car should combine sexy good looks with nimble steering, aggressive power, and a high-quality cabin. It'll be expensive, but not so pricey that it's out of reach for everyone. Porsche, Mercedes, and Jaguar have 3 of the top sports cars on offer today. But which is the best for you? Let's get the numbers out of the way. All 3 cars have impressive stats. The Porsches come just slightly behind the Benz and the Jag, but each is a thrill to drive in its own way.
This is the 2017 Porsche 911 Carrera Cabriolet. The engine in this is a 420 horsepower, 6-cylinder boxer engine mounted in the rear. This is Porsche's famous engine.
It's difficult to describe the feeling when you get behind the wheel. This is where that mystical Porsche X factor comes in. The rear-wheel drive on 20-inch Carrera S wheels and Porsche torque vectoring grip the road better than any other model in our group. The AMG GTS is faster and more fun to drive than any other Mercedes. I think it feels like a rocket ship.
This car has a lot to offer. It has that amazing V8 engine, it has the horsepower, it has the torque.
Of course, if you're not careful, the rear-wheel drive AMG will fishtail forward with a mind of its own. That said, it's amazing in a straight line. This is the 2-door coupe Jaguar debuted in 2015 as a way to get back in the game. And the company did it with flying colors.
The handling is great. I mean, this car is so perfectly balanced. It's really a treat to drive, especially on windy roads.
The torque that you feel when you drive it is the most impressive of the group. But it's not as connected to the road as the 911, nor as smooth as the AMG. It is tight when it comes to steering and braking. The 911 is eminently recognizable, yet after all these years, it still impresses. The front end is flirtatious, the rear is muscly, and the headlights are friendly. This is Mercedes' bad boy halo car meant to recall the glorious Gullwing SL that Mercedes made in the 1960s. The idea is that its sexy allure will attract young new fans to the brand.
This is the car you want to get to make a really loud statement.
The Jag is all muscles and roar, punched up at the seams like a football player. If you kind of like a hunky mass of metal and gears under your foot, this one is the car for you. Porsche was the first sporting brand to introduce the PDK paddle shift technology, which is quicker and better for city driving than the manual. There is also a back seat in this option, something the other 2 don't have.
Now, I don't know if you put anybody in that backseat except for maybe your dog or someone you don't like, but it is back there. You can use it in a pinch.
Inside, I loved how the Mercedes looks. It has crazy octopus-like round dials all the way through the center and the dash, and everything felt thick and rich. There is plenty to see inside the Jaguar. Lots of loud blue stitching, performance seats, and even a handle for the front passenger to hold onto for dear life. This is the least well done of our 3 when it comes to interior quality and design, but it's still pretty great. The bottom line? You can't go wrong with any of these incredible machines. But if you want the whole package at the best value, the 911 is the clear winner. Sure, it's not as aggressive looking as the AMG, and it has less power than the Jag. But its incredible connection to the ground, its cozy perfect German handling, its superior suspension, and its minimal but quality interior mean the 911 Carrera S Cabriolet more than stands its ground. word Ferrari, you probably think fast, sleek, or maybe risque. What you don't think is practical. And Ferrari is not the first car you think to take to pick up your Christmas tree. But that's exactly what I did. I drove a Ferrari GTC4 Lusso 2 hours outside of New York City to Barclays, a fourth-generation orchard and tree farm. I wanted to test out Ferrari practicality.
Welcome to Barclays Tree Farm. I'm Steve Barclay.
I'm Hannah Elliott.
Nice to meet you. Should go find your perfect tree?
Let's do it.
Excellent.
What kind of trees are these?
Oh, we've got Douglas fir and Norway spruce in here.
This looks great.
So this is the one,
yeah,
huh?
I like it. It's good.
Okay, let's do it.
There's not exactly enough room in the back for a tree, but the Lusso has all you need for this errand. It's a 4-seat hatchback that Ferrari debuted last year. Plus, the Lusso has something really helpful, practical even. It's higher off the ground than a standard Rari. Getting in and out wasn't the usual awkward struggle I often have with low sports cars. I would even call this shockingly drivable.
This is the perfect Ferrari for people who love to drive. And I know that sounds crazy because it's the hatchback Ferrari, but the thing about the car is it has a V12 680 horsepower engine on all-wheel drive. That means it has the beating heart of a Ferrari track car that will compete with anything from Lamborghini, McLaren, built into this package that is totally functional.
And an elaborate traction and stability system in the rear that Ferrari calls thrust vectoring. Basically, it smooths out the car's response to unstable conditions like snow, ice, or bumpy roads.
I mean, I had this buying holiday decorations at Target. We had the tree on the top. I had this in snow and slush and ice, and it performs so well.
Inside, the front feels like a very luxurious cockpit, which makes sense after all, the word lusso means luxury in Italian. The back is spacious enough for a couple of adults, and it roars from 0 to 62 in 3.4 seconds. Top speed is 208. So what gives? Why did Ferrari make a practical car? Well, to hold on to its most loyal fans. Now, there are rumors that Ferrari will unveil an SUV in 2018, but until then, it hopes to keep Ferrari customers in the family with the Lusso. So hang on, Ferrari fans. Next year, maybe Santa will leave a prancing pony SUV in the driveway. Until then, the Lusso will do. Wow, this is a Callaway Corvette Aero Wagon. It is the most powerful car made in the US, period. It's supercharged with the supercharger pushing up all the way through the hood. 757 horsepower, this car will go from 0 to 60 in 2.7 seconds, which is nuts. So let's put it to the test. I'm going to head out to Rockaway for lunch, and we'll see what this beauty can do. So Callaway, the very same name that engineers golf clubs, modifies these Corvettes. And in this Aero Wagon, the main upgrade is the supercharged engine, and it's so fast.
The fuel efficiency is 27 miles per gallon at speed on the highway. That's like prime optimum conditions, but it's still pretty incredible considering most cars with 757 horsepower get like 12 to 13 miles per gallon.
So the Aero Wagon part of the Callaway Corvette is totally new this year. It's a huge departure from what a typical Corvette looks like, and that's by design. The trunk is enormous, and that's what you're really getting by choosing to have this option. The interior is just like the regular Corvette that you'd buy directly from GM. It's very much like a cockpit. So the belt parkway isn't exactly the Autobahn, but I was able to get a feel for the strength of the supercharger, and I made it down to Rockaway Beach in no time flat.
Hannah!
The starting price is about $130,000. The money goes toward the engineering that makes this car so powerful and fast. But still, that is so much cheaper than what you might find at Ferrari or McLaren or Lamborghini. This can keep up with all of those cars, and it's far less expensive. Sometimes I don't trust love at first sight, not even when a car looks this good. So I decided to put the Tesla Model X through its paces for 5 days in the mountains along the California coast. I needed to know, was this just a crush or a lasting love affair? I first drove the $151,000 SUV briefly in Los Angeles last year, and at the time thought it was one of the best cars I'd ever tested. But a 340-mile road trip can make or break any relationship. One push of the button and the Model X will automatically route your trip according to where the superchargers line up. It probably won't be the fastest route, but you know you won't run out of juice. We were on our way. It was the start of something beautiful. The seats are situated high inside, but they're easy to access, even the back row. And the interior cabin is so quiet I could hear crickets chirping outside as I drove, with the windows up. The car has almost no body roll around corners, and it handled beautifully on a sandy beach. I will say that the battery gauge can be deceiving. It doesn't decrease at a stable rate, so you can jump down in range a lot quicker than you expect. We left this morning with a full charge, and we've been driving for 4 hours or so, so we're down to about 77 miles on the battery. So I asked the car to find us the closest supercharger, and we're driving there now, and we should get there in about 12 minutes. Turns out I had some major time to kill. Hey, Grandma. Oh, nothing much. How are you? Back on the road, I could focus on the feel of the all-wheel drive, test the 3.2-second 0 to 60 mile per hour sprint time, and the 762 equivalent horsepower. It feels really fast when you push down the gas pedal. The brakes are regenerative, so you have to get used to their different feel. I never really did. And the automatic front doors can be tricky. They open when you least expect it. At the end of this trip, I realized the real question here is not, should you buy this car, but do you want to join the electric lifestyle? You really do feel virtuous when you drive it. No fossil fuels here. But owning an electric car saps your time and energy if you're not deliberate about charging. It makes it harder to be spontaneous and free. And you have to be okay with giving up the raw, pure feeling of driving a mechanical car. But if you are that kind of driver, the kind that wants to be on the cutting edge of luxury and technology, you're going to fall in love.
The season is upon us, and everyone, including me, is thinking about what to pour for all those holiday gatherings. Hi, I'm Aileen McCoy, here to talk about the holidays and wine. I've picked 3 under $30. Yes, $30. The first wine is a white. It's the 2016 Abbazia di Novicella Kerner, and it costs only $20. Kerner is an exotic white varietal, but what you really need to know is that it translates into deliciousness. This wine is also from an unusual varietal, and unusual, obscure varietals are really in right now. It has fantastic aroma. It has lovely zingy fruit flavors, which are very bright and crisp, so that you feel the wine is bigger, richer, and will go with something that is really quite serious in terms of food. Now we're ready for the red. It's the 2014 Chateau Cartier from Saint-Emilion in Bordeaux, and it costs $27. Classic Bordeaux's do not all cost $100 and up and have to be aged for decades. This is made from 100% Merlot. It's ready to drink right now. Let's taste. It has lovely plum and cassis aromas, just the way a Bordeaux is supposed to, and charming fruit that's really delicious, along with silky tannins. Because it's so fruity and easy to drink, it will go with everything from roast turkey with dressing to a juicy prime rib, and it's perfect for white wine snobs to sip at a cocktail party. Now for the best, the sparkling wine. This is the Schramsberg Mirabelle Brut from California, and it's only $25. It's a blend of Chardonnay and Pinot Noir, and it was aged in 19th century caves on Diamond Mountain. Now let's top the cork. Bubbles are essential for the holidays and look festive in a glass. The smell of this wine is like just baked brioche, and the flavors are lemony tart and so refreshing. Keep a few bottles in the fridge for when friends stop by or when you need to perk yourself up while you're cooking. Cheers.
you hear the word Ferrari, you probably think fast, sleek, or maybe risque. What you don't think is practical. And Ferrari is not the first car you think to take to pick up your Christmas tree. But that's exactly what I did. I drove a Ferrari GT C4 Lusso 2 hours outside of New York City to Barclays, a fourth-generation orchard and tree farm. I wanted to test out Ferrari practicality.
Welcome to Barclays Tree Farm. I'm Steve Barclay.
I'm Hannah Elliott.
Nice to meet you. Should go find your perfect tree?
Let's do it.
Excellent.
What kind of trees are these?
Oh, we've got Douglas fir and Norway spruce in here.
This looks great.
So this is the one,
Yeah,
huh?
I like it. It's good.
Okay, let's do it.
There's not exactly enough room in the back for a tree, but the Lusso has all you need for this errand. It's a 4-seat hatchback that Ferrari debuted last year. Plus, the Lusso has something really helpful, practical even. It's higher off the ground than a standard Rari. Getting in and out wasn't the usual awkward struggle I often have with low sports cars. I would even call this shockingly drivable.
This is the perfect Ferrari for people who love to drive. And I know that sounds crazy because it's the hatchback Ferrari, but the thing about the car is it has a V12 680 horsepower engine on all-wheel drive. That means it has the beating heart of a Ferrari track car that will compete with anything from Lamborghini, McLaren, built into this package that is totally functional.
And an elaborate traction and stability system in the rear that Ferrari calls thrust vectoring. Basically, it smooths out the car's response to unstable conditions like snow, ice, or bumpy roads.
I mean, I had this buying holiday decorations at Target. We had the tree on the top. I had this in snow and slush and ice, and it performs so well.
Inside, the front feels like a very luxurious cockpit, which makes sense after all, the word Lusso means luxury in Italian. The back is spacious enough for a couple of adults, and it roars from 0 to 62 in 3.4 seconds. Top speed is 208. So what gives? Why did Ferrari make a practical car? Well, to hold on to its most loyal fans. Now, there are rumors that Ferrari will unveil an SUV in 2018, but until then, it hopes to keep Ferrari customers in the family with the Lusso. So hang on, Ferrari fans. Next year, maybe Santa will leave a prancing pony SUV in the driveway. Until then, the Lusso will do.
The design of this soy sauce bottle goes back to 1945 in Japan. A teenager named Kenji Ekwan had witnessed the aftermath of the atomic bomb falling on his hometown Hiroshima and was mourning the loss of his sister and father. After seeing the devastation, Ekwan's path changed. He first enrolled as a Buddhist monk, following in the footsteps of his father, but instead he decided to become a creator of things and bring happiness to people. As a young designer, Ekwan got a contract to design a tabletop soy sauce bottle for food company Kikkoman. Soy sauce is a must for Japanese meals, but it was originally sold in big bottles that were hard to hold. It took Ekwan 3 years and about 100 prototypes to complete the design in 1961. The result is a small glass bottle with a narrow neck, a shape reminiscent of traditional Japanese sake flasks. It allows you to see how much sauce is left. It's stable on surfaces and comfortable to hold. The inward angle of the tip of the spout is also perfect at preventing drips and controlling flow. The design of the little soy sauce bottle was just the start of Ekwan's great journey. He also went on to create other icons of Japanese design. In Japan, Ekwan has become almost as recognizable as his bottle, and 50 years later still appeared in commercials for the soy sauce. Today, the bottle can be found on the tables of homes and restaurants in more than 100 countries. And in 2015, the bottle was even exhibited at the Museum of Modern Art in New York. Simple but elegant, this is the design made to create a small moment of happiness.
without you even knowing it. The design of this shoe starts in Oregon in 1981 and with a man called Tinker Hatfield. He was an architect for Nike, hired to draw up offices and showrooms on the company's campus. After making a statement on the outside of the buildings, he was asked to join the designers on the inside. In a race to develop sneakers, a former NASA engineer had recently introduced the idea of sealing air bubbles in the soles for extra comfort and performance. But competition was fierce, and Nike still needed an edge. Hatfield headed to Paris in search of inspiration. While he was there, he visited the Pompidou Center, a radical building famous for its inside-out design, which exposed the building's components, like escalators and heating pipes, for everyone to see. Hatfield decided to apply the same principle to his own design, revealing the inner workings of his shoe by making the air cushioning system visible. The marketing team thought the air bubble would seem like a weakness, but the Nike Air Max 1 was an instant hit when it launched in 1987. Originally, pairs sold for $75. Now they go for double that. Today, Tinker Hatfield is one of the most successful shoe designers in the world. He even created those legendary self-lacing sneakers of Back to the Future fame. Stylish and innovative, this is the design that stayed one step ahead, simply by being turned inside out.
London, it's easy to recognise. But look closely at a map. In the very centre, there's a 1 square mile cutout. This is the City of London, which lives in a city named London. The city has its own mayor, laws and police force. In fact, it behaves more like a separate country within the United Kingdom. This is because the city's been around for much longer than the UK. It was built by the Romans and has remained semi-autonomous ever since. To embody its fiery independence, the city's emblem is a dragon, not a bad choice. You'll spot these statues. They guard the boundary of the square mile. Nowadays, the city's arguably the financial capital of the world. And London is the world's biggest foreign exchange market. But the city has a tiny residential population. Every weekday, workers flood into the banks, law firms and offices which fill the square mile. But it's not all work. This is 1 p.m. You might say no surprise here, city workers having a drink, but attitudes are changing. The legendary long lunch at the pub is now seen as a bit of a macho relic. In 2017, Lloyd's of London, the legendary insurance market, told its employees the party's over. No more drinks during office hours. But as you can see, not everyone got the memo. Because here's the rub of it. The city had a bit of a reputation. When the after-work crowd go home, the place becomes a ghost town. But that's changing, and leading the way are some high-flying dining spots. Sitting on top of the Heron Tower is the Duck and Waffle. It offers 24/7 service with a hell of a view. This is about as refined as a 24-hour Waffle House gets. But the most talked about new guest, who's reinventing the city's reputation, is called the Ned. Over £500 million has been spent turning this old bank into a private members club and hotel. With 8 restaurants in the lobby and a bar that stays open till 4 a.m, the Ned's injected some late-night atmosphere into the city. This is, after all, the oldest part of London. And following an injection of fun and flavour, it's throwing down a challenge to the rest of the city and shaking off its stuffy reputation.
There's an inherent attraction to light and being human. And I think on a very deep psychological level, light is this way in which we experience the energy surrounding us in a very personal manner. My name is Matt Dilling. I'm the founder of Light Bright Neon Studio, and we manufacture, produce, and restore neon works of art and design. Origins of the creative content of a lot of the work at Light Bright comes from a variety of sources. Sometimes people come with a napkin sketch, some people come with an Adobe Illustrator file, and we have a whole design team who then we kind of work together to help create layouts of what it might look like. Scale it up and create a paper template using a pen plotter. And that paper template actually becomes our guide for what we're going to bend the neon to. We take from the office into the glass shop. We pick out the right size tubing with the right color for the right size project. From there, we heat up the glass tubing. The torches heat the glass well in excess of 1,000 degrees in order for it to get into its molten state. We heat up and bend the glass tubing to match the template. One of our chandeliers has over 100 different bends in it. So each one of those bends has to be marked for a heated up bend. We also have to allow the glass to cool between the bends so that the next area can be worked on and heated up in its own unique fashion. It turns into spaghetti, and then we have to make sure that that spaghetti lines back up and cools to the template. We use a blow hose to connect our mouth to the tube, create a volume that's closed, and we can control the pressure in there with our mouth. There's just a variety of challenges that come up inherently in working with glass. Glass can crack due to stress, and sometimes you'll just have a batch that all it wants to do when it gets near a torch is crack. After we've bent various components, we have to go in using the crossfire or the hand torch and actually weld all of those pieces together. The last step on that is then to weld on electrodes onto either end. Each one of those steps is very, very specific. I draw inspiration from so many different experiences. It's hard to come up with one thing that's particular, but one of the ways that I really am able to connect with the creative is to float. Floating is a similar experience to meditation, to psychedelics. Going into a blackened room and laying out in a body of water and salt that's heated to your body temperature, and it allows for all sort of external stimulation to fall away. And your internal world really begins to bubble up and manifest. You really get to experience a different relationship to your mind. I think I work with neon because I can't not work with it. It's so challenging and so rewarding. And those things are so intertwined that there's no way of separating it out. I learn so much and continue to learn so much by working with it. I find so much inspiration in working with it, and I just continue to experience new and different things through the medium. It's that close to me at this point. Once the neon tube is completed, we have to hook it up to our manifold for bombarding. The manifold is opened, a vacuum is drawn. We check the tube for leaks with our Tesla coil. We close the tube back off, and we heat it up using a very large and powerful transformer. As the tube is heated up, it releases anything that's not inert inside the tube, and we evacuate that out. We introduce the gas into it, and we seal seal the tube off, sealing into that tube whatever gas we introduced into it. I think my favorite part of making a neon light is when you see it lit up for the first time. Different gases, when electrified, emit different wavelengths of light. Neon gas is this very bright orange, fiery red color. Argon gas creates a very intense blue, but that light output that is produced can then be expressed in a different wavelength by coating the inside of the tubes with a phosphor coating that takes that one wavelength of light and emits a different wavelength. We bring it over to the aging table where we hook it up to an age-in transformer and allow it to settle, age the gas in that we've introduced to it. There's always a stray particle of something left inside the tube. But that time that the oxide coating can act to scrub whatever is left inside the tube while things are getting settled into place. Once the tubes are aged in, we move on to our process of assembling two halves of the fixture together in a jig, gluing up the center of the fixture to its spindle. Once the adhesive dried, we would connect the wires from the fixture together into a transformer, and we turn on power and it lights up. Part of what we love about what we do here is that we try and put out into the world the kind of things that we'd like to see. I still am surprised when it lights up. I'm still excited when I get to see it illuminated. There's an ineffable quality to it. To me, it is this insight into the inner workings of the universe. It literally is. It's a way of looking at what is surrounding us in the cosmos in a new light.
like an addiction. You've got to make something, you have to do something. It's borderline obsession. And every bike we build is my favourite bike at the time, and as soon as it's done, I want to build another one. Sven Cycles is something I've been thinking about ever since I started cycling in my late teens. We want bikes that ultimately you'll really enjoy riding. There's never a bike that's the same. There's always a slight change. And as we build them individually as well, they have the marks of a bike that's built by hand. Most people I know cycle have an idea of their dream bicycle. And it may be an evolving idea you've had in your head. And we've worked with a lot of people that have come to us with sketches and scrapbooks. It's really, really nice to build something that's just one-off and unique. I think a lot of people see a bicycle as two wheels and a frame in the middle. There are a lot of subtle changes and nuances in design which can change the riding characteristics quite dramatically. I'm a really big fan of modernist architecture, and the simplicity of a modernist building is really hard to achieve. And with some of our bikes, they may look very simple, but I think people should not underestimate the time and effort that goes into designing a product. Tubing is key to a bike's feel and ride. Reynolds tubing has been in my life ever since I can remember. Growing up, I could never afford a frame manufactured with their tubing. We can now put a badge on our bike saying manufactured Reynolds, which is a sort of thing as a kid I just wouldn't have believed was going to happen. Every part of the bike has a specific tube. It's not universal. The first thing we do is get the tubes out, check they're correct, check the wall thicknesses, sand the edges, make sure it's all really clean, because if it's not clean, the tubes won't join together correctly. We build in steel because I still believe it's one of the best materials to use. It's been used in bikes since the late 1800s, and they're still using it now for a very good reason. It's the flexibility that we can replace the tube, repaint the bike, and you wouldn't know it's damaged. I just like working with it. It's very sculptural. This isn't sort of aerospace precision engineering. It's a steel rule and a marker. So when we're cutting the tubes, it's within a mil or two. But what we're trying to do is take the best from bicycle building in the past and add a little bit of modern flair to it. There's various techniques for building bicycles. We do a thing called fillet brazing, where you connect a pipe together. We use a bronze rod and a flame. We heat the tubes up to the same temperature and we fill the joint with bronze. And it gives a very, very sort of fluid, lovely, sort of quite sculptural feel. You've got to practice, you've got to be able to judge material temperatures, you've got to just look at it and you just get a feel for it. It's a stage where your tubes start to look a bit like a bicycle. My father's a jeweller. He'd make sort of very pretty things, which are lovely, but for me, they don't really have any function. What I love about bicycles, you can start on a Monday with a box of tubes, you can be riding it by the weekend, and it can last you for the rest of your life. Outside of the frame and forks, the other most important part is the wheels and tyres. When you build the wheels, you have to lace them, so there's little holes going all the way around the rim. You poke the spoke through. We do build all our wheels by hand here because a machine can't get 30 years worth of wheel building experience. Colour is very, very personal. With any of our bikes, you can have them painted whatever colour you want. We've matched one to a teapot, so we can get that scanned and we can match that, or someone's favourite item of clothing. I like to let the bike sit for 4 or 5 days minimum, just so the paint can have time to cure a little bit, and then we assemble it. We get out all the new components and it's a case of putting them together. Some bikes you can assemble in 3 hours, some will take 3 days. And we've built bikes that cost in the £10,000 plus mark. Some people, they're saving up and this is their bike and they're going to own it for the rest of their lives. So we just want to make sure they get the right thing. I think the bike for me was the first time I had some freedom. So as soon as I had one, I was off. A lot of people still get that thrill as when they were a kid blasting down a hill, wind going through their hair. It's fun. Everyone has their favourite jacket or something that just makes them feel good. If you've got a bike that fits well, you actually feel part of it. Building bicycles as a creative outlet is fantastic. It's not something you do because you're going to get a big paycheck at the end of the day. You do it something you have a passion for it.
If you ever saw a wooden surfboard, it was probably hanging in somebody's house or underneath the deck. But kind of in the last 10 or 15 years, wood has made a big comeback. They surf wonderfully. It's beautiful and it feels great to be on one of them. I always had a love for wood and kind of passionate about things that went in the water. I've kind of been around wooden boats most of my life. There's just so much character. The way they're built, the stories that come with them, a lot of that has translated over to why we build surfboards the way we do. When we first started thinking about building surfboards, wood was the natural material we chose. They have a very high strength to weight ratio. Wooden surfboards have the longest history of use in the surf world than any other material. People have been surfing wooden surfboards since kind of the first documented history of people riding waves. The board starts in CAD, where we take a 3D model, break down the shape, and kind of create frames and templates and all the inner parts of the board that we get cut on a CNC machine. We take those frames and we just pop them out, assemble the frame into kind of a skeleton. We go out to our lumber shed, pick a bunch of cedar, and bring them into our mill shop, put glue along the edges, clamp it all together into a panel. Everything's book matched, you have symmetry in the colors and texture of the wood. Cut your outline. Take our assembled frame, gently put it down right on top of the plank. Once that foundation is started, you're basically building up the three-dimensional shape, the outside part of the board, using lots of strips that kind of interlock and fit together. Every piece of wood is going to be different, and it's all going to react differently. There are frustrations with it, but I think that's one of the things that keeps it challenging. You learn to read the kind of what the grain lines are doing and what the color of the wood is telling you. Once those rails are cleaned up, we put our top planks on. It's a little bit like putting a lid on a box. It's like, this is it. Whatever's inside that board is staying inside that board. And by tensioning some rope, you can clamp the two together. It's like a time capsule. What makes our boards unique are they are built right here in York. They're built using material that grows right here in the state of Maine. They're built 100% by hand by local craftspeople and surfers. There's a lot of time that goes into these boards, between 40 and 60 hours start to finish. We wanted to build surfboards that were as hollow as they could be, but still be strong enough to work well. Too light and they don't surf well, but too heavy and they don't surf well. So there's a balance point there, and that's where we try to be. Taking the board off the rocker table once the top has gone on, that is by far one of my top favorite parts. It's just you and a shaping stand, a board, and a hand plane. Everything else is out of your view. It's simple, it's pleasurable, it's quiet. You can be with your thoughts and you can just kind of be present. There's something about taking a nice sharp edge tool to a beautiful piece of wood and feeling the curls coming off and knowing that every pass that you're making, you're kind of getting it closer and closer to what you have in mind. Once we've shaped it down and the board's looking like it's supposed to look like, time for it to go into the glassing room. 4-ounce fiberglass, laying it over the board, draping it over the edges, cutting it, applying epoxy, and on the board. Once both sides are lamb coated, it's time to put in the hardware. Drill and router and install the fin box. And on the other side, we drill and put in the leash plug and a vent. There's a lot of air just naturally inside the board, and that air wants to expand and contract with temperature changes. And that vent has a little piece of Gore-Tex fabric in it, and it allows air to kind of breathe both ways, but it doesn't allow water to get in. Once all that hardware is put in, it goes back into the glassing room. We brush a nice, beautiful, thick coat of epoxy over the whole surface, and that we call a gloss coat. That's supposed to look beautiful and glossy and shiny and flawless. You get to see that board come to life. Whatever the colors in the wood, they really come out. It just makes it look like candy. You just want to touch it and run your hands down it, and it's just kind of the icing on the cake. Once everything is hard, we put it into what we call the oven, get that epoxy to cure, really kind of bake it, and just get it to harden. Put in the fin, screw in the vent, and ship it out. We just love the idea of building something that's sustainable and long-lasting and made by hand. Kind of gives you a deeper connection to the product over something you might buy on a shelf. When a customer gets the board, they feel it. They 100% feel the amount of work and the amount of passion that went into the board. So I'm not really looking at hours and efficiency. We're looking at like doing it right and enjoying it as we go.
This Little Trees car freshener goes way back to 1952 in Watertown, New York, and an unhappy milkman who's complaining to one of his customers about the bad smell of spoiled milk. Lucky for him, he was talking to Julius Salmon, a Jewish chemist who'd fled from Nazi Germany and spent time living in the forests of Canada studying the aroma of alpine trees. After his chance encounter with the milkman, Salmon started to create paper soaked in natural pine oil. A string was also attached to stop people getting the perfume all over their hands. The freshener was originally in the shape of a buxom pinup girl, but Salmon changed his design to the pine tree we know today. This allowed the cellophane wrapper to be rolled down slowly, so the fragrance would last that little bit longer. As the automotive industry took off, so did Little Trees, filling the air with classics like Black Ice, Royal Pine, Vanilla Roma, and of course, New Car Scent. Fragrant and affordable, this is the design that brings you the heady aroma of a Canadian woodland, whether you're in a milk cart or a taxi cab. The design of this bottle started in Terre Haute, Indiana in 1915. At the time, Coca-Cola was being sold at soda fountains, or in a glass bottle called a Hutchinson. But this simple, straight-sided bottle was easy to copy, and imitations were flooding the market. The solution? A national contest for a new bottle that would make Coca-Cola stand out, even if the bottle were broken or you touched it in the dark. The Root Glass Company got to work on their competition entry, looking up the word coca in the encyclopedia, and coming across an illustration for a cocoa pod. The curvy, ridge shape appealed to the team who used it as the basis for their winning design. The first bottles hit the shelves just a year later, with the added touch of the glass being colored German green, later changed to Georgia green, in honor of the Coca-Cola Company's home state. Sleek and iconic, this is the design that's flaunted its curves to become the trademark of the most popular drink in the world.
You've been open since 1982, which is a long time, especially for a bank in this day and age when it can be difficult to even, survive a crisis. We saw many of them go away. Tell us about, what a black bank is. It's African American owned in the sense that it's depositors?
Yep. So we are black owned, and as we say, we are unapologetically black. We used to see ourselves as a community bank that happened to be black owned, but really now our strategy, and has been for about the past 5 years, to really focus on the fact that we are black owned, because our community really needs someone to speak and an authentic voice about issues that are confronting our community. Maybe about 5 years ago, we started focusing on being black owned, and since then there has been this movement, this Bank Black movement, which is it's really trying to do is to get the black community to use its $1.2 trillion to both deposit in black banks and to use it to really invest in black businesses and to start doing business with each other so that we could grow the economy in our community.
How has the way that people think about black economic empowerment changed over the years?
So for us, it has changed drastically, really through the use of technology. Not only are we located in Boston, Miami, and LA, we're also the first black internet bank or online bank. And so people can open up an account with us from anywhere in the country. And we have customers here in New York, as well as in Utah and in Denver. And, I could name cities across the country where we have customers. And so part of it is that we are now, as a community, connected through the internet. And that has been a drastic change in terms of how black people have really viewed themselves and viewed the opportunity to bank black and to buy black and to do business.
Now, are your standards different when it comes to, say, lending and when it comes to giving out credit cards? It would seem that would be one way of maybe helping a community that traditionally has had a harder time getting loans.
Yep. So we do offer services that other large banks do not. As an example, about 30% of our community has a check systems record, which means that they can't open up a bank account somewhere else. And we offer a second chance checking account, so to give them another opportunity to open up an account. Or we have a secured credit card to help people rebuild their credit. So there are products that we offer that are really tailored to the needs of our community. But there's also the other side of it that a lot of people don't want to talk about. The FDIC does a study every year, and it showed that for national banks, only 1% of their lending goes to the black community.
Right.
So we represent 14% of the population, but only 1% of their lending.
Which is funny because, buying houses and buying big things that you need a lot of loans for is something that's traditionally been sort of sold to the black community in a very strong way.
Yes, and it's really an opportunity to build wealth, but we're not able to get the loans. Whereas when they looked at black banks, 67% of our lending goes to the black community. So there is a huge difference in terms of who is serving the black community for financial services.
So when you're trying to get more interest around, you said the use of technology played a crucial part. How much of it is driven by black millennials?
Yeah, a lot of it. It's sort of interesting because they've had recently sort of studies that have been done about how black millennials and millennials in general are using technology and using social media. We're very big in social media, which a lot of banks have really shied away from because that's the way to get the word out to millennials. And millennials, if you think about it, I'm a baby boomer. And the technology that really came out for us was really related to spending. It's probably hard for a lot of your audience to remember when ATMs didn't exist. Remember, ATMs were, sort of created in our lifetime, and debit cards. So there are a lot of things that really helped us more conveniently spend money. Now there's technology to help people save money. And that's what millennials are doing. They are actually using technology to save money, to invest, and to recognize that they need to make their money work for them.
Terry, what is the one or two things that people come into you, because I presume you meet clients and you meet customers all the time, and say, this is a problem for us. It's not a problem in the economy at large. It is a problem. Help me.
Well, the basic thing is that the black community really did not feel that banks were for them. We have people that come to us and say, this is the first time I've been excited about banking, period. Forget what we could do with a bank, but just even be excited to feel welcomed. So that's the number one thing, is that people are starting to say, hey, banking is for me. And they walk into a branch and say, I've never been in a bank before. They could be 50, 60 years old. They're like, I've never been in a bank before. So that's number one. The second is really thinking of banking as being not just a place that you deposit your money and don't think about, but to recognize that your deposit has power. There's certain social justice movements that we've gotten involved in, whether it's Black Lives Matter, whether it's Black Money Matters. We have expressed our voice that these things are important. And so where consumers are looking, and black consumers are looking at us and saying, my money matters. The fact that I'm putting it into whether it's a local credit union or a local community bank or a black bank does make a difference. And so the combining of your money and your deposit, specifically in social justice, is where the millennials are coming from.
the many satisfying moments in the recent Winter Olympics, it's hard to top the U.S. women's hockey team defeating Canada in a shootout and winning the gold medal. That victory is helping the National Women's Hockey League, the first paid women's pro hockey league, shine a light on the sport and inspire the next generation of female athletes. In today's Walk the Talk, Bloomberg's ongoing conversation about diversity in the workforce, I sat down with Danny Ryland, founder and commissioner of the NWHL. And I began by asking Danny about increased demand for women's hockey following the historic win by Team USA.
I mean, it was just an amazing experience just to see those women win gold. I mean, ever since Maddie Rooney made that last save in the shootout, I mean, our players have been walking taller. There's been a great buzz around the women's game, and anytime you can have, that type of TV rating, parlayed with a gold medal, I mean, just the exposure that's brought our game has been unbelievable.
Yeah, the buzz that's generated is really something else. Has sponsorship gotten easier because of it? And I wonder whether individual players, some of the stars from Team USA, will be able to get individual sponsorship deals that will then make it easier for the league to strike these deals.
Of course. I mean, anytime there's international exposure, the conversations become a lot easier with sponsors. They know about the women's game. They know some of the stars in the game, and it just kind of makes the barrier to entry a little easier because we're not introducing them to a new sport. They're already aware. So it has made our lives a little bit easier, and we expect it to continue to go in a positive direction.
Now, there's been a lot of changes since you founded the league in 2015. Among them is that 2 of your clubs now have the backing and the resources of NHL clubs. And I'm talking here about the Riveters, which formed a partnership with the New Jersey Devils, and the Buffalo Sabres owner bought the Buttes in Buffalo as well. Does that create imbalance with the other 2 teams that don't have that backing?
No, I think it actually helps us raise the bar across the league. Obviously we want our teams in the hands of the best owners and operators, and the NHL clubs do it best. So I think it's a rally cry to the other clubs to say, like, all right, let's get another deal done. So we've definitely hit our stride this upcoming season. Anyway, it's an interesting phase of the business that we're entering into.
Yeah. So the goal is to then get those other 2 franchises to get owners as well.
Yes, I mean, the uptick that we've seen in the 2 markets that have the relationship with the NHL clubs has been noteworthy, and so if we can replicate that and kind of come up with the perfect blueprint, not only with our current clubs but potential expansion markets as well.
All right. Now, under your original plan, NWHL offered contracts of up to $26,000 a year. About 6 weeks into last season, you unexpectedly had to cut salaries by 40 to 50% to preserve the league's future. What's been the effect on player retention?
The players have actually been amazing. They understood the change. They know that we are a startup business, and that we do whatever we can for them, and they were our greatest ambassadors during that hard moment. And it was definitely difficult. It was the hardest decision that I had to make as a commissioner, but the way that they reacted, the way that they continued to be great ambassadors for the game, really spoke highly of them, and we retained almost all of our players. And then this year we've seen a great uptick in the game as well.
What's the path forward to getting salaries back to the levels they were at?
Yeah, it's all about scale. We need to scale the business where the sports business really scales, and that's on the sponsorship side and the media side. So having the Olympics really factor in that over 3 million viewers, having our All-Star game generate over 500,000 viewers on our Twitter Game of the Week. I mean, those are really the areas that really change the business, and coming with that comes an opportunity for more sponsors, and obviously a $150,000 sponsorship is the same as selling 10,000 tickets in Buffalo, so it's really what changes the business.
That's a great way to compare it. Dunkin' Donuts was one of your first sponsors, in fact, the first. Additional sponsors didn't necessarily follow suit. Why do you think that was?
They actually signed on the second month of our very first season, so they are incredibly progressive in their thinking, and they understand that this is an opportunity. Before the Olympics, girls hockey was the second fastest growing sport in the United States, and that's not going to slow down anytime soon. And so we think that our time is now, and the sponsors are going to start to step up. And when we can show the return on investment that Dunkin' has had from the 3 years they've been with us, I think it's going to be easier for more sponsors to follow.
All right, well, let's talk about broadcasting. You stream games live on your website, I know. You also have partnered with Cheddar on Sling TV, Amazon, Twitter, and Facebook Live. What kind of interest, if any, have you seen from the traditional broadcasters?
We've seen a little bit as far as highlights are concerned, but being able to broadcast our games on a linear broadcast has been a challenge. So I think as we continue to prove our product, obviously the Olympics and the viewership they saw is going to help us as well. But it kind of starts with starts with one. And so we were very fortunate to have the distribution deal with Twitter this season, covering our game of the week, and to really show them that these are the fans tuning in. This is a brand of hockey that hockey fans enjoy watching, and the more data that we can collect, the easier those conversations will become.
And the other big thing that happened over the last couple of years was that the U.S. women's national team won a big wage battle with USA Hockey. What kind of effect did that have on the NWHL? I know you supported them, but did that have a material effect on you?
Not a material effect, but the more that women's hockey can be in the headlines, and the more that these women are empowered to stand up for themselves and to get that equality, it's great for not only women's hockey, but for women's sports. So I think it had a direct impact because of that. And we were there to support them, and we always plan to do that.
And that was my conversation with Dani Ryland. She is commissioner of the National Women's Hockey League. In the fight for gender equality, there are new warriors in the halls of U.S. business schools, men. The nonprofit group Forte Foundation has been training male business students to become part of its Men as Allies program. In today's Walk the Talk, Bloomberg's ongoing conversation about diversity in the workforce, I sat down with Elisa Sangster. She is executive director of Forte, to talk about the organization's efforts to launch women into careers in business.
The business schools, each of them have established in a little bit of a different way, but they all found kind of the structure that worked for them. So the men work with the women's student group to establish this organization, and we've provided them with a toolkit. So really a step-by-step process of how to get this effectively started on your campus. They have a whole curriculum of conversations that they do in terms of programming. Some of them go out to hike a mountain and sit down and talk about these issues at the top of the mountain. Some of them go and have a small group dinner where they can actually have one-on-one guided conversations with questions that they can talk about. So it just depends on the group, and they try to do a variety of programming so that they can engage men and women who are on various ends of the spectrum into this conversation.
Based on what you've seen through your years at the Forte Foundation, do men and women have different ideas about how men can best serve as allies to women in business school?
It's a good question, and some of the things that we heard from the women, especially women who were resistant to this, were we don't need white knights, and so they didn't like the white knighting piece. They wanted the men to come in and join them side by side, but they didn't need them to come in and save the day. And for some of these organizations, that tension caused a little bit of a problem getting the organization started. But the good thing is they worked through it, they reapproached, and they came up with a better way to do it. And the men were open and interested in making these things successful, and that was helpful, I think.
In terms of numbers, what have you seen? Are we talking about 100% participation by the men, or is there a threshold at which you know that this has legs?
So I think what we're seeing is that the chapters have grown. So we've gone from a handful of chapters, 5 to 6, up to 25 right now out of our 52 partner business schools. But on each campus, they take a little bit of a different approach. Some of them are trying to get 100% of the men to sign a pledge, and then others are really looking at the population, 20, 30, 40%, who are interested in diving deep into this conversation and really making an impact in that way. So it's different depending on the campus.
Now, this initiative was introduced in 2016. Obviously, a lot has happened since 2016. What have you learned from the whole process?
That I think it's a really important conversation to be having early, and I think to start in a positive place where it's men saying we want to be supportive instead of men feeling attacked and possibly isolated from the conversation. I think what Male Allies does is give them the entree into the conversation that they need, and we do see across that spectrum that men are often interested in supporting but unsure where to start and what kind of things they should be saying and doing to be those male allies. And so that's why I think it's important to train them as early as possible.
This sounds very much like a product of its time. It can only happen at this period of time with this group of people, the millennials. To what extent do you see the same level of enthusiasm from people who are from a different demographic, an older generation, for instance?
Right. I think that they're sensitive and interested in it, and especially because many of those people are in leadership. They're hearing about it. How can we as an organization address this? How can we develop something to share within our entire corporation? But I think what's different about this is that these are young leaders who are moving into an organization, and they're saying very actively, we want a voice in this, and we have something to say, and we want you to listen. So top down is good, but it's not good enough. We want to also see bottom up and side to side conversations.
They see themselves as agents of this process.
Absolutely, absolutely.
What is the next step then? Because eventually these business school men and women will graduate, they will go into jobs or start their own companies. How do you maintain your influence from that point on?
Well, it's interesting because we have seen 3 or 4 years of graduates, and they are starting to reach back to us, and they've said, hey, I'm experiencing X, Y, and Z in the workplace, and I really think what we did in business school could easily apply in the corporate world. So over the last year, we've been collecting data from them, kind of their own experiences. We've done additional research, and we've also been talking to companies, especially if they have some kind of grassroots movement. And I do think that business school, this program is unique to business school, and I don't think you're seeing it as pervasively within a company or in the corporate structure. So these students are still taking the grassroots approach, and they're saying we think that this is the most effective way to do it. Training is important, and definitely we want our leaders to be bought in, but we think that having that conversation early is what prepares you to be the best business leader.
What kinds of companies are participants, are willing participants here?
It's companies from a lot of different industries. We've seen companies in tech, in consumer packaged goods, in finance, all across the board. There are companies involved in this. Again, it's more the men who are reaching out to us in those industries. It's not necessarily the companies saying, sign us up.
That was my conversation with Elisa Sangster. She's Executive Director of the Forte Foundation. of the Me Too movement, Hollywood is in self-reflection mode about creating a safer work environment for women. There's now a website aggregating reviews from exclusively female critics. Cherry Picks is taking on male-dominated opinion sites like Rotten Tomatoes. In today's Walk the Talk, Bloomberg's ongoing conversation about diversity in the workplace, I sat down with the founder of Cherry Picks, Miranda Bailey, and I began by asking what specific need her business fulfills.
We're kind of cherry picking the female critical voice out of film, television, video games, basically anywhere where there's art criticism and media criticism, so we can have a platform to see what women think about it. In terms of women, it's very complicated because there's not that many of them on Rotten Tomatoes compared to the men. I mean, it's less than a quarter. So in order for us to us being females, to have a voice and know what females think about something, it's really hard when there's an overwhelmingly male, voice shouting at you or saying, this is how it should be.
What are the financial consequences of that gender imbalance among film critics? How does it make its way through the industry?
Well, I don't really know about financial, situation. For me, it's about the consumer. I mean, in Hollywood, we've been talking about we need more women behind the camera. We need more women's stories, more women writers, more women actors, everything like that. And I'm a film producer and actor and director, and it's really easy to say we need it, and it's a lot harder to make it happen because at the end of the day, Hollywood follows the consumers. And if the consumers are being told what is worth their money by a certain group of people that are, kind of narrow, then it's not going to open up. And I felt like, well, maybe if we can open up the critical voice, which is, the gatekeepers essentially telling people what they should buy, what's worth their money, and women actually like these stories and like these filmmakers, then I thought that would be a faster way to get more women behind the camera and more women's stories told.
How are you funding this website? You mentioned it's going to be an aggregator of reviews, but are you going to be advertising supported, subscription driven in any way?
Yes, I mean, we're funded for the next, 3 years about right now by my production company. And, we will be finding partners once we kind of, get our our voice and our full creative image out there. But yes, I mean, we plan on doing advertising. We plan on doing partnerships with film theaters so that we can, link to buy tickets online. So like if you read a review about The Zookeeper's Wife, for instance, and you really like it, you can go right there and buy it.
It's an interesting time to be launching this because of the Me Too movement across Hollywood, across media overall. How do you intend for this site to help change the culture in movie making?
Oh, well, I mean, the Me Too movement and the Time's Up are two very different movements. I mean, they're both female-centric, but, at the end of the day, we're about, being recognized and respected. And so I'm grateful for those movements. I think it's kind of wonderful that that's happening right now. We've been saying this for a very long time, that we deserve to be paid equally, and not to be, sexually harassed. And not everyone is sexually harassed, but most all women are definitely underrepresented, underpaid, and disrespected.
You are an independent film producer. As you mentioned, you're an actor, you're a director. What kind of feedback have you gotten from peers in your industry when you told them about Cherry Picks?
I have had overwhelming support from female journalists specifically, which is very exciting for me because this is kind of a new door that I'm opening and learning about. And obviously the female filmmakers that are out there are really excited by it. We're all banding together right now and supporting each other, which I think is great. I think one thing that's awesome about the Time's Up movement is that all of the women who are directing right now are not competing with each other. We're all rooting for each other. And I think that that's a big change. And I think this Cherry Picks is part of that, is us also lifting each other up and opening it up to journalism and the consumers and what the buyers, the exhibitors, the distributors, the producers, the directors, we're all together in this, and we can all make a difference.
Cas Marte went from doing hard time to building hard bodies. He's the founder of Con Body, which is a prison-style boot camp class in New York City that employs former inmates as fitness instructors. In today's Walk the Talk, Bloomberg's ongoing conversation about diversity in the workforce, I sat down with Cas to discuss how he built Con Body from the ground up.
Con Body was derived from my prison experience. I lost 70 pounds in 6 months in my prison cell after doctors told me I could probably die because of my health issues. I was extremely overweight. My cholesterol levels were through the roof. And I lost 70 pounds in 6 months, and then I helped over 20 inmates who was over 1,000 pounds combined. But I took that same programming that I was doing in the prison yard and started doing it and brought it to the streets of New York.
And you began a business, but you told me how you didn't have any startup costs and you funded this yourself. How did that work?
Yeah, I mean, I didn't have no overhead. I just went out straight to the park and started running after a woman wearing yoga pants. And I was like, hey, I got a boot camp. And I told her my story and started just attracting people to the park. I was standing on the F train, B train, making announcements. Like I was nonstop hustling and asking. And I basically took the same skills that I used while I was selling drugs and brought them out legally.
So these are transferable skills.
Exactly.
Your workout's gotten really popular. You now have your own location. Talk about what's involved here and who goes to your workout classes.
Yeah, so what we do is hire formerly incarcerated individuals to teach our fitness classes. So we train the inmates in the system, and we're working on creating a direct pipeline from the inside out. Mostly the people that come to our classes is young professional women. Actually, a lot of people are surprised, but we don't use any equipment. A lot of guys like to, go to the gym and lift 1,000 pounds. My secret sauce is that I work with what I got. So just my body weight, small amount of space, just like I did in my prison cell. And I got that prison body you've always desired.
Now, you hire former inmates, as you mentioned. You're trying to build this pipeline. What do you look for in a potential new hire? And the extent of vetting, talk about that involved in these prospective hires.
I look for people that are charismatic, and when I conduct my interviews, I conduct them like 5:30 in the morning. So if you don't show up or you come in late, too bad. So I really try to make it strict as possible in the beginning, and then I really see if I could hang out with this person, if this person could say hi and bring a smile out of my face. Not only me, but the customers that are coming through the door, and really breaking down that stereotype, because we have people coming in, who's never met anybody who's been incarcerated. What the perceived notion of somebody that's a so-called ex-con is that we're all killers and rapists and, the worst of the worst. But the truth is that we're just all human beings that committed a mistake, and we just want to readapt back to society and get a second chance.
Your real message here is about prison reform when it comes down to it. And you kind of came up with your business plan when you were in solitary confinement. You had a lot of time to think about this. You also got some help once you established your workout class after you held it in the park. Yeah. Talk a little bit about the organizations that allowed you to bring together some of your ideas and make it a more scalable business.
Yeah, so when I came home, I tried to take advantage of every nonprofit that you can think of in the prison reform industry. So I went to Fortune Society. From Fortune Society, went to Career Gear, and all these nonprofits were helping me and just trying to get me back on my feet. But there was one program called Defy Ventures. Defy Ventures believes that illegal entrepreneurs have the transferable skills to become legal entrepreneurs. And I did that program. It was a very intense program taught by MBA, Harvard, and Stanford professors. And you graduate and you get a MBA Baylor University certificate when you graduate from the program. So they helped me put my whole business plan together and pay my taxes, and redo it legit.
Talk a little bit about your growth plans, because you're based in the Lower East Side of New York City, but you have some pretty ambitious plans.
Yeah, so I'm in the Lower East Side, in the exact same corner where I sold drugs at, where I got in trouble at, and went back into a full circle in that neighborhood. Our growth is we want to open nine studios in the next 5 years. I just came out with my book, so Con Body. shows my whole secret sauce in that book. And then also we started this online platform that's coming out in a couple weeks where you could virtually work out with a formerly incarcerated individual. So you basically choose your favorite ex-con for $9 a month, and you get that prison body you've always desired.
Diversity is in fashion. That's according to Eva Chen, who heads up fashion partnerships at Instagram. In today's Walk the Talk, Bloomberg's ongoing conversation about diversity in the workplace, I sat down with Eva Chen at the monthly Cornell Tech at Bloomberg Speaker Series, and I asked Eva how exactly inclusion is showing up on the runways.
The message is you must be inclusive, and you must kind of understand that there are billions of people on this planet, and there's not one look. I think about Instagram and some of the accounts that have done so well on Instagram, and some of the models that are coming out of it, like Ashley Graham or Paloma Escolar or Halima. Like, these are women who represent beauty for a lot of different people, and that kind of cookie cutter look. There's not just one standard of beauty, it's 800 million standards of beauty. So I think that's kind of the voice. And now, you think about it, if a fashion show were to cast just one type of model or one type of woman in their runway, and it was every single model looked the same, you would hear about it on Instagram. Like, people will not take that. And I think it's amazing. I think it's powerful. I think everyone can feel represented. And for me growing up, I remember not seeing anyone who looked like me or looked like us. It just didn't exist. And I think now, if you are a 15-year-old bookworm who, loves to read, this is like, I'm describing myself, like a bookworm who loves to read, young adult fiction and drink like lemon ginger tea. You know, it's like you can find someone else, and you can find your group of people by following the hashtag Bookstagram. You know, you can find like your kind of like squad, and even if it's a digital squad, you can feel like you have other people to kind of identify with.
How is fashion able to get ahead of the curve of everyone else? Why were they able to figure this out more quickly than others?
I mean, I think in so many ways, like, you know, fashion just kind of, it's supposed to be a little bit prescient. It's supposed to be a little bit ahead of the curve. And also you're able to push the boundaries in fashion. Like, you know, like there are runway shows where people can kind of walk backwards on the runway, or they cast real life models, real life people, which is just like people, revolutionary, you know, like on the runway. And I think that you're able to take risks in fashion, and risks are appreciated.
Some risks don't pay off. I mean, I think of H&M and the controversy over a black child modeling a sweatshirt with the words "coolest monkey in the jungle." That obviously did not work. How is the feedback now from consumers different in the age of social media, where something like that will go viral in a bad way very quickly?
Yeah, I mean, I think that listen, I don't know what the thinking was behind that specific moment, or behind that specific casting, but nowadays it's like the most important thing for corporations and companies is to have representation. Make sure that your board of directors is diverse. Make sure that the people who work in the casting department and the creative teams are diverse, because you want to be able to truly represent and truly embody. It's not enough to say, we believe in diversity. You have to have diversity. And that's, I feel very fortunate at Instagram. It's like, it is a diverse team. I love seeing like and hearing the different voices and opinions and voices of dissent as well. And that's the thing with Instagram. It's like, people have opinions. You won't always agree with the opinions, but it's important that people voice their opinions. And when people see something that they think is wrong or that is wrong, like they will speak up and speak out.
Right. Do you think fashion brands are nimble enough to respond, or it's because of something like Instagram that provides that instant loop, that feedback loop, they're able to?
I think some companies are. I think it very much depends on the infrastructure of the company. And this is like, I don't know enough about like fashion corporations and infrastructure, but like if you have, I look at Gucci, for instance, and Gucci, you know, they have been known to collaborate with a lot of Instagram influencers and artists, and for the most part, 99% of the time, it's amazing. And there was one season where they did there was something on the runway that was very evocative of Dapper Dan, you know, the renowned kind of like fashion icon, and they were called out for it. And very quickly, they issued a statement saying like, you were right. And now they're collaborating with Dapper Dan and doing a whole collection together. And I think that's in part, their creative director, Alessandro, is incredibly fluent in Instagram. He's on direct messages, reaching out to illustrators, looking for fresh voices. And I think a lot of it depends on the leadership and how, I don't want to say woke, but like how kind of like tuned in they are to what the public consciousness is craving.
So in the early 1990s, you started selling soaps and essential oils on the streets of Harlem and Bed-Stuy to start Sundial Brands. How did you know back then that there would be a market for black hair and skincare products?
Yeah, well, because when we started, first of all, there was nobody producing natural products that were efficacious and that were designed to work on different hair textures and on different skin types. And so what you had was a consumer who desired to have healthier products, natural products, but had no access to anything that actually worked. And so, when you stand on the street corner, people tell you what they want. You better give it to them, otherwise it gets really cold, right? And so we started to take that feedback and started to incorporate that into the things that we were offering. And before you know it, we were selling to other vendors who were bringing feedback from their customers and clients. And so very quickly we got to understand just how underserved women of color were around their hair and their skin.
What has the explosion of the natural hair movement in the U.S. done for your business?
Yeah, as women became more and more empowered or empowering themselves, I should say, to wear their hair natural, to express themselves as freely as they wanted to around the things that were important to them, that really started to drive the adoption of natural hair. And then they actually had products in Shea Moisture that delivered on the promise of what they wanted, right? So I think the two worked hand in hand and it really took off.
How does Sundial Brands stay authentic as you guys have grown?
Yeah, I think for us, we've built our business from day one on a model that we call community commerce. And what community commerce is that a business ought to invest in the community where it does business, right? And it ought to provide not just products to that community, but it also should take the dollars that it takes out of that community and put it back in. And so for us, that meant that the products that we produced from our supply chain in Ghana, of which there are 16,000 women that now supply Shea Moisture, who have now risen above the poverty line because of this model, also get to share in 10% of the revenue of the products that their ingredients go into, right? That then provides them with infrastructural support, warehousing, equipment, training, safety, health insurance, bank accounts. That's the core of what we do this for. And so we continue to do that.
And so in November, Unilever acquired Sundial Brands. What did that deal allow you to do now that you haven't been able to do before?
It enabled us to take, to commit to this $100 million fund. It's called the New Voices Fund for Women of Color, which now allows us to go create other entrepreneurs, or maybe not create, but invest in other entrepreneurs so that they too can have the type of economic opportunities that we've had. So as I said, it's not for one company or two companies alone to be able to compete and to survive and to sustain is not enough. We need thousands, right? So so the first thing it allows us to do is to invest there. The second thing that it allows us to do is to scale our community commerce model so that we can go from these 16,000 women to 200,000 to 300,000 women globally. And the third thing that it allows us to do is to compete globally against global corporations. We can't compete for shelf space the same way because we don't have the same resources. We can't buy the same amount of advertising on TV or in magazines or in social media. So we end up shrinking and shrinking and shrinking as more companies come in to serve us as consumers. So what we've got to do is we've got to provide capital to each other in our communities in order to compete. We've got to find ways to scale our business. Now, the way that I've done it may not be the way for everybody else, but at least it shows a path, right? And it shows that it can be done, and it shows that you can do it and be highly successful at doing it. And it also shows that once you do it, you've got to be committed to putting it back in.
Walk the Talk, Bloomberg's conversation about diversity in the workforce. We're putting the spotlight on Goldman Sachs. CEO Lloyd Blankfein is reportedly planning to step down as soon as this year. Diversity will be a top priority for his heir apparent, David Solomon. Solomon recently told the Women in Corporate Leadership Initiative, quote, "You make progress, but the progress as you're looking at it day to day feels slow. And it feels slow because you're a big organization. But you know over time that will change. It's our job to change it." Joining us now to explore this topic is Bloomberg's Jordan Holman. Jordan, we know that Solomon has been pretty active on the diversity front. He did propose a number of ideas to the board not so long ago. Why aren't we seeing an increase of female representatives or executives at the senior level? Because it's not there yet.
Right. No woman has run a major Wall Street bank before. And if David Solomon does become the next CEO, that pattern will continue. So at Goldman, they are looking at increasing the number of women who come into those entry-level positions. But we're not seeing the women come out on the other side of the pipeline on those executive teams. So there is a retention issue, and they are looking at that through mentorship and sponsorship initiatives.
So how long does it take before you get sort of a critical mass of women at senior ranks? I mean, what's the sort of trajectory within Goldman to reach the upper echelons of leadership?
It definitely takes years. You know, you have to groom people. Goldman's a company where they want to hire internal candidates. An internal candidate becomes CEO. So that's why it's important to retain those women that they're bringing in. For example, this summer, they said that they'll have about 40%, mid 40% of women in their junior employee class. And so that's great, but there's only 2 women on their executive team. So now you have to, with this generation, groom them, promote them, have opportunities for them to want to stay on Wall Street.
And that takes time. I think about how Dina Powell, who was once at Goldman Sachs, went to work for the Trump White House, has come back. And there was some tension over her promotion when she returned because she was added to the management committee when her background is not in a profit-generating business.
Right. Her background's in government and philanthropy. And when you're looking for the next CEO, you're looking for those people who've been in positions of profit and loss. And she's not in that. So then when you look at the pool of women who are in that, it gets smaller and smaller. So then when it's time to select your CEO, you have nowhere to turn.
How does Goldman compare to its peers with this?
So Goldman's not alone when it comes to female representation. Citigroup and JP Morgan also have less than a quarter of women on their executive teams. So it's a conversation that needs to happen across all the banks of how do you get your first, female CEO of a large bank.
You recently talked with Goldman Sachs' former HR head, Edith Cooper, who spoke about the bank's efforts to increase diversity, women as well as minorities. What did you learn from her?
So Edith Cooper spoke on a panel last week, and she said that Goldman is looking at the data. They're really trying to be data-driven about their diversity initiatives. So if the data's not saying that they're making progress and change, like Solomon said earlier, it looks slow, then they're going to switch it up. They're going to try new initiatives.
mutual funds run by women are outperforming funds run by men. So you would think that the number of female managers would be rising, but you'd be wrong. In today's Walk the Talk, Bloomberg's ongoing conversation about diversity in the workplace, I want to bring in Bloomberg's Liz McCormick, who's been crunching the numbers, and the numbers are kind of troubling here. Going back 15 years, Morningstar has found that women-run fixed income funds outperform by a meaningful amount.
Right. I mean, it's very interesting. They said, let's run the numbers and see, is there a performance reason why women are only 10% of the whole business? And they found no. I mean, on fixed income, women slightly outperformed. Even mixed gender teams did better. And on equities, it was fairly close. Women slightly underperformed. So the numbers didn't back it up. They said there's no performance reason why women shouldn't be rising as the number of fund managers.
And in fact, the number of women-run fixed income funds in the U.S. has dropped precipitously. It's now, what, 14 in 2017?
Right. Those exclusively run by women, there's only 14. As of September 2017, that's all there was.
In 2004, it was 47.
Yeah. So it was a big drop, you know, so it doesn't kind of make sense, you know.
So you talk to different people. What do they blame it on, or what do they attribute it to, rather?
Yeah, it's interesting. You know, I spoke to a lot of the leading fund managers who broke through and said, how'd you do it? What are the problems? A lot of them said, number one, it's very tough because we weren't always welcomed in the beginning, and you don't start as a fund manager. You have to rise to that level, so it's a long haul. And some say by the time you've fought for 30 years or so, some are like leaving and they're had enough. And others are saying young women don't know enough about it. So that's why these organizations like Girls Who Invest are trying to, you know, educate college women. Hey, this is a great field for you and you can perform.
Absolutely. Misconceptions also abound here, and I know this is something that Girls Who Invest is trying to fight as well. The idea that you have to be super quantity to run a fund. It's something that doesn't get communicated very well.
Right, exactly. I think some women think, well, maybe I could, you know, go into sales or banking or something in general, but to run a fund, you have to be just wicked smart and have to be great in math. And of course, those are great skills, but that's not all it requires. And women, it's about managing risk. Like Ann Walsh of Guggenheim said, you know, women are very savvy at managing risk, and that's especially in bonds. That's a big deal, you know.
What was her story? Because she started off on the state pension side, right?
Right. She's amazing. I mean, I said, is this right, this list of all your achievements? Yeah, she started as an accounting degree, said I just happened to go to a pension fund, and then learned about portfolio management, and then went on to just really work hard. MBA, CFA, law degree, you name it. She had to really stack the decks, but, you know, she achieved.
All the credentials are there, and she got her break.
Yep, for sure.
1990s, Liberian native Richelieu Dennis co-founded Sundial Brands with the goal of creating natural hair and beauty products for consumers of color. In today's Walk the Talk, Bloomberg's ongoing conversation about diversity in the workforce, Jordan Holman sat down with Richelieu to talk about the rise of Sundial.
When we started, first of all, there was nobody producing natural products that were efficacious and that were designed to work on different hair textures and on different skin types. And so what you had was a consumer who desired to have healthier products, natural products, but had no access to anything that actually worked. And so, when you stand on the street corner, people tell you what they want. You better give it to them, otherwise it gets really cold, right? And so we started to take that feedback and started to incorporate that into the things that we were offering. And before you know it, we were selling to other vendors who were bringing feedback from their customers and clients. And so very quickly we got to understand just how underserved women of color were around their hair and their skin.
What has the explosion of the natural hair movement in the U.S. done for your business?
Yeah, as women became more and more empowered or empowering themselves, I should say, to wear their hair natural, to express themselves as freely as they wanted to around the things that were important to them, that really started to drive the adoption of natural hair. And then they actually had products in Shea Moisture that delivered on the promise of what they wanted, right? So I think the two worked hand in hand, and it really took off.
And that was Bloomberg's Jordan Holman speaking with Sundial Brands co-founder Richelieu Dennis. You can get the full interview on Bloomberg.com.
Lotame stands for Locate, Target, and Message. Lotame helps advertisers collect and organize their consumer data. So if you can imagine that customers engage on the phone, on the web, in a store, through a coupon, we help collect all of that, attach it to a profile, and activate it. It's the big data story. When I started the company in 2006, I saw this unbelievable opportunity around user-generated content. It changed the paradigm for all advertisers. There had to be a platform to protect the brand and get a defined result, which is a sale. That is the genesis of Lotame. My first year in business, we landed 9 customers on a proof of concept. I then went to venture capitalists and told them the story. And over time, I was able to raise $60 million. I woke up one day in 2011, I had a board meeting. I called our board together, I told them the trends and the data points I was seeing, and we made a decision to cut the company in half and walk away from a $30 million revenue line of business. We took the company and made a huge pivot. We went from about 100 employees down to 50. There was some overlap of customers, but most of the customers were net new customers that we had to go win around a different line of business. We went from a media business that was charging on a campaign basis to a software as a service business that was charging a monthly fee to manage data. One of the key things that happened during the process was what once was just a desktop experience, meaning your computer, suddenly became a mobile device, a television, an iPad. And that is why we bought a company called Admobius in 2012, simply focused on what was called the device problem. Cross-device. In a privacy-compliant way, we were able to stitch together profiles and audiences no matter how they were engaging with the brand. We've had about 500% growth in customers since 2014. We've 10x'd our employee base over the past 5 years. We're profitable. Developing profitability in a technology company is something I'm super proud of. Over the next 5 years, I would like to be a very large public enterprise. Almost every device and almost everything we're doing is connected to the internet. Microwaves, refrigerators, automobiles. There's information that's thrown off from that device connected to that consumer. I think there's an opportunity for a public company who is only focused on data, data solutions, and activating customer data. In a world where data is everywhere, we help our customers figure out what it all means. And that's the future of Lotame.
idea for Folane came about in 2009 when I was making a personal shift to a healthier lifestyle generally. And I realized when I was looking into nutrition and fitness that all of these beauty products actually contained a lot of toxins. I realized there was a real opportunity for a clean beauty retail store with all vetted products for safety and performance. Our entire goal is to shift the mindset around the products you apply to your skin. I needed to learn a lot about business and about the beauty industry. I worked on a lavender farm, I worked for a skincare developer, I got a quick MBA at Babson where I focused on the business plan the entire time. In 2013, we opened doors to our first store. I was in there every single day talking to customers, figuring out what this needed to be. I raised a small angel round of $750,000. That lasted us almost 3 years. All the way through to 2016, I was really focused on building a brick and mortar first business. At the same time, there was so much more going on in beauty online than there ever had been. You know, content had become so critical. We decided to make a huge shift in 2016 and change to a digital first business. We decided that digital first was really going to be the only way that we could get the content out there and we could grow fast enough to be able to share our, very unique level of expertise. So we raised a round of $3 million to do that. We needed to build a digital first team. We needed to build a new flexible tech stack. We're very lucky to be in Boston, to be surrounded by a ton of really awesome engineers and folks that are super passionate about mission-driven business as well. We spent a year and a half building it out, figuring out how Folane should exist online. So it'll be between 70 to 80% online by the end of this year. Despite building a digital first business, you can never truly replicate our in-store experience online. We have 2 brick and mortar stores right now, both in Boston. We'll be opening 4 this year. And if everything goes well, we'll open an additional 10 in 2019. We're going to continue growing content and education online in a huge, huge way. I think the real secret sauce to Folane is we're a highly curated portfolio. Since starting the business, we've tested between 800 to 900 brands. We have 75 brands in the store right now. It's not easy to get on our shelves. We don't carry any full brand portfolios. We carry what the best products are by the brand. It's helping in the repeat rates. It's helping in retention. We're now becoming known as the place to really, truly start your clean beauty journey.
Food 52 is to inspire people to eat thoughtfully and live joyfully. We are a comprehensive resource for kitchen and home enthusiasts, and that means that we offer both content and commerce, and then community is a tie that holds it all together. My co-founder Amanda and I both come from traditional print media backgrounds. We were editors and writers. In 2008-2009, we saw this opportunity to create a brand around kitchen and home that lived online. We went out and got a book deal. We got a $100,000 advance, and we actually used that advance to pay for the building of the initial website. In 2009, when we launched, we started really with recipes. Then in 2010, we raised an angel round, a seed round, of $750,000, which we used to invest in building out our own e-commerce platform. E-commerce represents about 60% of our top line revenue, and ad sales is the majority of the rest, with a very small bit being cookbook sales. The majority of our advertising is native advertising and branded content. The events are also a key part of all of our lines of business. We do a lot of events with brands on the ad sales side, and then we have our own events on the commerce side, often pop-ups where we're showcasing our products, which you can typically only buy online. Last year, during Cyber Weekend, we had an outage where the company that calculates our sales tax was down for over 12 hours. So we had just a total backup. What we decided to do was to remove the sales tax functionality completely from the checkout process so that orders could get through, and turn it to our advantage by actually making it a promotion. And we followed up with an email the next day, and we said to everyone, we will cover the sales tax through the rest of this weekend. When you have a community that you really are talking so directly with all the time, it enables us to have that sort of direct conversation with people via email, via the site. This is what we're going to do. We're going to turn it around to your advantage because you're that important to us. Right now, we are touching 12 million people on a monthly basis. Our unique visitor growth has been 65% over the past year. We're talking to Amazon Alexa about a partnership. Something we talk about all the time is, what does a Food 52 presence look like offline, a permanent brick and mortar presence? We're very close to profitability, and it is really one of our key focuses for the next 18 months is to become a sustainable business.
Sweetgreen, we make every single thing from scratch in store every day. The three of us were just, what if we opened this restaurant? It was just solving a problem that we had in our own life. This problem of wanting to eat something that was healthy, affordable, convenient, and really stood for something that we believed in. We started the company by going out to anyone we could ask, and we raised about $300,000. 40 people contributed to that very first restaurant. That means the average check was somewhere between $5,000 and $10,000. The place we found to open was tiny. And what that did was it really forced us to simplify everything. And that philosophy has really stuck with us throughout the whole history of the company. It wasn't that sales took off in a crazy way right away, but it was like the people who knew about us loved us. Very soon after we opened the first one, we started exploring the idea of a second and a third one. Our first 7 restaurants, we stayed in the DC area. We had these huge ambitions, but we knew we had to get things right before we scaled it. We've had to raise a lot of capital along the way because we build restaurants, but we never really took on any sort of institutional funding or any big investors. It was about 4 years ago, one of our customers and friends approached us about investing a lot more money. It was a guy named Steve Case. He really believed in our mission. That kind of funding allowed us to invest in people, invest in the community, invest in the systems and infrastructure, allowed us to build a brand. We invested in mobile technology and also rebuilt our restaurants in a responsive way. You can pick up your phone or go online and within just a few clicks, order it, have it on a shelf ready, come pick it up and be out of there. That was really hard. It was more than just building an app. Everything had to be redone. The way we operate, our kitchen systems, our prep, everything we did had to be rethought because all of a sudden it went from like one restaurant, one engine to 2. It took us about 2 years to build that technology. I think sometimes the easy way is not the right way. Instead of resisting it, embrace it and figure out a way to do it the right way, not just the cheap or the easy way. Today we're open across the country in 8 cities. So we're in DC, Philadelphia, Baltimore, New York, Boston, Chicago, LA, and the Bay Area. In 2017, we'll end the year with 85 restaurants. For the next 10 years, we're focused on not only just building restaurants, but building technology that can make it easier for customers to interact and eat healthy. We always say we want to meet customers where they are.
The idea for Swell really was I wanted to create a better looking water bottle that would convert people to actually carrying a water bottle everywhere that they went to stop using those plastic water bottles. I started Swell with my own personal savings. I invested $30,000. I worked with a team of industrial engineers. The Swell bottle is triple-walled stainless steel with a layer of copper on the inside. It's almost indestructible. The first year when I started Swell, I went to 17 trade shows myself. I stood in a lot of booths and I talked to a lot of customers. They would tell me, could you make it in this other color? Or could you make it in a bigger size? Because we would like to take wine to the park. Really, that first year was just a learning lab. It's been a real wild ride. We went from 3 million in sales to 10 to 50, 50 to 100, really fast. We are now in 65 countries. One of the challenges that we faced is we outgrew our office. We outgrew our systems. We were running this company at $100 million last year on spreadsheets. We outgrew our website. It mostly kept up unless somebody famous tweeted about us and then everything, came down. For me as a CEO, it was really hard to turn my attention inward. It's been hard for me to not take every marketing opportunity, every sales opportunity, every innovation opportunity. We had to put a lot of things on pause while we built the infrastructure. We're building up the leadership team, we're moving the office, we're moving the warehouse, we're moving the website. We can be a billion-dollar company because we've got the systems. Last year in 2016, I had the idea to launch a new line for Swell. It's called Sip by Swell. We originally launched in Target stores nationwide. It's a little bit less expensive. It was part of my idea that creates something new for a different type of customer. Our customers love to collect them. We found that the average customer that has a Swell at home has 5.5 bottles at home. Still today, we're a self-funded company and we don't have any outside investors. I don't have a board. I don't have any metrics. I don't have anyone telling me I need to hit any numbers. We might not always be privately owned. We don't necessarily need the capital, but I'm always interested in potential advice and expertise. How could we potentially partner with someone that can help us grow bigger, faster, stronger? I'm not saying that anything's coming, but you never know. I still see people with plastic water bottles. However, I have to say, I think the balance of seeing the plastic versus seeing Swells is starting to change. We still have some education to do, but I'm feeling pretty good about the progress.
Gotham Greens is a commercial scale urban farming company. We develop and operate high-tech greenhouse facilities for fresh vegetable production in cities. I was working in the field of sustainability and environmental engineering and became fascinated with the technology that was available to be able to grow crops using a small fraction of the resources compared to conventional farming. And at the same time, I really started to recognize the growing trend in the marketplace toward consumers wanting more local and regionally sourced food. So that's really when the light bulb moment went off. We cobbled together some funding and built a 15,000 square foot rooftop greenhouse in the Greenpoint neighborhood of Brooklyn in 2011. We started pitching supermarket chains, restaurants, we started inviting chefs into the greenhouse facility, and within 3 months we were completely sold out of the produce. And that's when we realized that we were really onto something and we should probably expand. And then a really compelling partnership opportunity came along with Whole Foods Market, which at the time was one of our largest customers, and we crafted an idea to actually design and build a commercial scale greenhouse into the roofs of one of their new supermarkets in Brooklyn, New York. That was almost double the size of the first one and provided our brand with a lot of visibility. Lo and behold, within a few short months of opening that second greenhouse facility, we were yet again sold out of the produce. So we started looking at Chicago, which is also a city with a thriving food culture and a consumer base that's increasingly demanding high quality fresh produce. And that facility is our largest until date, which is about 80,000 square feet or 2 acres. That produces the equivalent of about 50 acres of conventional field farming. This form of farming, which is known as controlled environment agriculture, is really a combination of horticultural science as well as environmental engineering. It was a challenge to find people with this very unique skill set. We conceived of an idea to establish an in-house training program that we now call Gotham Greens University. So we're able to take young graduates out of university or high school vocational programs focused on science and biology and train them to really design these facilities and operate them. Our company has built 4 greenhouse facilities across 2 cities. We have about 160 employees. We've experienced about a 20x growth rate since inception. In our first year of operations, we grew about 500,000 heads of lettuce and leafy greens. And last year, we grew over 20 million heads of lettuce and leafy greens. I believe the future will have us expanding to other cities across the United States, expanding into new products, new product development. Our motto is to be able to harvest and deliver within 24 hours to be able to provide consumers with the freshest possible product and the best tasting product.
Gemmi is a new luxury brand that's providing the customer with the highest quality Italian shoes at prices that have never been historically possible until now. We looked at the luxury marketplace, and there were so many qualities about luxury that were great, but there were some qualities that needed some real reinvention. The incumbents certainly were not reinventing. Shoes happened to be a category that we fell in love with because we love obsession. We want to be a business that occupies a spot, a place in the customer's mind all the time. Shoes create that unique obsession. We think that you've got to be newsworthy. You've got to be different. You've got to have a story to tell. Our consumer knows there's must-see TV every Monday, and it's not about markdowns. It's not about private sales. It's about great new product. We actually don't release that many more products than other traditional retailers do. We just don't do it all at once. The way we describe our company to the consumer is we're old world meets new world. We identified very early on in the business creation a team in Italy that I had had some history with that we could in essence acqui-hire. And it was a group in Italy, in Florence, that had been in the shoe manufacturing business for generations. There was a whole bunch of challenges in taking the old, historical Italian shoe manufacturing industry and putting this new engine on top of it. Unlike most fashion brands that produce things 4 times a year where you have these big spikes, we're providing them with this constant demand, keeping their factories moving all of the time. We had to get them to start producing products at the pace that we wanted them produced. The only way to solve that was to learn. They've done a pretty good job of learning through our data. They've done a pretty good job of learning through our forecasting what opportunities they can receive by moving faster than they've ever moved before. They've been pretty open to listening about ways to improve their demand forecasting and ways to improve their speed of production, but they're not so open to listening to better ways to make shoes, that's for sure. Probably rightly so. We opened our first store in Soho. 80% of those customers who bought in the store first buy their second purchase online. If you're buying things with the frequency that our consumers buying them, the luxury of multi-channel drives to their purchase pattern. 50% of our buyers come back and buy a second time. Once they buy a second time, on average, they average 4 purchases within a year. We're also seeing consistent 100% growth year over year in total sales and margin continuing to improve in each of those years. So the goal is not go as fast as you can go and grow as fast as you can grow. The goal is with really good controlled growth, ensure that you can double your business for a number of years.
Box is an online warehouse club. We cut out the membership fees and we deliver it right to you, generally in 2 days or less with free shipping. I grew up in the suburbs of tropical New Jersey, and then moving into Manhattan later in life, I didn't have a car to get to a warehouse club. And so I thought, how many other folks around the country have that similar problem? And so actually moved back into the burbs to start the company in a small 2-car garage in Central Jersey, tape gun in hand. We went after and tried to solve that problem. In the early days, we actually didn't have a marketing budget. Our marketing budget was virtually zero. It forced us to be creative. It forced us to create a very good service where folks would talk about it. So Hoda and Kathy Lee loved the service. They were both like, genius. Sure enough, they talked about us, and from that moment on, we capitalized on that opportunity, went out and raised our first sizable round of financing, and then moved out of the garage. A gigantic challenge that we had actually came up when we started expanding our footprint throughout the US. It kind of forced us to make a decision, are we short-term or are we long-term? Treating people right is actually a short-term detriment, meaning that it's so easy to take away benefits or say, hey, we'll pay a minimum wage because you see an instant pop on your financial statements. I don't believe that's a long-term good way to drive the business. We took the long-term approach. No matter if you work in a fulfillment center and it's your first day, or you're the chief marketing officer of the company, we're all one team. We need to treat everyone fairly. In the short run, there might not be a line for increased morale and increased sense of team. But over the long run, I truly believe that will pay huge dividends. To this day, we picked that road. It has become who we are. Folks have chosen to spend their money with us in pretty large amounts because we do the right thing. Now, our fulfillment footprint is 4 locations throughout the United States, 4 fulfillment centers, 3 offices, and a life spent on an airplane for me these days. Last year was our 3rd full year in business, and we went from virtually zero in our first year to over 9 figures in that 3rd full year. So it's always been a dream of ours, and especially mine, to push the button at the New York Stock Exchange. We've identified an area where there's a real dearth, a real lack of solutions, and for us it's about staying focused, not trying to be the everything store, doing wholesale and doing warehouse clubs and doing it right.
Brit&Co is a new media company that largely reaches millennial women and aims to inspire, inform, and empower them to be more creative. My past is largely out of tech companies. I worked at Google and Apple, and I started realizing the world of digital media was becoming a big trend. I left Google at the age of 25. I was not married yet, and I had saved up enough money to bootstrap my own business for about 6 months. And ultimately, within that 6 months, I made enough traction to raise a seed round, and the rest was history. We have a three-legged stool of revenue. The first is through advertising, and we do primarily native advertising, so branded content as well as experiences and events. We also sell classes online. We have almost 100 courses that women pay for. And then the last leg is through our merchandising business. So one big challenge over the last 12 months has been the notion of whether or not to put our content natively on distributed platforms, ranging from Snapchat to Pinterest to Facebook and Instagram. A lot of the platforms will automatically give you a little bit more reach per their algorithm if you're putting content natively on them. However, they initially had not built monetization tools. So it was a question as to whether we wanted to sacrifice our control over our content and our distribution. I personally believed that the social networks and all of these platforms would get nowhere if they didn't have great high-quality content, and that they would figure out a way to support those people who are providing that content. And that's been paying off. We now reach 125 million uniques a month. We also have 350% growth in revenue bookings year over year. Some of our newer business segments, like our online classes, have grown over 300% year over year as well. We are producing over 100 pieces of content every day and hundreds of videos every month. I think it's so important for a digital brand to have an offline counterpart, especially for any brand that's trying to reach millennials or Gen Z. So we started an event called Remake 4 years ago, just a year into the business. Fast forward to today, it's a 15,000 person festival. It's been doubling in size year over year, which is proof that it's working and that it's only going to go bigger and better from here. We know millennial women, and we want to create content for them no matter where they are and no matter what they're listening to, reading, watching, or generally consuming.
We are a luxury bedding destination that's online only and direct to consumer. The company was started by my wife and I, and we were in the market for new sheets. We just really hated the shopping experience. It wasn't consistent with what we're used to with shopping with apparel or other items online. We first started with some of our savings, I'd say about $20,000 to get the prototypes going, build a website, do a photo shoot. It really went to the bare minimum product. And then we raised a little bit of money from friends and family, about another $100,000 or so. That got us to our Kickstarter, where the goal of the Kickstarter was to finance our first purchase order. Our goal was $50,000 of sales. We ended up selling $230,000 worth of product in the first 30 days with no marketing dollars spent, really just word of mouth. Social media has been really, really important to building the brand and getting the word out. There's some logical people that are in market for our product, people that move into new apartments. Facebook has this data of an address change. People recently engaged that are doing registries. Pinterest is really, really great for the home decor space. And then there's influencers, that people that really spread the word and advocate for the product. We're very confident that once it gets into someone's hands that they're going to love it. We didn't take any funding until very recently, and we bootstrapped the whole thing, so we had to sell to buy. We would sell all of our inventory, use that money, and roll it over to buy more inventory and more and more. And that created problems of like this up and down, up and down, up and down. It's very hard to get momentum in the wheels turning when that happens. It's planning ahead, getting ahead of your inventory, getting ahead of the demands, just to make sure that you have enough to facilitate the growth. It seems simple, but it's super complicated, the forecasting element that we've gotten much better at. And that's one of the biggest challenges to any consumer products business in year 1 or 2. Our first year of sales was about $250,000. It was mostly the Kickstarter. Year 2 was 10x growth. We broke 20 million in sales last year, so it was another 10x, and now we're on pace to more than double that yet again this year. 5 years down the road, who knows? We might be, the biggest, bedding home goods company in the world. We might get acquired by a bigger company that's looking to get a closer relationship with the customers. Once we feel like the bedding category, like we've really mined everything that's there that we could, then there's opportunity to move on to other categories that supplement it in the home space as well. But we're not ready for that. There's a lot more to do where we are right now.
WTICO is a personalized online shopping service for women who wear sizes 14 and above. Plus-size women in the U.S. make up about 67% of the population in the U.S. and pretty shockingly make up only 17% of apparel spend in the U.S. DIA was founded on the simple mission of really creating equality for her as a customer and therefore really bringing her to the table for the first time within fashion. One of the things that was very clear for our customer was she was as underserved in retail as she was in media. And what that meant was that discovery channels were actually quite challenging. The one group of people who had meaningful sway and were truly, in a way, the gatekeepers of the plus-size community were the bloggers. And bloggers became our earliest advocates. From there, we benefited from word of mouth and the power of a positive experience, and we've kind of grown from there. We very quickly realized that we had this growing, avid, excited customer base and a distribution network that was working. And where we were having the biggest trouble was in finding really great supply. We're based in New York City, and we would literally scour Manhattan to find the best merchandise in our customer sizes to send. Eventually, we were able to work with a group of designers that agreed to partnering with us to expand what they were offering. So we've worked with some of the best design and product development teams in the industry to develop 8 brands that are exclusively at DIA, and those brands in a lot of ways make up the backbone of the service. We recently elevated the call that we were making to brands by taking out a full-page ad in the New York Times on the first day of Fashion Week, really calling on brands to step up. The conversation around inclusivity in fashion is one that is had often, but what we haven't seen yet is an actual move from speaking about inclusivity to actually producing the garments that women can wear. And that's a role that we can play, that we feel a responsibility to play, and that we're very excited to play for our customers. The core of our product is understanding our customer as well as is possible. We serve women who are very early in their style journey and some who are much farther along in terms of understanding what they like and what they don't like. And the goal of the service is to really meet her where she is. And it really becomes an iterative relationship where we're showing her product, she's giving us feedback, we're showing her better product, she's giving us feedback, and over time, we get to know her incredibly well. Our mission at DIA is to be the beloved brand of plus-size women.
We were able to start Warby Parker with $120,000. That enabled us to build a website, get some PR support, and purchase our initial inventory of frames. I remember launch really vividly. It was February 2010. We made it live February 15th. We didn't tell our friends or family because we didn't know the website would work. Immediately the orders started pouring in. We hit our first year sales targets in 3 weeks, sold out of our top 15 styles in 4 weeks, and accumulated a wait list of over 20,000 people. We had to start cutting class because we were full-time students at Wharton at the time, getting our MBAs. It was really crisis management. We had orders coming in. We actually didn't have enough inventory to fulfill those orders. We had to think about a communication strategy, a customer service policy. We would just profusely apologize, but also explain to people what was going on. We just launched. We didn't expect to have this much demand. And when you tell people the details, they can have patience and they can understand and sympathize. Brands build relationships with customers much like human beings build relationships with other human beings, and that's through vulnerability. Our first store was actually my apartment. We laid out the glasses on the dining room table, and that was our first foray into learning about the bricks and mortar world. So we did a pop-up. We bought an old yellow school bus, ripped out the interior, and turned it into a mobile store. Went to over 15 cities across the country. In each city, we would be in roughly 3 locations, so we could tell you which intersection performed best for us. So suddenly we had a roadmap for where to open stores. We now have 46 stores across the country. It's really been an important part of Warby Parker's growth. We founded Warby Parker to create a company that would do good in the world. At the very beginning, we committed to distribute a pair of glasses for every pair that we've sold, and we've now distributed several million pairs of glasses to people around the world. We've always believed in aggressive but sustainable growth. There's this mentality of move fast and break things. We believe in moving fast, but move fast deliberately, and when you break things, let's make sure it's not catastrophic. By staying focused and reducing complexity as much as possible, you can actually grow faster, longer. We're trying to build a company that's going to be around for the next 100 years.
thank you very much for coming here.
Thanks for having me.
I've always been relieved ever since you were appointed, because at least until your appointment, I seem to have the most unpronounceable name. But now we will keep it as Dara and John. This conference is called The Year Ahead, but in your case, you are close to 6 months into the job. And I wondered what you saw in terms of the year ahead at Uber as your biggest challenge. What's the thing that you think about most when it comes to 2018?
We definitely have our share of challenges at Uber. And for me, where I want to get Uber to the year ahead is a year of normalcy. 2017 was, I think, will go down as one of the most difficult years for any company out there. And I have to give credit to the Uber team and the employees there. It is a group of true believers who believe in our mission, who believe in mobility as a service being available to consumers everywhere at a reasonable cost. And what my job in 2018 is to get rid of the distractions and get the company back to business, get the company back to normalcy. There's a lot that we've done in the past 6 months as far as bringing in new investors, driving a new culture and norms where doing the right thing, period, comes first, bringing a new management team, et cetera. There's a lot that we've gotten done, but this is a company that knows how to execute. This is a service. Mobility as a service is something that's universal, that's needed in the world. And I just want to get back to doing business.
It's quite interesting. You said true believers. Yeah. Normally, true believers are the last possible people where you're able to change a culture. Can you explain a bit about that?
Well, I think that they understand that mobility as a service, bringing the cost of transportation down, making transportation services available to anyone and everyone on a local basis, and partnering with cities to be a solution to traffic, to pollution, et cetera. That is a mission that they all believe in. And I think that they, having seen what happened in 2017, to some extent the crisis, the enormous crisis that the company has gone through, is a benefit, because everybody at the company knows now that we need to change, that we need to break with the past as far as the way the company was run. We need to go from growth at any cost to responsible growth and growth in partnership with other players out there. That's clear, but now I've got to kind of get the company down to the normalcy of execution, of building great technology, and I think we're going to get there. It's still some tough sledding early on, but I absolutely think we're going to get there.
When you talk about execution, is profits one of the things you want to get? I think you lost $4 billion last year.
Well, profits,
peanuts by the standards of
profits would help. Yes. So at some point we absolutely have to become profitable, and that's part of the plan.
But do you have a kind of goal for that? Do you think you should be profitable by 2022 or by 2020?
I think that we'll be profitable before 2022. This is the business itself.
Do you want to come back a bit closer, 2020?
Yeah, listen, it's not going to, I don't want to name a specific year, but this is a business that the core business, the ride-sharing business, can be profitable within 3 years. We will continue to make very aggressive investments in building out autonomy, because we think that's a terrific opportunity for building out new technologies such as Uber Elevate, where near-term profitability is not a goal, but long-term growth is. So we will look to balance near-term profitability, but as a company, we will always be a company that makes big, bold bets and takes big risks.
To what extent, though, do you think that drive to become profitable fights against a little bit of this culture change? If you want to make, you talked about making money, but not at all costs. Do those two things?
Well, I don't think that profitability and culture are their issue. It's the company in the past was willing to make trade-offs as it related to how it did business, and I think was guilty of hubris, was guilty of thinking that they knew better than others, and I think that what we know now clearly is that breakneck growth can hide cultural issues, that there are no excuses for not doing the right thing, and that you do have to make trade-offs. And as a management team, we're specifically talking about those trade-offs that you have to make. We have to be a little more patient sometimes because working with governments, regulators, et cetera, sometimes takes longer, but in the end, you build a more lasting business. And so maybe what we went through was necessary, but we're here. We can control our actions from this moment onwards, and I think everyone at Uber from this moment onwards wants to build a great company, not only in terms of growth, but in terms of the kind of company anyone would want to work at.
Can I ask you one thing which you have got a sort of hangover from last year, which is all the regulatory problems, and particularly all the cases against you? I think there are 6 criminal probes or whatever going on.
The lawyers are lining up outside the door.
Which one do you sort of think? Which one do you fear most? I suppose out of these different things.
Listen, I think that all of them are serious issues, and my response is that we're going to be transparent and we're going to take responsibility for our actions in the past. I do think that there are certain circumstances where there was smoke but no fire, and I think as a company we have to defend ourselves and work within kind of the appropriate frameworks. And my goal is just to get beyond this stuff.
Some of these things like pricing policies, surely they go right to the heart of what Uber is, or am I wrong about that?
Yeah, I think they do, but I think that there's a way of being smart but transparent at the same time, and that's where we've got to take the company.
Take me through governments. When you talk to governments privately, do they talk any differently than they do publicly?
Governments?
Yes, governments.
I think that they are honestly a bit relieved with how we are engaging with them, because I think that the engagement is now real. I think they feel like we're out there, we're genuine because we've learned our lessons of the past, and I do think that we can take, for example, the data that we have in terms of traffic and in terms of movement of our drivers and riders, and we can use that data to partner up with cities in order to solve congestion issues, because congestion doesn't help anyone. It wastes enormous amounts of time for consumers. It hurts the environment. And I think that we are aligned with cities, for example, to partner with them in a fundamental way to solve these problems. And I do think that these are conversations that a number of regulators and cities have wanted to have with us for many years, and I think we are really engaging with them at a depth that I think is going to create a real win-win going forward.
Do you think you were too confrontational on this before?
Yeah, I do. I think that the company was pushing growth, and listen, any innovator to some extent, the innovation is about questioning past kind of present practices. It's about breaking things, the Facebook breaking things. We just went a step and a half too far. And what I want to keep, hopefully, is the best of both worlds, which is this spirit of innovation, the spirit of can-do, et cetera, but the responsibility of partnership. We don't know better than you. We're actually going to work with you, of actually having dialogue and respect for our city partners, for regulators, and then continuing to take risks and continuing to do daring things. And I think we can accomplish that.
Imagine this audience here is a collection of mayors or a collection of city officials, and you want to depict, this is the Year Ahead conference, depict what the years ahead in this thing are going to be like. How far is driverless cars going to go? You talked just a few days ago about the idea of there being flying cars in 10 years' time. Can you just give a description of what you think transport is going to look like?
Well, I think that we think there are 3 keys to transport and where the industry is going: autonomous, electric, and shared. And I think all 3 are necessary in order to get to the next level of city planning, et cetera. There are many cities where up to a fifth of the space taken in these cities is taken by parking and storing these cars. And so I do think that you need autonomous, you need electric, and you need shared. And I do think it's going to take some time. True autonomy for every single use case is some ways away. What we bring to bear is our developing autonomy, and we will have autonomous cars on the road, I believe, within the next 18 months, not as a kind of a test case, but as a real case out there. And over a period of time, we're going to bring autonomous transportation and feather it in with the non-autonomous transportation with drivers.
What does feathering in mean?
Feathering in
mean to a
means
layman like
feathering
me?
Crashing. Yeah, feathering in means if you're, for example, in Phoenix, and you make a request to go from A to B, which is what you do with Uber, there will be 95% of cases where we may not have everything mapped perfectly, or the weather may not be the right weather, or there may be an accident on the road, or you may not have 2 or 3 ways of getting from A to B, where you may say, you know what, that's not an autonomous use case. We're going to send a driver to pick that person up. For 5% of cases, everything is going to fall into place. And we will send an autonomous car. The user will be able to pick, do you want, there's an autonomous car, yes or no? And we'll be able to service that A for B. That 5% is going to go to 10 and 15 and 20 as our computers and our algorithms learn more and more about what it takes to drive in a city in a real life situation. And every minute of every day, that driver, that computer is going to get better and know Phoenix better and better and better. And in 5 years, we'll have the perfect driver in Phoenix. We will have to retrain that driver in every single city. We're going to have to build out 3D maps of these cities. And it will take time, but over a period of time, you essentially have a driver who becomes the perfect driver. It'll take 10 to 15 years, but that's the feathering in that I'm talking about.
And will a child born today, will they ever need to learn how to drive?
A child born today? No, I don't think so.
So within sort of 20 years from now, we will...
I don't think so. Listen, I hear some groans.
And also...
I heard a couple of groans. 1.3 million people die from car crashes every year. 1.3 million people die from car crashes every year. That doesn't count an estimated 20 to 50 million people that are injured. Okay, this is actually a public safety issue. If you look at cars, 96% of cars, 96% of time, cars are sitting there not being used. It is a huge amount of pollution that's caused by these cars being in the road, and a huge amount of wasted time. So the safety is there. Electrification is absolutely key, and sharing these platforms is going to allow us to be much safer and also put our assets where they add value.
But it's quite interesting because when you first came in, I remember you sounding somewhat more skeptical about self-driving cars. You've been converted. Is that a?
The choir has spoken, and I'm listening. It's pretty exciting technology out there. But again, it will be a hybrid technology for some period of time.
What about flying cars? That came as a slight surprise.
Yes, that's a great project that we're working on. It's called Uber Elevate. And it is actually about battery technology.
It would have helped a lot of people here.
I know. I wish that I was available. We'll launch it here if we can. But battery technology is allowing us to have multiple rotors on planes, or helicopters, if you want to call them that. These rotors that are much smaller will be much quieter than helicopters are. Much quieter, much safer. If you add sharing into the equation, you can actually get the economics of going from A to B. We think within 5 to 7 years to a place where normal people would think about taking these flying cars. That'll be the beginning, and then it's about scaling. And we're working with a number of partners right now.
Do you think the regulation on flying cars? I've heard some proponents of it argue that it might be easier than it has been on driverless cars, because driverless cars, you have to deal with existing roads, existing everything. Flying cars, essentially, you're going into unconquered space.
I think that mayors that are forward-thinking understand that traffic and pollution are a real issue, and I think flying cars can be a significant solution to traffic issues in cities. And these cars, to start with, they're going to be very specific. They'll be kind of highways in the air. There'll be very specific routes that these flying cars go on. They're not going to be able to take you to your backyard and land in your backyard. There'll be these skyports. So there'll be very specific routes that you go on. And I think if you build a regulatory framework that has that kind of structure around it, I think you get to a better solve.
Can I drag you back somewhat reluctantly back to the real world? But you have Rajiv Misra, who came in with you from SoftBank.
Yes.
He's going to become a director. Last week, he said that Uber should focus on repairing its market share in the US and on key European markets rather than going to new ones. Do you agree with that? Is that the way you look at Uber?
I think one of the fundamental strengths of Uber is the global scope that we have. This is a brand.
Had that motto, everywhere. What's it? Everywhere for everyone.
Yeah, everywhere for everyone.
Do you want to make it some places for some people?
No, we like the everywhere for everyone. It's much sexier than some places for some people. That's
telling me.
Just not interesting. I do think seriously though the global scope that our company brings is important. Our being able to build technology that we can amortize essentially everywhere in the world is hard, but it is part of the fundamental value that we introduce. So I would look at Uber very much as a global brand. That said, we're going to look at all opportunities, but at this point we are leaning forward, and 2018 for us is going to be very much a lean forward year for the company.
But without, I'm not trying to create new boardroom tension at Uber, but that would appear that SoftBank is keener on a more limited idea, whilst you're keener on everywhere for everyone.
Well, listen, SoftBank is a very important shareholder. They're our largest shareholder, and many of our shareholders have opinions over what's the right thing to do. Ultimately, the governance of the company is going to be at the board, and we'll have those discussions at the board, and we'll set our long-term strategy and then execute on it.
One of the things which Uber played, perhaps not very fortunately, a role in was the whole sexual harassment questions and everything to do with that. I suppose one very obvious question: do you think that you have solved that part of the culture? But secondly, do you think that this is a real revolution and it's going to stick?
I think that what was happening at Uber was serious, and I think that while what Uber went through what was difficult, I think the Susan Fowler blog was probably one of the best things that happened for Uber, and it certainly started a movement that's an incredibly important movement of the company. I'd be reticent to say that it's solved.
Yeah.
But it's not an endemic issue within the culture of the company, and I think the company has learned, and I think the company took very harsh and appropriate steps to make sure that that kind of behavior is absolutely clear, that kind of behavior is not accepted in any way, shape, or form of the company, regardless of where you are, regardless of if you're a great performer or not. So I think we're at the right place for Uber as a company, but I think in general, we're not where we need to be in terms of women in senior positions, making sure that we're welcoming of women in technology, and we help women really build their careers within our company. There's a great kind of bottoms-up energy there, but we're not where we need to be, and we have a lot of work ahead of us.
On the issue of, you talked about the top performers, is that looking back, and also I suppose looking forward for many of the people in this room, because there are a lot of people's businesses which have been affected by this. If you had to give lessons to other people who are now looking at this issue perhaps more seriously than they have done before, is the really bad issue, and I suppose I'm thinking in some ways about the media industry in this, is that giving top performers more room for maneuver or whatever than people, or more discretion than people thought? Is that top performers need to be treated the same as everybody else?
I think they absolutely need to be held accountable. One of the really valuable lessons that I got early in my life was actually through Jack Welch, and he said, it's very tempting to allow top performers to misbehave in any way, but for me, he was talking about being aligned with the CEO. Sometimes you allow top performers the tendency is, well, let them get away with some kind of behavior that is not the right behavior because they're so good. And what Jack told me very early on is that it's the top performers who are problematic culturally that are the most dangerous because they have followership within the company because people look up to them. So he's like the dumb person who is bad culturally. He's not the problem because everyone says, well, that's a dumb person, so who cares? It's the smart person who has followership, so it is incredibly important for the top performers to actually be held to account more radically than anyone else because they're the ones who have followership at the company and they have to set the example. So for me personally, that has absolutely guided how I've managed. Expedia was a company that had, excellent cultural values. And one of the first things we did at Uber was to go out and reset our cultural values, and we call them norms because to me, it's not just these values that you put on the wall and kind of people stare at and it's all nice. It's about behavior. And we set out to change behavior at Uber, and I think that the company was thirsting for it, and we are starting on a path, and I believe it's going to be a positive path.
An inevitable question, I hope you won't regard it as a cheap shot, but you talked about smart people who have followers throughout a company. I mean, Travis would seem to be the epitome of that sort of figure. Is that, do you think of him as being in that category of people that Jack Welch was talking about?
I think, listen, Travis was the CEO of the company, and he had incredible followership. And he was held to account, right? I mean, he's no longer the CEO of the company. And he's a board member. He's a big investor, and so he's absolutely going to play a part on the board. But we've also been very clear as a company that we do have to make a break with the past, with how we behaved as a company, and to some extent with the new CEO being a very different kind of a CEO. So in the end, you have to be held accountable, and I think that Travis was held accountable, and at this point, he's a board member and a constructive one at that.
If you look around the world now, where do you see the next competitors to Uber? You've obviously got Lyft breathing down your neck.
Yes.
Where else do they come from?
Well, I think that as you move into a world of autonomy, the position of the car manufacturers, the position of, for example, Google, who's developing Waymo and Waymo autonomous technology, you're going to get a lot of players interested in this space. And a lot of people think about Uber and ride sharing as a significant enterprise, and it is. But the fact is that we account for less than 1% of miles driven on the road now. When autonomy comes in, that number over the next 10 years is going to be closer, I believe, to 15 to 20%. So, because we're not yet a true alternative to car ownership, and I believe that as you bring autonomous and you bring the price of mobility down and make it available to everybody, everywhere, then we become a real alternative to car ownership, and that really opens up the market for us, but it also opens us up to many more competitors.
And is Google at the forefront of those competitors at the moment?
Google is one of many. I think that they've developed very strong autonomous technology, but what we think, which is exceptional, is having autonomous technology and the network under one roof, which allows us to use autonomous in a very practical way, nearer than you think.
There's an inherent attraction to light and being human. And I think on a very deep psychological level, light is this way in which we experience the energy surrounding us in a very personal manner. My name is Matt Dilling. I'm the founder of Light Bright Neon Studio, and we manufacture, produce, and restore neon works of art and design. Origins of the creative content of a lot of the work at Light Bright comes from a variety of sources. Sometimes people come with a napkin sketch, some people come with an Adobe Illustrator file, and we have a whole design team who then we kind of work together to help create layouts of what it might look like. Scale it up and create a paper template using a pen plotter. And that paper template actually becomes our guide for what we're going to bend the neon to. We take from the office into the glass shop. We pick out the right size tubing with the right color for the right size project. From there, we heat up the glass tubing. The torches heat the glass well in excess of 1,000 degrees in order for it to get into its molten state. We heat up and bend the glass tubing to match the template. One of our chandeliers has over 100 different bends in it. So each one of those bends has to be marked for a heated up bend. We also have to allow the glass to cool between the bends so that the next area can be worked on and heated up in its own unique fashion. It turns into spaghetti, and then we have to make sure that that spaghetti lines back up and cools to the template. We use a blow hose to connect our mouth to the tube, create a volume that's closed, and we can control the pressure in there with our mouth. There's just a variety of challenges that come up inherently in working with glass. Glass can crack due to stress, and sometimes you'll just have a batch that all it wants to do when it gets near a torch is crack. After we've bent various components, we have to go in using the crossfire or the hand torch and actually weld all of those pieces together. The last step on that is then to weld on electrodes onto either end. Each one of those steps is very, very specific. I draw inspiration from so many different experiences. It's hard to come up with one thing that's particular, but one of the ways that I really am able to connect with the creative is to float. Floating is a similar experience to meditation, to psychedelics. Going into a blackened room and laying out in a body of water and salt that's heated to your body temperature, and it allows for all sort of external stimulation to fall away. And your internal world really begins to bubble up and manifest. You really get to experience a different relationship to your mind. I think I work with neon because I can't not work with it. It's so challenging and so rewarding. And those things are so intertwined that there's no way of separating it out. I've learned so much and continue to learn so much by working with it. I find so much inspiration in working with it, and I just continue to experience new and different things through the medium. It's that close to me at this point. Once the neon tube is completed, we have to hook it up to our manifold for bombarding. The manifold is opened, a vacuum is drawn. We check the tube for leaks with our Tesla coil. We close the tube back off, and we heat it up using a very large and powerful transformer. As the tube is heated up, it releases anything that's not inert inside the tube, and we evacuate that out. We introduce the gas into it. introduction, we seal the tube off, sealing into that tube whatever gas we introduced into it. I think my favorite part of making a neon light is when I see it lit up for the first time. Different gases, when electrified, emit different wavelengths of light. Neon gas is this very bright orange, fiery red color. Argon gas creates a very intense blue, but that light output that is produced can then be expressed in a different wavelength by coating the inside of the tubes with a phosphor coating that takes that one wavelength of light and emits a different wavelength. We bring it over to the aging table where we hook it up to an age-in transformer and allow it to settle, age the gas in that we've introduced to it. There's always a stray particle of something left inside the tube. But that time that the oxide coating can act to scrub whatever is left inside the tube while things are getting settled into place. Once the tubes are aged in, we move on to our process of assembling two halves of the fixture together in a jig, gluing up the center of the fixture to its spindle. Once the adhesive dried, we would connect the wires from the fixture together into a transformer, and we turn on power and it lights up. Part of what we love about what we do here is that we try and put out into the world the kind of things that we'd like to see. I still am surprised when it lights up. I'm still excited when I get to see it illuminated. There's an ineffable quality to it. To me, is this insight into the inner workings of the universe. It literally is. It's a way of looking at what is surrounding us in the cosmos in a new light.
This is Bloomberg Daybreak Middle East. Our top stories this morning.
Stocks slide as investors weigh the Fed's sobering message. Jay Powell warns of a long road back and says the FOMC isn't even thinking about raising rates.
Meanwhile, the OECD is warning the global economy will slump 6% this year because of coronavirus. And if a second wave hits, output could fall 7.6%.
And inflation in urban parts of Egypt slows to its lowest level since November. Welcome news at a time when authorities are seeing economic growth projections revised down due to the coronavirus pandemic. It is 8 a.m. across the Emirates. This is Daybreak Middle East. I'm Yusuf Gameddin in Dubai.
And I'm Menace Cranley right alongside you. Make sure you sit up and re-listen. We're not even thinking about raising rates. That was the message from Jay Powell last night. We look at the oil and the bond markets. The oil market, first of all, there's a bit of a re-rating going on there because there was a sobriety moment with the Powell message, which was, we don't know exactly where this is going to go. It's going to be a tough and long road. The inventories in the United States of America are the highest since 1982. Jeff Curry, Goldman Sachs, Yusuf, you sent me this note, not nearly as exuberant on the demand side as you'd think looking at the market. By the way, they're calling Brent at $35. I'd show you the bond market because that's where Jay Powell went to bat. We are strongly committed to using all of our tools. We can take for as long as we want. The bond market's gone from 1% to 0.72%. The bond bulls were emboldened on no rate hikes and the dot plot to 2022.
Yeah, a broad risk-off mood that's emerging at the moment. S&P 500 mini futures accelerating the sell-off. But overnight, of course, the U.S. stocks went into different directions. On the S&P 500, we turned green to red with the Fed chair holding his press conference. The NASDAQ, though, notched up another record and closed above 10,000 for the first time with software and tech outperforming. It seems like profit-taking is underway after the Fed didn't deliver any new measures. That's what the folks at Wells Fargo Investment Institute are saying. It's not easy to take risk at this point. Bullion is in focus, up for a third day as well after posting 3 straight weekly losses. The MLive team points out this is a asset class that's a clear winner. The gold bulls got everything they wanted from the Fed, a formidable lineup that is supportive of the rally with a test of $1,800 an ounce coming soon. Well, let's stay with the Fed because it sent the most dovish signal it could after a meeting where it did not make a single policy change. The chairman, Jay Powell, sent a powerful message that the central bank will keep pumping stimulus into the U.S. economy until its traumatized labor market has healed from the harm of the coronavirus pandemic.
The extent of the downturn and the pace of recovery remain extraordinarily uncertain and will depend in large part on our success in containing the virus. Monetary policy is in a good place, and that's well understood in the markets. We are committed to using our full range of tools to support the economy in this challenging time. The measures we discussed included explicit forms of forward guidance and asset purchases. We also reviewed the historical and foreign experience with targeting interest rates along the yield curve. Whether such an approach would usefully complement our main tools remains an open question. We're not even thinking about raising rates. After the crisis has passed, we will put these emergency tools back in the toolbox. The May employment report, of course, was a welcome surprise. Very pleased. We hope we get many more like it. But I think we have to be honest that it's a long road. The rise in joblessness has been especially severe for lower wage workers, for women, and for African Americans and Hispanics. I speak for my colleagues throughout the Federal Reserve System when I say that there is no place at the Federal Reserve for racism, and there should be no place for it in our society.
Meanwhile, Treasury Secretary Steve Mnuchin says the U.S. definitely needs additional fiscal stimulus to rebound from the coronavirus pandemic. And he spoke at the Senate Small Business for Enterprise Committee.
I think we are going to need another bipartisan legislation to put more money into the economy. I think, as we've said, we don't want to rush into that because we want to be both careful at this point in seeing how the money is in the economy. A lot of the money is still not in it. And 2, I think we need to be much more targeted at this point.
Let's bring in our guest host, Vasu Menon, Executive Director of Investment Strategy at OCBC. I love the line and the tonality. Look, we're not even thinking about raising rates. I don't think that's the shock in itself. The question for markets is whether this was a dovish tilt, which they wanted, or was it a sobriety moment in terms of how tough this is going to be. Still unemployment at the end of this year, they reckon at around 10%. Glass half full or empty for you?
I agree. I mean, I think this is a sobering moment. As you said, I mean, the message from the Fed was that this is going to be a long recovery. I mean, this will take 2 years, maybe 3 years, or perhaps even more. Because, you know, if you look at the unemployment forecast that the Fed has for the end of 2022, it's 5.5%. It is even higher than what the unemployment rate was before COVID-19 came into play. So the Fed doesn't see, economic conditions going back to pre-COVID levels until perhaps 3 to 4 years down the road. Yet, the way the markets have rebounded in the last 2-3 months has been the markets have been pricing in optimism about a V-shaped recovery. Markets have been expecting a big rebound in the second half, and by 2021, we are back to pre-COVID levels. So, you know, the message was very sobering. Basically, the message to the market was that, it was disconnected from reality. And so what's happening is the markets are taking that in, and you're seeing some correction take place in equity markets.
Well, so let's get some more reaction, because we had an editorial, of course, from Mohamed El-Arian, and here's what he wrote about the Fed decision and the press conference. Powell sidestepped longer-term concerns about the implication of the highly noticeable disconnect between Main Street and Wall Street. These concerns have come to the fore much more quickly than during the global financial crisis, and understandably so, given the accumulated discomfort about the worsening inequalities in income, wealth, and opportunity. What can the Fed do to address that gap, Vasu?
Well, clearly the Fed is doing all it can as a central bank to try and give the market some form of stability. I mean, the market has gone through a big shock with COVID-19. Inadvertently, the process results in asset prices going up, interest rates coming down, equity prices going up, bond prices going up, and basically increasing the income inequality. But I think this set of Fed measures are quite different from what they did during the global financial crisis. So Main Street has benefited to some extent. The Fed has launched something like 9 lending programs. A lot of what they have done has helped the economy, and you've seen that in employment numbers coming out recently. The employment numbers turned the corner, and as you heard earlier, Jerome Powell hopes that we'll see more such economic data. But we're living in unusual, exceptional times, and for the Fed to do nothing and sit on its hands would clearly be unacceptable. But whatever they are doing is also having an impact on asset prices and creating this income inequality, which is an unintended effect of the Fed policy action.
Vasu, can I ask you, given the extreme dovishness of Jay Powell, the extension of Treasury, mortgage-backed securities, and the dot plot to 2022, why are you neutral on the U.S. and not more bullish? Are you worried that you get a rerun of 2008, late 2008, early 2009, and that there's another wave of risk downside to come?
We are cautious. I mean, our neutral asset allocation stance reflects the fact that we are cautious. We're not negative, we are cautious. And for a number of reasons. Number one, if you look at price to earnings ratio for equity markets after that steep run up, they are no longer compelling. Valuations are quite demanding. They are more than 3 standard deviations above the 7-year historical average. So that's one reason. I think the second reason is also that, we're still not sure whether the second wave of infections will kick in. And if it does, what sort of impact it will have on the global economy, whether we'll see another lockdown. So that's something that worries us as well. And the third reason is that, U.S.-China tensions remain really uncertain at this juncture and could come into play in a bigger way in the run-up to November 3rd elections, which are just months away. So for those reasons, we think that, investors ought to exercise some degree of caution. Yes, the Fed is dovish and interest rates are going to stay low. And, but there are no reasons for investors to be extremely bullish right now.
Vasu, the bond bulls appear to have been emboldened as we saw U.S. 10-year yields go below 0.8%. At the same time, when asked around yield curve control, the governor dodged that question. He said it remained an open discussion at the Fed whether it will be helpful or not. How should investors interpret that kind of commentary? And did he leave the door open for a potential move later?
Well, I think two reasons why I think Powell probably said what he said. Number one, it is not clear whether yield curve control really produces results. I think if you look at what has happened elsewhere in the world with Japan and maybe even to some extent Australia, it's not clear whether yield curve control has produced tremendous results. I think number two is the Fed has done already quite a lot in terms of stimulus policy. And I think, it wants to wait and watch to see whether that stimulus policy kicks in and benefits the economy before it does even more. It's an option that, they put on the table, but it's something they don't want to act on just yet.
All right, Vasu, hold that thought. We still have a lot to get through. That's Vasu Menon. He stays with us. Still much more to come on this show. This is Bloomberg. Talk about the OECD. It is the latest to come out with a grim assessment of the world economy. It's warning that growth will contract 6% this year, and that's the best case scenario. Second infection wave could mean a stunning 7.6% plunge. The Secretary General Angel Gurria gave us his outlook.
Until we have a vaccine or a medicine, we are in danger. So obviously the focus has to be on accelerating the research in order to get the medicine or the vaccine as soon as possible.
In the meantime, Angel Gurria, when you look at the economy, do you worry about deflationary pressures?
No, not the time to worry about inflation. Right now, you throw everything you got at the virus. You hit it, you kill it, you win the war against the virus. You throw everything in terms of finance, in terms of budget resources, in terms of health resources, because the sooner you beat the virus, the less expensive the recovery will be, and also you'll be able to cure the consequences of the virus itself in terms of unemployment and other sequels that it will leave us.
Angel Gurria, good morning from New York. I'm absolutely fascinated what Laurence Boone and others say at OECD about the amount of fiscal stimulus as compared to GDP. The variations are extraordinary. Who's getting fiscal stimulus right?
The question is that in many of these cases, what you call, government stimulus is, to a very great extent, guarantees or liquidity loans, and therefore those will not become what I would call deficit numbers, or they will not become fiscal officially until there is some kind of payback, or in some cases the facilities are built to become deficit to the extent that, for example, the companies can maintain the employment. Those are meant to become, basically taken up by the government. But in many cases, in most of the cases, these large amounts, 20, 25%, 30% of the GDP, are meant to be paid back to the banks or to the development banks, and they're only guaranteed by the government. So the numbers are not comparable in that sense. If you take what I would call the hard expenditure measures, then that changes all over the place, from very little to very large.
Anhel Gurria, you are truly one of the experts in the world on your Mexico, on Latin America, and indeed the challenges of South America. The pandemic statistics from Mexico South are horrific, led by Chile, which is just simply falling apart. What does OECD think needs to be done to assist a greater South America in turning around this crisis?
Well, first of all, they need to be aware, and that means the leadership has to share these views. They have to act accordingly and within the constraints that they have. Within the constraints, this is very important, to then apply measures like confinement, social distancing, etc. The question, again, will not be solved until we have a medicine or we have a vaccine. But the problem in Latin America, Tom, and the problem in Africa, and the problem in Asia, is that it's very difficult to confine these people. They live in very close quarters, very close proximity. They have to go out every day in order to make a living. That makes it more difficult.
Vasu Menon is the Executive Director of Investment Strategy at OCBC, and he's still with us on the line. Vasu, you had a chance to listen to the OECD and at the same time factor in this rising anxiety around the potential of a second wave growing out of control. Is the market taking that sufficiently into consideration at this point?
I don't think the markets are taking that into consideration sufficiently. I mean, it's interesting that, the IMF just a couple of months ago was forecasting a 3% decline in the global economy. And then you have the World Bank upping that number to, more than 5%. And now you've got, OECD saying that it could be 6% or as much as 7.6%, depending on second wave. So I think, these supranational organizations are starting to look at what's happening and realize that the fallout is actually more significant than many of us thought, at least for this year. And I don't think that's sufficiently priced in by the markets. The markets have been hoping for a V-shaped recovery, a quick rebound, and that may not pan out.
When you look at the chief economist at the OECD, Lawrence Boone, who Tom referred to, the comment there was, do not make the same mistake. We must support this economy through this transition. And to a certain extent, the PPP programs of the US, the UK, and Europe have been the lifeline. How important is it that they are almost Fed-esque in terms of their size, their scale, and perhaps their extension ability?
Well, clearly, I think the message was that, governments and central banks cannot take their eyes off this problem. They cannot go easy on the problem. They've got to pull all the ammunition out, and they have got to continue doing all they can to support the economies. And because this is going to be a long-haul battle, it's not going to go away anytime soon, and we need to fight with all the vigor that we have. And I think that's what many governments are trying to do. But the problem here is, while central banks seem to have unlimited, options, I'm not sure whether it's unlimited, but at least they have more options than governments. At some stage, governments will also feel the strain because the fiscal policy they've announced can only last so long. it will not be infinite. And, like for example, in the US, probably there's enough to keep the economy going till July, August, and then they'll have to come up with another set of measures. But how long can they do this? So the big question is, how long would COVID-19 drag out, and whether it will start putting a big strain on the ability of governments to act vigorously, which is what's needed.
Okay, sir. Thank you very much, Vasu Menon, Executive Director of Investment Strategy at OCBC Bank Wealth Management in Singapore. Quick line just on one of the airline stories we've been tracking here is that Malaysia Airlines could receive, expected to receive assistance, $1.2 billion from Khazanah. We'll track that story as it breaks across the Bloomberg. Much more to come. Daybreak Middle East continues this Thursday morning. Right here. This is Bloomberg.
Fuel, corn, livestock, precious metals. Commodities are everywhere, and so is Bloomberg. Bloomberg Commodity Indices deliver leading benchmarks for true diversification. Adding commodity exposure can help hedge against inflation and diversify your stock and bond portfolios. With full data transparency and broad distribution, the Bloomberg suite of commodity indices is your measure for the commodity markets. With Bloomberg, you've got the markets covered.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Qatar's finance ministry has told government-funded entities to cut expenditure by 30% through pay cuts or layoffs of foreign workers. Simone Foxman joins us with the news flow from Doha. Simone, good to see you. So what's the impact for the economy here, the sort of the numbers, that kind of cut, how would that play out to the real economy?
Good morning, Manus. Yeah, so just to be clear, the finance ministry is giving these government-funded entities, these ministries, a choice here. They either cut workers whole scale, or they just institute pay cuts, but they have to get to that 30% number in 2 months. Also cutting some benefits as part of that. The primary impact we're watching for is on Qatar Airways and Qatar Petroleum. These are major local employers, and the impact is going to be on middle-class, white-collar consumers that really drive the economy. Today, we're going to be watching those food and beverage consumer names, Almira, Baledna. Both of those are some of the best performers year to date in Qatar, up close to 20%. Also, Widem is a meat producer, that's outpaced the index. But, this could have a real impact if we see outflows of these foreign workers. Again, Qatar not the only country in the region to try and cut its foreign, to try and put the burden of spending cuts on this foreign population. Kuwait yesterday announcing plans to stop hiring foreign workers for its oil sector. That country as well has big plans on that regard.
Simone, what about Kuwaiti banks? I mean, they popped up on my radar. They slumped in yesterday's trading. What's really weighing on them specifically?
Well, yesterday, the Kuwaiti Banking Association essentially announced that there were going to be no dividends from Kuwaiti banks this year, and that having an immediate impact on the banking sector. The association saying it wants the banking sector to continue operating normally, wants to ensure liquidity until the extraordinary circumstances caused by COVID-19 end. And of course, that had a big impact on all banks, but most particularly Gulf Bank, Bergen Bank, and Kuwait International Bank.
Let's pivot to Oman, Simone, because we've seen many analysts of the Gulf's most vulnerable economy, but we've seen a recovery in the markets. So take us through the thinking there.
We have talked a lot, Manis and Yusuf, about the dramatic surge in bond prices that we saw in Oman in May. And this has only gotten more intense as we've continued into June. So actually, we're now at 95 cents on the dollar for that 2029 paper. This is very, very close to where we were trading last August. Arkham Capital is taking an optimistic view here. Abdul Qadir Hussein, who's the head of fixed income there, saying that the country could actually have the opportunity to tap the debt markets, particularly in the sukuk space, because there's demand from Sharia-compliant investors. So that would sort of change the picture and the negative outlook that we've been talking about for Oman. Notably, we've also seen some pressure come off the currency, those 12 months forward, really coming down dramatically, while they remain higher than any other Gulf currency. So the risk obviously is still there. But the question for investors is this a risk they're willing to take?
Indeed, Simone, thank you very much. Three great stories. Simone Foxman, our correspondent in Doha. And we're tracking results here on Bloomberg. We're going to hear exclusively from the Deputy CFO of Mubadala. That's the Abu Dhabi sovereign investor, just after 11 a.m. Dubai time.
Yeah, we're also keeping an eye out on the sell-off that appears to be accelerating, especially in risk assets. The South African rand down about 1.1% in the EMFX space. The Mexican peso down 1.6%. And then the Aussie dollar down 1% as concerns rise about the messaging from the Fed and the rising number of cases in the U.S. as well from the coronavirus. We'll get into some of these other key themes from various parts of the agenda. This is Bloomberg.
True diversification. That's what adding commodities exposure to your stock and bond portfolio can help provide. The Bloomberg Commodity Index is the standard for commodity market exposure. 23 traded commodities are represented: agriculture, livestock, metals, and energy. The Bloomberg Commodity Index is the benchmark most widely used by investment professionals globally. Track your commodity investments with a proven financial information partner. The Bloomberg Commodity Index. True diversification.
prepared to do what it takes and to stay the course with a very, very expansionary, accommodative policy stance.
If miraculously there's a much better outcome in the economy, they will reconsider. So there's no guarantee that the policy rate will be at zero for 2.5 years.
Pretty clear they don't see any need to pull back for any of those financial stability concerns. And so that's just reinforcing the zero rate policy.
Basically, the signal was we're not going to let companies fail, so you may as well jump in and get involved.
Even though he doesn't want to undermine the economy to deal with what might be a bubbling equity market, there is at some point in time he has to think about what does that mean for broader financial stability. They're not there yet, but I wouldn't be surprised to see them get there later this year.
The Fed shouldn't start pulling punches just because a lot of benefits are going to shareholders, because what it really cares about is maximum employment.
The Fed will play its part, but it's certainly not the only game in town, and I'm not sure it's the premier game in town at this point.
Some of our guests there reacting to the Fed's decision and commentary from Jay Powell. Let's get back to this part of the world and talk about inflation, because in urban parts of Egypt that decelerated to the lowest level since November, with the rate declining to 4.7% in May. That's well below the central bank's target of 9% by the end of the fourth quarter. And it's welcome news at a time when authorities are seeing economic growth projections revised down due to the coronavirus pandemic. Let's bring in Arti Chandrasekaran. She is the portfolio manager, vice president at Shua Asset Management. Arti, welcome back to the program. So lower inflation should give the central bank a little bit more room to cut, at least in theory. That also should translate into higher asset prices.
Inflation definitely came lower than street expectation, Yusuf, and this is despite weakness in EGP. But we think this is largely one-off. We don't think inflation is going to remain at these levels going forward. We do expect it to pick up in June. We expect MPC to actually hold on. Yes, there is a lot of upside. There's a lot of room for CPE, but the Monetary Policy Committee will probably hold rates in the coming meeting.
Arti, good to have you with us this morning. You paint a particularly bleak picture economically for Egypt. Tourism, remittances and canal revenues. So the backdrop to the economy is far from assured as we begin to deal with these new headlines about potential wave 2 of COVID this morning. Give us your view on the economy.
So tourism revenues will be close to zero probably in the second quarter and third quarter. We do expect probably a loss of $6 to $8 billion. If you were to assume 20 to 30% hit on remittances, Swiss Canal revenues will have another loss of $5 to $7 billion. Yes, this is partially mitigated by the savings from lower oil prices. But overall, it's definitely not looking good. Egypt has to mobilize close to about $2 to $3 billion more. They have $2.5 billion from IMF. They have already done $5 billion from Euro bond dollar issuance. But they still probably need $2 to $3 billion for the rest of the year.
So is there anything left in the playbook in terms of clients looking at exposure into Egypt for their portfolios in the equity or fixed income space?
The growth engine for Egypt is definitely strong, as in it's one and only positive GDP growth country in the MENA region for this year, but the risk is also very high. Look at where CDS is. We're talking at 520, 530 bips, up from 250 in the beginning of the year. So definitely the risk-reward match is not really good, and it's not sitting well. The headwinds in currency is also there. We do expect pressure on pound to further depreciate, probably towards EGP 17 by the end of the year. And because of this, we are a bit skeptical to enter the market. The only place that we want to be there is in equities and Comi. Comi is a blue chip name we like, and we have given their low exposure to retail and SME sector.
Let's pivot to the Kuwaiti story this morning. A number of different facets at play. The Kuwaiti Prime Minister last week saying the country's expatriate population should be more than halved to 30%. So that message is about go home. when it comes to how that plays down to the real economy, I'm interested to see how it plays out for the banks. We've got the dividend story, but you say we should never have been playing Kuwaiti banks on a dividend play anyway, relatively speaking. Would this message from the Prime Minister bear down on the banks?
Well, Kuwaiti banks on the dividend story, definitely, we have never played Kuwaiti banks for dividend story, but it's definitely a negative news. I mean, dividend cut is prudent, no doubt about it, but I hope it doesn't create a panic in the market because all the Kuwaiti banks, with an exception of Burgan Bank, has a very robust CET1 ratio, which is your capital ratio. So essentially what this move could possibly do to the investors is they could possibly extrapolate worse than expected profitability numbers for the Kuwaiti banks for this year, which might not be the case. We do expect profitability of the Kuwaiti banks to decline substantially by 20 to 30% for MBK, KFH, Burgan and Gulf Bank, but it is not going to dent their capital. It is not a capital event. So we do expect more pressure for the Kuwaiti banking sector stocks, especially the high-yielding dividend plays, the likes of Burgan. The retail investors will churn more into the telco names, but for a company like NBK, we like the story, and it's a good entry point if we see more pressure.
I think the Central Bank of the United Arab Emirates has put out a statement on some of its expectations for the remainder of the year, and some of the key points they made was that the fiscal growth will average about 28%, credit expansion is going to slow, followed by a recovery. And then property prices are seen declining with a sharper drop in Q2 and in Q3, followed by a gradual recovery. Does that align with what you've penciled in for the remainder of 2020 into 2021?
To a large extent, Yusuf, it's right. I mean, DFM is down like 23% and 18%. There is no immediate catalyst at the moment. Investors are definitely and very keenly watching all these macroeconomic data coming out, some concrete numbers in the sector data, the banking space, the money supply, any of these numbers, especially like what you said now, the UAE Central Bank coming out with putting those kind of numbers. I think these are the numbers that basically tells us how to gauge where the market is. It's definitely not it's not an outlier. We did expect these kind of numbers, so it's not going to be a great surprise to the market. That being said, given that there is no catalyst, the market will remain sideways for a period of time. Unless we see improvement in the PMI numbers, in the sector numbers, in the retail and the consumption numbers, which is unlikely to happen up until the Q3 to Q4.
Aarti, thank you so much. Aarti Chandrasekhan, Portfolio Manager and Vice President at Shua Asset Management, our guest host this morning on Middle East Markets. Up next, we speak to the UAE's Minister for Infrastructure Development. This is Bloomberg.
Continue concentrating on. One of them is the housing scheme that we do in Ras Al Khaimah. These are over 2,000 villas for national. 800 of them is actually rather 1,000 of them are under construction. Only last week we had to we took over partial taking over of some villas. That is one of the bulky projects that we really look into very highly. The second one is a highway that is actually connecting the north and the west, and that project is almost at the end of its duration. So probably in 6 months' time we would have a new project being put in service for our network.
Minister, can I ask you, just before we spoke to you, we spoke about the message from the Kuwaiti Prime Minister that expatriates need to be downsized in the country. You run major infrastructure projects. You need talent from all around the world. What is your biggest risk? Is it holding on to expatriates with the skills that you need, or is it encouraging people to stay here and weather the storm? Your message to the expatriate community that work on infrastructure and projects is integral. What is it this morning, Minister?
We did actually both. We've given the opportunity
Preston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience.
Consistency is more important than volatility.
There's very likely to be a decoupling between the United States and China.
Look, I think the reality is this is highly unusual.
This is a really good example of the intersection of business and government.
Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
The governor of Tokyo says she's hoping to lift the coronavirus alert for the city this week and move to stage 3 of the reopening, which would ease some of the business restrictions. Yuriko Koike also told us she's not even considering the possibility that next year's rescheduled Olympics could be canceled.
Small and medium-sized enterprises, which account for 99% of companies in Tokyo, is essential to the recovery of Tokyo's industrial base. They have been strongly affected by the coronavirus, however. So we have many various measures to support those SMEs. Also, we are supporting the restaurants to start or to begin delivery services. And yes.
Dr. Koike, you've also talked about building Tokyo's Wall Street, right, for the longest time. So we are really curious what's happening on that front, whether you're trying to attract, say, hedge funds from other financial firms or financial hubs like Hong Kong.
Well, in Asia, Tokyo is one of the biggest headquarters, financial headquarters. We are ready to welcome all people and all those professional people from all over the world. And we hope that we can resume those financial exchanges and financial activities more actively.
Are you looking at the possibility that the Tokyo Olympics next year could get canceled?
No, of course not. Well, actually, just yesterday, there was a teleconference over how to carry out 2020 Olympic next year. And it was decided that the games should be much simpler and less expensive, and having people's acceptance and so forth. So we are preparing for that, and of course the Tokyo 2020 Games can become a symbol of how the world has united to overcome hardship and how humanity has strengthened its bonds and so on. And so we will continue to do our best in the fight against this infectious disease to realize the games with such hopes. And in order to hold a safe and secure tournament with the cooperation of Tokyo residents and people, it is necessary to optimize and rationalize the service while reducing costs.
The Tokyo Olympics are planned for next year, so I will need to ask whether you will be hosting them as the governor of Tokyo. Of course, we do have the gubernatorial elections coming up in July.
Well, having or hosting the Olympic Games after so many years in Tokyo, people are looking forward to enjoy it, as well as athletes in the world. So, as I told you, that we have to fight against the coronavirus first of all, and to make it a symbol, or to put the 2020 Olympic in Tokyo and Olympic game as a sort of goal.
You've been praised on your response and handling of the coronavirus pandemic in Tokyo. If you get another 4 years, what do you hope to achieve?
Well, I'm so busy to fight with the coronavirus for the time being, but I'm sure that Tokyo is a most sustainable city in the world, and Tokyo has a lot of possibility for future. So I'm to fight against the coronavirus today and to prepare for the second wave is the most important key to keep Tokyo sustainable and keep on growing up.
And just a reminder for you, we've got some cracking conversations coming up. An exclusive one with the Deputy CFO of Mubadala, that is the Abu Dhabi sovereign investor, just after 11 a.m. Dubai time. Stay tuned for that. Yusuf, these markets are moving.
Yeah, so there's a firm risk-off mood that is taking hold as we speak. So that is becoming very clear in the EMFX space, including the South African rand and the Mexican peso. The Mexican peso down about 1.6%. There is a combination of factors playing in here. A, there's a lack of fresh incentive from the FOMC and the Jay Powell presser we had overnight to maintain the rally. And then you had the other headline from the coronavirus cases, the numbers surpassing 2 million, according to JHU data.
Look, if you go to Top FX, they've written this story up. Commodity currencies decline on economic woes. And this focuses in on the language and the nuances from Jay Powell, which talks about considerable risks. Whether you believe that rates are going to stay on the grind until 2022, and there is some skepticism around that, mind you. In the great financial crisis, it took us 6-7 years to get off that zero bind. Have a quick check on the oil market as well. You're under pressure there. Inventories are literally ramping higher this morning. We're down by 2.9% on the Brent contract, Yusuf, at the moment. So you are just seeing American inventories, the highest since 1982. And then you sent me the Goldman's note this morning. They are not nearly as exuberant. I love a bit of exuberance.
Who doesn't?
I know. Irrational exuberance, one might say.
We might see that in the gold trade, by the way.
We have that every day. Do you have a bit of irrational exuberance in gold?
Not necessarily, but the moves have been exuberant by any stretch of the imagination. The gold bulls got everything they wanted from the Fed. There could be a test of $1,800 announced, according to the MLive team. The bond bulls appear to be emboldened as well after 10-year Treasury yields fell below 0.8%. And again, whether we get yield curve control remains an open question.
Yeah, and it seemed very tepid, you know, that it was there. It's interesting. John Arthur's column talks about the debate from a Bloomberg question on bubbles in markets. Powell swerved it, but it doesn't seem that this Fed is too bothered about bubbles. At the moment, this is Bloomberg.
Surprising, it surprised to me. It sounds like a horse riding, you know, and it's okay.
excitement. Like the kids especially love the robots. It's a very new thing, I think, and it came at a right time where social distancing is a safety measure right now. So they're robots, not people, you know. So it's like interacting with robots can help a lot at this time. I think it teaches people that technology can really have an impact on everyday life. So for example, these robots are in like a shopping center where I feel like everyone comes here. So it's incorporated into people's lifestyles and how it can make people's lives convenient and more productive, more effective.
Founded more than a century ago from humble origins, L'Oréal is now the world's biggest beauty products company. Specializing in cosmetics, hair, and skincare, it boasts an international portfolio of 34 brands and has a market cap of more than 105 billion euros. At the helm, a man who's dedicated his entire career to the company. Over 4 decades, he's covered all facets of the business. Today, on Leaders with Lacroix, we meet Jean-Paul Agon, Chairman and CEO of L'Oréal.
Monsieur Agon, thank you so much for speaking to Bloomberg.
Pleasure.
What happened to L'Oréal in the last 10 years? Innovation, your share price has grown. Was it exciting times?
Yeah, very exciting. You know, I started as a CEO 10 years ago. It has been 10 years very exciting. Of course, we had a crisis in 2008 and 9. But globally, the business has been very good. We have been growing, acquiring brands, launching new products, gaining market shares everywhere in Europe, USA, China. No, very exciting, fantastic.
What's been the most fun?
In fact, the most fun has been the past 3-4 years, because thanks to the digital revolution, everything has been transformed. And as I tell my teams, I think that this industry, our business, our company has more changed in the past 3 years than in the previous 30 years. So it's an amazing time, extremely exciting.
So is this the way you sell, or is it the way that people actually look at makeup?
No, in fact, it's the relationship between brands and consumers. In fact, the digital has completely transformed the relationship between the two. Before that, you know, the brands were talking to consumers, pushing towards them information or whatever. But now the consumer has taken the power. The consumer decides how he wants to see the brands, what he wants to know, what he wants to discover them. Digital, in fact, creates a relationship that has nothing to do with what existed before.
But isn't it much more difficult, therefore, to control your brand?
Yeah, but at the same time, it's more exciting, and it enriches the relationship. So now, thanks to digital, we can communicate the content of our brands. We can do tutorials to explain how the products work, how they should be used. We can have a personalized relationship with consumers. So it's a completely new dimension. It's much more rich and exciting.
So what sells at the moment? Is it the luxury brands or is it the more consumer brands?
This year, luxury. This year, luxury has been booming everywhere, mostly with Chinese consumers. You know, Chinese consumers are fantastic. They love beauty, they love luxury, they love our brands, and our business with Chinese consumers everywhere has been booming.
L'Oréal's global reach stretches across 140 countries. About 2/3 of its sales are generated outside of Europe. Much attention has shifted to China,
欢迎来到上海。
where strong demand for high-end lipstick and perfume is driving growth.
谁说爽肤水都一样？不。
In 2015, China surpassed France to become the group's second biggest market behind the United States. Some of the success is being attributed to selfies, with camera-conscious millennials buying more makeup than ever before to look good instantly.
Have you had to adapt to the Chinese market?
Yeah, in fact, the products we sell, not for all brands, because the luxury brands, for example, are the same all over the world, of course, but for our mass brands like L'Oreal, like Maybelline, the product that we sell in China are formulated in China by Chinese, in our Chinese labs.
Because of regulation?
Not only, but also because we want to create the products that are absolutely right for them, especially skincare, because their needs, their skin, their aspirations are specific, are different. So we formulate in our Chinese labs, we manufacture in our Chinese factories, and L'Oreal now is L'Oreal Paris is the #1 beauty brand in China.
I've also been reading that one of the most popular products is actually a homemade, I guess, range of cosmetics wear, which is favored by the wife of the president, President Xi.
Yeah, it's a great brand, but still the #1 beauty brand in China, the preferred beauty brand by Chinese women is L'Oreal. L'Oreal Paris, they call it with the Chinese name, it's Pali Olaya, which is beautiful, by the way. And it's great because, you know, the L'Oreal Paris is the number 1 beauty brand for Chinese, for Americans, for Europeans, for Russians, everywhere. So it's a great
not bad.
Satisfaction. Yeah,
so,
not bad.
So tell me about your success in China. Is it through distribution? Is it through ads? Is it through celebrities? What's the attraction for your brand by the Chinese?
You know, the reason of success of our brands everywhere is always the same. It's #1 quality. You know, we for all our brands, our absolute priority is the quality and the safety of our products, and it's something that the Chinese respect a lot. It's very important for them. #1, innovation. Innovation is extremely important. It's an industry where you have to innovate a lot. You know, more than 15% of our products every year are new in order to keep innovation flowing very strongly. Of course, it's the imagery of the brands. You know, brands like Yves Saint Laurent, Lancôme, Giorgio Armani, L'Oréal Paris. It's a beautiful imagery, and Chinese consumers are very sensitive to that. They like it.
Is the U.S. tough? A tough market?
The US this year is a bit tougher, a bit softer, let's say. It's not really tough, but it's a bit softer. Certainly softer than China. But it depends. You know, last year the US was very good. So every year, it's funny because every year the market, roughly, globally, is more or less growing at 4%. But it's never made exactly the same way.
But so how difficult is it to predict what will work and what won't? Why am I using this mascara, not the other mascara? Why am I using this foundation, not the other?
Again, it's very, you know, when you know well your consumers, when you understand their desires, when you can guess their dreams or expectations, then you can really create what they will love.
What will the next 4 years bring? Is there a specific market that you think will grow more? Is it, you know, for example, men's cosmetics or something else?
You know, digital, I think, will be the most important element of transformation of the market. So definitely we're going to see the e-commerce growing. For example, e-commerce in China is already more than 30% of our sales for our mass market brands. So it's huge. So we're going to see digital growing. We're going to see probably new channels also emerging, like specialty stores, our own stores. We are very big in also growing segment is the travel retail, you know, the stores in the airports, because more and more people are traveling. So I think there will be new channels. In terms of regions, of course, the emerging markets are still growing, and our categories are growing too. Makeup has been booming for 2 or 3 years. I think it's going to keep booming. Skincare is growing too. So honestly, I'm very optimistic about the short-term, middle-term, and long-term perspective of this industry.
What do you think you spend most of your innovation on? Is it, for example, making a lipstick that lasts longer? Is it kind of changing it a little bit? I know you have so many products, it's unfair.
And a few secrets.
And a few secrets, but you can tell us, we're amongst friends. We were talking about what the next 4 years will bring, and it's a lot more e-commerce. How do I choose my makeup online? It must be difficult to choose the right coloring.
No, because now you have some technologies that are amazing. You know, you can test online on your cell phone, for example, simulate the application of the makeup on your face, and then you see yourself with the lips covered with the lipstick you want, the shade you need, the powder, the mascaras. You know, I did a demonstration of that to my board, you know, completely made up, and it was they were ecstatic.
Was that for the launch of the app?
Yeah.
And so they said yes.
Yeah, I wanted
fantastic.
I wanted to share with the board the fantastic progress of technology. It's amazing.
Oh, I could look like pure reds. Oh, wow.
The lipstick is moving with my mouth, and I know that I don't have any on.
It's like Amy Winehouse flips. It's brilliant. I can't stop looking at myself.
So this is amazing because you also have to then change, I guess, your research and development. How much of the overall cost goes on actual digital products?
Well, it's difficult to say because it's everywhere, in every brand, in every division. But what I can say is that now, more in terms of media, 1/3 of all the media that we do now goes on digital. In terms of e-commerce, 7% roughly of the sales that we do go on e-commerce through digital, and it's growing 30% a year. So there is a shift happening, which is extremely fast, extremely strong.
The company that invented the platinum blonde is constantly innovating and developing new products as consumer demand changes. At its lab in Paris, scientists have studied more than 7,000 types of hair and are now experimenting with 3D printing. The hope is to one day help people suffering from hair loss. L'Oréal's already created fake skin to avoid testing products on animals and invented a UV patch to monitor exposure to the sun's rays.
We have the #1 R&D facilities in the world. We are spending roughly 3.5% of our sales in research and innovation. And obviously the most important topics are hair, skin, and hair. This is where we invent and create new formulations for hair care, hair color, all type of hair products.
You also have a patch?
Yeah.
Is that right?
UV patch.
A UV patch, so you put it on to see when you're overexposed to the sun.
Yeah, it's a creation that was made 2 years ago that we presented at the Consumer Electronics Show in Vegas last year. And it's a UV patch, you put it on your skin, and it's linked to your cell phone. And it calls you or it rings when your exposure to UV has been too high. It's a fantastic tool.
So do you think though there's going to be more of a trend, which I guess is between the cosmetics and the healthcare?
Yeah, absolutely. Yeah, and also with internet, you know, this triangle between beauty, health of the skin or hair, and Internet of Things is creating new opportunities, and that are going to be very useful for consumers.
What do you like about your job the most?
I love understanding people. You know, I think that one of my strengths is the capacity of empathy with consumers. So I have this capacity to understand, to feel, to guess what consumer want, what is their desires, sometimes their dreams, and then to be able to formulate products that will respond to these dreams.
Do you believe you have to take risks to innovate, or actually, do you?
Oh yeah, of course. Yeah, because every innovation by definition is a bet. Every launch is a bet. It's like a new film or a new movie or new music. You never know in advance. But that's the magic of it.
So what do you think you spend most of your innovation on? Is it, for example, making a lipstick that lasts longer? Is it kind of changing it a little bit? I know you have so many products, it's unfair.
And a few secrets.
And a few secrets, but you can tell us, we're amongst friends.
No, we are working on all categories. You know, we have 3,500 researchers from many departments, and they are all working on all type of cosmetics, skincare, hair care, hair color, all sun care, and because fundamentally, as I told you, we really believe first and foremost in terms of efficacy and quality. So the mission of the company, which is beauty for all, is also not only beauty for all, but the best of beauty, the best quality, the best performance, the best efficacy, the best safety, and that keeps us busy.
3,500 researchers.
Yeah.
How long does it take from, I don't know, who has a concept of, for example, a new product, until that product being on the shelf for someone to buy?
Depends. Can be very quick when the formulation is easy. Can take maybe 6 months, or when for example, the marketing guy has a vision, has a dream, but the labs don't know exactly how to formulate it. Can take 2 years, 3 years. Really depends.
Mega volume on top, mega volume on bottom. Share it with your friends and buy makeup instantly.
One of the criticisms often leveled at the beauty industry is that it's only for young people. Is there any truth in that?
No, not at all, of course not. First, that would be stupid, because we are addressing all needs for all people, and look at our ambassadors. For example, Jane Fonda, Helen Mirren, they are not millennials. So no, honestly not.
Do you sell more to millennials or to people of a more certain age?
No, we sell to everyone. It depends the brand. The brands, of course, some of our brands like NYX, Urban Decay are more targeting young people. Biotherm or L'Oréal Paris may target other categories of consumers. But no, we cover the whole scope of consumers, and in terms of age, in terms of diversity, in terms of countries, Chinese, Brazilian, Europeans, everyone. It's a beauty for all.
So how do you sell to the emerging markets?
We adapt the products that we sell, of course. We make sure that they are affordable and that people can buy them. Brazil, for example, is very interesting, because Brazil is the country in the world where the hair is completely unique, because it's such a mixed country in terms of ethnic origins, that the blend is completely amazing, and that you have to create for Brazilian hair care products that are completely specific. And by the way, it's very interesting, because sometimes they are the most demanding consumers, and so when you can create in Brazil a product that is good for them, then you can make it for the world, because it's going to be great for everyone.
Do you think Generation X cares more about this than millennials?
There is an urgency, clearly. We are not talking anymore about a potential threat. I mean, there is a clear and present.
For Jean-Paul Agon, life at L'Oréal began in sales 39 years ago. He quickly understood the power of advertising.
Read my lips. I'm worth it.
The company obviously thinks it is worth it, spending more than $8 billion a year selling and marketing its brands. A third of that on digital media.
When I was 20 years old, I was in a business school, and at the end, I knew I wanted to do marketing. And for me, beauty is the supreme art of marketing, because it's a marketing that is not only about understanding, analytics, but it's also about emotion, guessing, creation. So I think it's a fantastic marketing. There is no better marketing than beauty marketing.
And from that 20-year-old Jean-Paul Agon, what have you learned about yourself?
My God, a lot, a lot, because it was a long time ago. No, it took me, many years to get where I am today. But I was always passionate. I think the incredible part of L'Oréal also is that every day is a new adventure. Every day is a passion. It's a company made of really passionate people, and every new mission is an adventure.
So what are you like as a leader? Micromanaging or overview?
I like overview, and from time to time I'm tempted to do micromanagement. But when I do that, my team say, Jean-Paul, you should not, you should not bother with that. Let us do it.
Do you review though the end product every time, or how does it work?
As much as I have meetings of course, with all the brands. Not all the times, of course. I travel in many countries around the world, and I'm just trying to help to make sure that we are taking the right directions, pushing in the right innovations, understanding enough the consumers we are dealing with, trying to pilot the ship.
L'Oréal's Sharing Beauty with All program, launched in 2013, was designed to transform the business. Jean-Paul Agon was determined to make the company ethically and environmentally sustainable. It's been recognized for its efforts, awarded a AAA for water management, climate, and action against deforestation.
So when did you start thinking about sustainability?
Pretty a long time ago, especially when I came back from the USA and I took over as a CEO. I really understood at that time that for a company like L'Oréal, especially because we are the leader of the beauty industry, we had to make sure that also we would do the best and the most to make the planet a beautiful place.
What started it? Is it because you say we sell so much so we have to make sure that it doesn't go to waste? Or is it also because the consumers want something that's more sustainable? Or is it because the employees you hire want something more sustainable?
Very good points. I think it's all of that. First, because we have a moral duty. Secondly, because it's what our employees are asking for. Third, because it's what consumers want. Fourth, because it's what the society expects from a big company like us. So that's why we really went into this direction.
Does it make a difference for the consumer? I remember you telling me a couple of years ago that if a consumer has a choice of a sustainable shampoo or a shampoo that makes our hair better, we'll always go for the shampoo that makes our hair better.
Yeah, but now what we want to do is to make a shampoo that makes the hair better and sustainable. Because now in fact, you're right. Our vision is that we have to find a way that it's not opposite, that it goes in the same direction. And it's the same for economic performance. For example, the sustainability performance should not be opposite to the economic performance. And in fact, we are able to prove that. For example, in the past 10 years, we reduced our carbon emission by 67%, when at the same time we were able to increase our production by 30%.
How do you do that?
We work a lot. We transform all our factories. We have now 10 sites that are carbon neutral. We completely transform the way also we engineer with water. We have what we call dry factories, that they don't use water at all. They completely recycle the totality of the water that they use. We eliminate waste. So it's a very comprehensive effort on all fronts to transform completely the way we produce, we distribute, etc.
And shareholders are behind you every step of the way for sustainability?
Yeah, absolutely. They are very. I think that our shareholders are very proud of what we do. I cannot say that they are pushing us hard to do it, but they are happy and proud.
Do you think Generation X cares more about this than millennials? The younger you are, the more you think about this?
I think that everybody now cares. I think that it's very well understood that there is an urgency. Clearly, we are not talking anymore about a potential threat. I mean, there is a clear and present threat to the planet, and if we are not all doing the maximum in the very short term, it's going to be very difficult. So I think that every generation now understands that.
If I speak to you in 5 years, what will be your story?
In 5 years, probably I will tell you that the most important mission has been the transmission. Because, of course, I will not be CEO forever. And I will be, by the way, very glad to pass the baton one day to my successor.
So if you think a lot about succession, what kind of successor would you like, and what would you like your legacy to be?
I will be proud to have been able to adapt L'Oréal to the new world. I think that we are living in a very special period. The world tomorrow will be very different from the world we knew a few years ago. And my absolute priority right now is to adapt, transform the company in order to make it as successful as a leader, as performant in the new world as it was in the world before. And I'm very confident about it, because that's what we are doing. We are doing a cultural revolution, a digital revolution, a sustainability revolution, and so the L'Oréal will be a fantastic company. And then someone else will take the baton and will drive the adventure further.
Jean-Paul Agon, thank you so much.
Thank you very much.